हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। आज है 21 मार्च 2025। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का ये सेशन। फिलहाल के लिए देखोगे क्रूड ऑयल को और नेचुरल गैस को। क्रूड ऑयल तो फ्लैट ही चल रहा है। नेचुरल गैस एक गैप डाउन ओपन हुआ था, नीचे सपोर्ट था। मॉर्निंग फर्स्ट कैंडल एग्जैक्टली सपोर्ट एरिया पर ही ओपन हुई थी, वहीं से सपोर्ट लिया था, फिर से सपोर्ट ले रहा है, तो ये सपोर्ट अभी भी इंटैक्ट ही है। टारगेट ऊपर ये पहला रहेगा, यहाँ पर एक ये गैप डाउन है, थोड़ा बहुत रुक सकता है। एफईजी भी है, एंड देन फिर हमारा फाइनल टारगेट ये रहेगा। यहाँ पर आता है तो ऊपर फिर सेलिंग का प्लान रखेंगे। डेटा की बात करें, आज कोई डेटा है नहीं खास शेड्यूल यूएस में, तो कोई खास डेटा नहीं है वहाँ पे। मुंबई सेशन ओपन है, लंदन सेशन ओपन हो चुका है 12:30। न्यूयॉर्क सेशन की तैयारी शाम को 5:30 पे। ट्रेडिंग सेशन है, थोड़ा क्वांटिटी का ध्यान रखते हुए ट्रेड करना, ठीक है। अननेसेसरी रिस्क लेने की जरूरत नहीं है। लाइक भी करते रहो, जिन लोगों ने लाइक नहीं किया, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल एज वेल। बाकी वीकली एनालिसिस करेंगे फिर कल, सैटरडे है। डोंट फॉरगेट टू जॉइन टुमारो वीकली एनालिसिस एज वेल। गुड आफ्टरनून टू ऑल ऑफ यू। निफ्टी भी फ्यूचर में ना अपने रेजिस्टेंस के काफ़ी करीब है, अच्छा रेजिस्टेंस है ऊपर। सपोर्ट था जो बॉटम बना था वहां से 5% चढ़ चुका है ऑलरेडी ऊपर। फ्यूचर देखोगे तो पिछले 5 3 4 दिनों से कंटिन्यूसली बाइंग आ रही है। रेजिस्टेंस से काफ़ी करीब है, इंपॉर्टेंट रेजिस्टेंस है। अगर होल्ड कर गया तो फिर सेलिंग दोबारा अच्छी आएगी। नहीं होल्ड करता है, ब्रेकआउट करता है फ्यूचर में, तो फिर 15 मिनट टाइम फ्रेम पे नेक्स्ट रेजिस्टेंस काफ़ी दूर मिलेगा। अच्छा प्रॉफिट हुआ था क्रूड में, ग्रेट। गुड आफ्टरनून शर्मा जी, वॉइस लो है, अब सही है वॉइस? गोल्ड का देख लेते हैं। क्रूड लेवल लगाए हुए हैं। एक सेकंड दो, गोल्ड के लिए एक सेकंड दो। क्रूड में नीचे लगा रखा है, एक तो कल का ही लेवल है जहाँ से कल बाइंग आई थी, बाइंग साइड पे। 8780 से 770 के बीच में एक सपोर्ट है। ठीक है, ये एक सपोर्ट एरिया कल का ही है। दूसरा ऊपर रेजिस्टेंस देखोगे तो वो भी लगा रखा है, विच इज़ अराउंड 5000। 950 से 960 के बीच में, दैट इज ऑल्सो गुड रेजिस्टेंस एरिया। एक बार ही आया है वहाँ पर वैसे तो, देखा जाए एग्जैक्ट लेवल पे। बाकी नीचे एक लेवल पे आपका एक रेजिस्टेंस हुआ करता था, कल उसका ब्रेकआउट हो गया था, फिर बाद में याद होगा वो एक बड़ी सी जो कैंडल बनी थी यहाँ पर ये, तो वो पहले से एक सपोर्ट था, ब्रेकडाउन हुआ था, रिटेस्ट की तरह काम कर रहा था, रेजिस्टेंस की तरह, फिर से ब्रेकआउट हो गया है। फिर से सपोर्ट की तरह अगर काम करता है तो, नॉर्मली एक कोई सपोर्ट है, ब्रेकडाउन हो तो रेजिस्टेंस की तरह लेते हैं, बट फिर से ब्रेकआउट हो जाए तो वो सपोर्ट की तरह काम रेयरली करता है। बट वही लेवल है बीच में, और कोई लेवल वहाँ बना नहीं है, एफईजी है, वहाँ कभी कर नहीं रहा हूँ मैं। तो एक तरह से इसको मानो ये पहले एक जो बीच का लेवल लगा रखा है 5860 850 वाला, दैट इज अ सपोर्ट एरिया, फिर ब्रेक डाउन हुआ, रेजिस्टेंस की तरह काम किया, फिर ब्रेकआउट हो गया, कोई नया लेवल और बना नहीं है बीच में, तो वी कैन कॉल इट रीटेस्ट सपोर्ट। बाकी नेचुरल गैस तो लगा ही रखा है यहाँ पर। नेचुरल गैस में आपका MCX, नेचुरल गैस में भी एक्सपायरी आने वाली है, याद रखना नेक्स्ट वीक। आज तो लास्ट है सैटरडे, फ्राइडे सैटरडे संडे मार्केट ऐसे क्लोज रहेगा, एंड देन नेक्स्ट वीक एक्सपायरी फ्यूचर की भी हो जाएगी ऑप्शन के साथ। नेचुरल गैस में ये आपका एक सपोर्ट डे लो, मॉर्निंग पे हल्का सा गैप डाउन ओपन हुआ था, वहीं पर सपोर्ट लेने की कोशिश करी थी, फिर से आता है फिर से ले सकते हो, कैंडल का ध्यान रखना बस, ओपन इक्वल टू हाई पे मत बाई करना। बाकी कल थोड़ा व्यू नेगेटिव हो गया था, स्टिल होल्डिंग द सपोर्ट, लेट्स सी क्या करता है। ऊपर ये एक गैप है एफयूजी के साथ, और रुकना चाहिए इस गैप में, जो एफयूजी की तरफ भी काम करेगा। निकलता है इस लेवल के ऊपर तब थोड़ा सा फिर पॉसिबिलिटी बनेगी ऊपर जो मेजर रेजिस्टेंस है वहां तक जाए। बाकी अगर यहीं से रेजिस्टेंस ले लिया तो फिर लोअर लो में ही है, इट मीन्स कंफर्म। ठीक है, यहाँ से इट मीन्स इस तरह से लोअर लो में ही है, अगर इसके ऊपर सस्टेन नहीं होता है इन 15 मिनट टाइम फ्रेम। बाकी फिर ऊपर आपका अपर लेवल पे देखोगे तो एक मेजर रेजिस्टेंस है, उसके ऊपर तो जाना बहुत मुश्किल लग रहा है मुझे। इंट्राडे में तो नहीं जाएगा, कुछ भी हो जाए, वेरी रेयर चांसेस। कोई बहुत दिनों स्ट्रॉन्ग न्यूज आ जाए तो ही हो सकता है, अदरवाइज ये 350 वाला मेजर रेजिस्टेंस बन गया अब। ऊपर आया तो फिर वही 351 से 355 के बीच में यहाँ पर एक सेलिंग प्लान हो जाएगी। काफ़ी स्ट्रॉन्ग रेजिस्टेंस है। बाकी अगर ये नीचे निकलता है लोअर लो फॉर्मेशन पे, देन डाउन साइड पे आपको, ठीक है, बीच में एफईजी से भी सेलिंग का प्लान रहेगा वैसे, क्योंकि ये रिजेक्शन की तरह काम जरूर करेगा मार्केट को लोअर लो फॉर्म करने के लिए, थोड़ा बहुत रिजेक्शन तो जरूर मिलेगा। बाकी नीचे निकल के आता है अगर 332 33, ये सपोर्ट ब्रेक कर देता है इन केस 15 मिनट टाइम फ्रेम पर। ठीक है, फिर नीचे सपोर्ट आपका वही 312 से 310 से 312 के बीच में मिलेगा। बीच में एक रीटेस्ट जोन भी है, बट मेजर सपोर्ट फिर काफ़ी नीचे ही रहने वाला है। बीच में वो रीटेस्ट को देख लेंगे अगर होल्ड करता है तो। निफ्टी फ्यूचर का चार्ट भी, एक बार रुक जाओ। शर्मा जी, मेंबरशिप लेने का ये कोई फ़ायदा नहीं हुआ। यूपीआई भेज दो सर, रिटर्न कर देंगे अगर वेट नहीं कर सकते हो तो। सेंड योर यूपीआई नंबर, आई विल रिवर्ट योर 89 रुपीज़। ओके। मुझे भी चार्ट देखना होता है, मुझे भी ट्रेड लेने होते हैं। अब मैं हर क्वेश्चन का आंसर नहीं दे सकता ना, पॉसिबल नहीं है। थोड़ा सा पेशेंट रखो। टाइम लगेगा बैंक निफ्टी में भी। थोड़ा वेट कर लो, एक बार मैं बैंक निफ्टी के अलावा पहले नेचुरल गैस देख रहा हूँ। बीच में यहाँ पर 324-25 के अराउंड एक एफईजी है नेचुरल गैस में। दैट विल आल्सो एक्ट लाइक एज अ सपोर्ट। वो बहुत बड़ा गैप डाउन हुआ था, उसके बाद मार्केट ने उस लेवल को रिस्पेक्ट दिया नहीं था एक्चुअली। तो देखो, जो कल पहले गोल्ड का बताया था, गोल्ड का पूछा था किसी ने। गोल्ड में जो कल के लेवल बनाए थे रेजिस्टेंस एरिया, वहाँ से सेलिंग आई थी। एक बार जो नीचे सपोर्ट था, मार्केट ऑलरेडी वहाँ से एक बार सपोर्ट ले लिया था, मैंने कल बताया था। ब्रेक डाउन होगा तो फिर इस लेवल को कंसिडर मत करना। आज अर्ली मॉर्निंग ब्रेक डाउन उसका वैसे हो चुका है। तो थोड़ा सा सपोर्ट को चेंज कर देना, अब जरूरत नहीं है उस सपोर्ट की। नीड टू चेंज द सपोर्ट एरिया इन 15 मिनट। फॉरेक्स चार्ट की मैं बात कर रहा हूँ, एमसीएक्स में नहीं कह रहा हूँ। वो क्लोजिंग होते होते सपोर्ट लेके ऊपर ही चला गया था, फिर रेजिस्टेंस से सेलिंग आई थी बाद में, इंडियन मार्केट क्लोज होने के बाद। 2016, 3014, वो एक नेक्स्ट सपोर्ट की तरह कंसिडर करना। बीच का लेवल रिमूव कर देते हैं, बहुत सपोर्ट ले चुका है वहाँ पर अब। मॉर्निंग पे कैंडल भी क्लोज हुई है एग्जैक्टली। बाकी ऊपर रेजिस्टेंस फॉरेक्स का जो अभी रिसेंटली स्विंग बना हुआ है, 830 वाला वही आपका एक ऐसे रेजिस्टेंस की तरह काम करेगा। ठीक है, तो 15 मिनट टाइम फ्रेम पे गोल्ड में यही कंसिडर करना। नीचे यहाँ पर एक सपोर्ट हो कल वाला, अब वो कंसिडर मत करना जो यहाँ थोड़ी देर पहले था। उसके नीचे कैंडल ऑलरेडी क्लोज हो चुकी है, तो दैट इज़ नॉट वर्थ इट। नीचे एक सपोर्ट इस एरिया पे कंसिडर है 3012 से 3014 के बीच में अप्रॉक्सीमेटली। ऊपर रेजिस्टेंस है तो कल रेजिस्टेंस ले चुका है, कल भी लिया था, दो दो बार ले लिया है वहाँ से। अभी भी इंटैक्ट ही है तो उसको एज अ रेजिस्टेंस मानना, और ये भी एक रेजिस्टेंस है, थोड़ी देर पहले यहीं से रिजेक्शन लेके आया है। दैट इज ऑल्सो रेजिस्टेंस जोन, छोटा वाला है बट या इट इज देयर। Pentagon to brief Elon Musk on top secret plan for potential war with China reports। ठीक है, ये है गोल्ड का आपका रेजिस्टेंस और सपोर्ट। ये फॉरेक्स का चार्ट है, ध्यान रखना। बैंक निफ्टी देख लेते हैं अब। बैंक निफ्टी याद रखना, फ्यूचर का ही चार्ट यूज़ करता हूँ मैं, स्पॉट का नहीं यूज़ करता हूँ, तो कंफ्यूज मत होना लेवल्स पे, बिकॉज ऑप्शन थोड़ा सा फ्यूचर के अकॉर्डिंग ही मूव करते हैं। मॉर्निंग पे थोड़ा बाइंग अच्छी आ चुकी है ऑलरेडी, अब तो थोड़ा साइडवेज चला जाना चाहिए, एटलीस्ट 1:30 या 2 PM के अराउंड फिर शायद मूव करे। 15 मिनट टाइम फ्रेम पे फ्यूचर का चार्ट, नॉट एनएसई। नॉर्मली चला जाता है साइडवेज सेकंड हाफ में। मॉर्निंग पे आ चुका है मोमेंटम, बिकॉज जो चार्ट में बताया ना रेजिस्टेंस पर ही है बैंक निफ्टी। ऊपर भी एक रेजिस्टेंस है, इंपॉर्टेंट रेजिस्टेंस है दोनों ही। ये फ्यूचर का चार्ट है, याद रखना बैंक निफ्टी में। अगर गलती से ये ऊपर वाला लेवल ब्रेक कर गया तो फिर काफ़ी बुलिश हो सकता है। मेजर रेजिस्टेंस। बाकी ये भी एक रेजिस्टेंस है, छोटा सा रेजिस्टेंस है। लास्ट टाइम यहाँ से ऑलरेडी एक बार सेलिंग आ गई है, सेकंड या थर्ड टाइम, सेकंड टाइम तो ये है, थर्ड टाइम आया है यहाँ पर। दैट इज ऑल्सो वेरी गुड रेजिस्टेंस ऊपर 51,000 के अराउंड। और नीचे फिर यहाँ पर एक आपका ये सपोर्ट जोन है, एक्चुअली ये रीटेस्ट जोन की तरह काम कर रहा है। 15 मिनट फ्यूचर बैंक निफ्टी। कर सकते हैं बैंक निफ्टी में। कैंडल का ध्यान रखना, बस ओपन इक्वल टू हाई ना बने कैंडल। बाकी ऊपर ये जो एफईजी है ये भी रेजिस्टेंस की तरह ही काम करेगा अभी फिलहाल के लिए, गैप भी है वहाँ पर। क्रूड भी देखो वापस आ रहा है उसी रीटेस्ट की ओर, मल्टीपल टाइम टेस्ट हो चुका है रीटेस्ट जोन, ध्यान रखना। पहले एक सपोर्ट था, सपोर्ट लिया, ब्रेक डाउन हुआ, रेजिस्टेंस लिया, फिर ब्रेकआउट हो गया।
News when you want it with Bloomberg News Now. I'm Stephen Carroll.
And I'm Caroline Hepker.
London's Heathrow Airport is closed to all flights after a fire at a nearby power substation, disrupting travel plans for hundreds of thousands of people. The London Fire Brigade says the blaze broke out in the station in West London, disrupting electricity supply to the airport. Bloomberg's Danny Lee says the fire will cause days of disruption at a minimum.
They will be having to pick up the pieces in the coming days and potentially week or so because of the scale of the disruption. Particularly, it's going to impact the likes of British Airways and Virgin Atlantic, the two biggest operators out of Heathrow Airport. But just to give you a scale, 1,400 flights a day operate. A flight takes off and land every 45 seconds, and 200,000 passengers a day would normally pass through Heathrow. So this gives a scale of the disruption that would last at least into the weekend at this rate.
Our transport reporter Danny Lee there. The local power company says some 16,000 homes in West London are also without electricity due to the fire.
European Union leaders failed to agree on a €5 billion package to buy ammunition for Ukraine and struggled to agree on a strategy on peace talks. At a summit in Brussels, countries argued over the technical details and asked why they hadn't been able to appoint an envoy to make the EU's case in the US-Russia talks. Germany's outgoing Chancellor Olaf Scholz says the bloc's commitment to Ukraine is not in question.
We, of course, understandably, are once again focused on the situation in Ukraine. Russia's war of aggression continues with a great degree of brutality, and it is therefore very important that during our discussions with President Zelensky today, we made it very clear that the European Union, and I want to be very clear, 26 of the member states have made it clear that...
Best of the Mayor of Istanbul.
Bank of England Governor Andrew Bailey urged policymakers to tread carefully in the face of a turbulent global backdrop. Policymakers voted 8-1 to keep the base rate at 4.5%. Bailey says they're still waiting to see what really does happen on tariffs.
We are certainly now in a world of even greater uncertainty. I'm always conscious that with central banks we're always accused of saying the world's uncertain, but it really is uncertain. The inflation impact of tariffs, when you're sort of in a sense on the receiving end of them, is quite ambiguous, as we've said before, and I'll say again. You know, there are things that could push elements of this story that could push it up, and there are elements that could push it down.
Bailey is the latest central bank governor to adopt a more wary tone due to US President Donald Trump's tariff threats. 10-year gilt yields rose, and traders pared bets on future cuts after the decision.
Bloomberg understands that UBS is considering relocating its headquarters if Switzerland requires the bank to hold an extra $25 billion of capital. Sources say executives believe increasing the bank's capital ratio to 14% in a worst-case scenario would make the lender uncompetitive. Swiss authorities want the country's largest bank to fully deduct the value of its foreign subsidiaries from the capital of its parent, with an eye on avoiding a repeat of the Credit Suisse collapse. UBS is stepping up lobbying efforts before a draft of the proposal is due to go before lawmakers in May, although any change likely wouldn't be implemented until 2028.
The UK's top earners are gearing up to spend more. That's according to the latest survey from market research firm GfK. Bloomberg's Tiwa Adebayo has more.
Households with incomes of £50,000 and above are set to unleash their savings on luxury goods, cars or tech, according to a recent report. The data suggests lower interest rates are boosting demands for big-ticket items at the highest rate since the run-up to the festive season last November. The findings could represent an early sign of a brightening mood amongst UK consumers as savings become less lucrative thanks to falling rates. A resilient labour market is also helping the consumer recovery. Wages are still growing faster than inflation, as Prime Minister Keir Starmer has frequently emphasised in recent weeks. But outside of the top income bracket, there's less enthusiasm for extravagant purchases. GfK's major purchasing index across the income spectrum remained flat. In London, Tiwa Adebayo, Bloomberg Radio.
Those are our top stories. On the markets, risk off in Asia this morning. We have declines led by the Hang Seng index, which is down 2.3%. The tech index dropping 3.5%. Mainland Chinese stocks also under pressure. The S&P 500 on Thursday ended a volatile session in the red. Stock futures are also negative. The White House press secretary warning that big tariffs are coming on the 2nd of April. Meanwhile, we had FedEx, Nike, Micron reporting after the bell. FedEx stock fell 5.6% after a profit warning. Nike's share price down 5.3% on a glut of inventory. European stocks also underperformed yesterday. Euro Stoxx 50 futures are now down 0.5%. The dollar this morning is strengthening and treasuries are trading steady this morning. That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Stephen Carroll, and this is Bloomberg.
Can the UK invest its way out of this? Good morning. Thank you.
Life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
That goes some way to explain the European outperformance year to date. There's been strong outperformance in Europe. In portfolios, we have been running an European overweight, but that includes a more defensive element of Europe, like Swiss stocks. You know that the Swiss market is very big in pharmaceuticals and consumer staples. That's maybe different from, I guess, your typical European stock. We've been thinking about just that position going in, including some quality growth names that we're also happy to hold over the long term. When you think about whether that rally can continue, relative valuation is not that cheap anymore, right? The European relative valuation versus the rest of the world, that's back to levels we've seen before Russia-Ukraine. So the opportunity set is not that cheap anymore. And secondly, our team crunched the numbers and look at what happens when the US slow down, what happens when the S&P 500 is in a downtrend. Yeah. Actually, the rest of the world tend to underperform, tend to suffer as well. So we're in an unusual situation when the US is in decline and yet the rest of the world is rallying.
Lizzie doesn't let me talk about the beta, but that's effectively what you're talking about.
Effectively.
Okay, so it sounds to me like you're feeling fairly defensive at the moment. What do I do? What does a defensive portfolio look like?
You know, there's a level of uncertainty out there, not least when it comes to policy uncertainty. Just the level of change in policy making drives cost of concern. So we are relatively defensive. We're not rushing to buy the dip. In terms of portfolios, we still have a high level of cash. We're holding a gold position. We're overweight duration. So government bonds have actually provided a decent level of protection for multi-asset portfolios this year.
Yeah. If you don't get a recession, does credit help? Because if defaults don't pick up, you can sit and clip a coupon for a long time here, assuming that you don't get a deep recession, that growth slowdown that you're talking about doesn't become significant. Are there ways of generating income that look reasonably defensive, and is credit one of the ways you would look at, or do you worry about pricing being as tight as it is?
I would say we're more on this latter, right. So we're more worried than... So in terms of high yield, it's like credit component, where do we fall in that credit rating? So we're underweight high yield because we're still concerned about that potential for spreads blowout. It's not happening yet because the economy is not in a recession. The economy is simply slowing down in the US from a very high rate of growth to simply a slower rate of growth.
But in terms of how you would rank, like in terms of the defensiveness, how do you think about equity versus credit versus the bond market? You talked about gold. Like how are you kind of rethinking the relative risk in these various asset pots that people will have in their portfolios?
So within the various opportunity sets, we're neutral on equities. We remain diversified regionally. So we have a bit of Europe, and we also adding China to portfolios starting February. So we're maintaining regional diversification to build in that defensiveness in terms of relative valuations, creating that spread of opportunities within the equities. In fixed income, we like duration. We have a small overweight in duration in London. In credit, we're underweight high yield, neutral on investment grade, and overweight emerging market debt. So that's where we are in terms of the opportunity set.
That's interesting. So how do you weight Europe and China then?
So those were, I guess, the talking points coming into this year, right? Those, in terms of the starting point coming into this year, both markets were at very steep discount. Both markets have rallied. I think the story for China, it really came down to a few things. First thing is around DeepSeek, and DeepSeek really showed us that Chinese companies have remained really competitive. And secondly, policymakers have started to sound more market-friendly. They talk about raising the fiscal deficit. They're meeting with private market leaders. They're showing a more friendly face. So that Chinese story look attractive to us.
For the last, I can't remember how long it is, years and years and years and years, you basically wanted to be massively overweight the US. The exceptional trade was on.
Yeah.
That's how you outperformed. If you really wanted to outperform, you were in US tech.
Yeah.
Is that over?
It comes down to a question of time horizon. In terms of the short term, it's true that the US has a few questions around policy uncertainty, but I do think it comes down to timing, because all of the negative side of policy making, like tariffs, like fiscal budget cuts, that has been front-loaded to this year. Whereas the more positive side, let's not forget that the administration is also talking about tax cuts, talking about a more pro-growth stance in the US. That's probably coming later. So for the US, I think there's a timing issue here where in the short term there could be noise, but over the long term, that's still where the productivity story is. That's still where the technology innovation is happening. And let's not forget that the market is energy independent. The market has a strong labor market. So in the long term, we still like the US, but over the short term, there's probably still some questions.
Okay.
Anne, can I ask you about another kind of defensiveness?
Yeah.
You've got this huge change, a paradigm shift in Europe, the era of rearmament, right? These commitments to spend more on defence. Do you think more and more that is going to be European companies who benefit from that, as the relationship between Europe and the US turns more sour, and maybe it seems like that spending shouldn't be going to US companies? Is it possible that we're actually underestimating the benefits to European defence companies?
Yeah, that European fiscal impulse should benefit more than just European companies. If you take a step back, that fiscal impulse, yes, we know that Germany has the fiscal headroom, but it's not the same for all European countries. It's not the same for the entire region. So I think it's still an open question whether we get that synchronized, that union of growth, union of spending in terms of that fiscal impulse. I think that's still an open question.
Yeah, Europe is made up of very different economic outlooks at the moment. Be interesting to see if we can really kind of form that into one cohesive thought. Anne, nice to see you. Thanks for stopping by to join us this Friday morning. Anne Doe, Portfolio Manager at Julius Baer. Let's look at the Core 6 in Europe, give you an idea of what is happening here. It has been a bumpy week, let's put it that way, and we are watching very carefully what is happening in terms of the market moves. But as you can see this morning, starting to unwind some of the gains that Europe has generated. Big names, LVMH, Novo Nordisk, ASML, they're all big names there, aren't they? And they're all under a little bit of pressure. And that takes us to some of the pressure that maybe is going to come out of the United States a little bit later on. Did you see what Nike had to say last night? Did you see what FedEx had to say right now? Let's dig in to some of the pre-market movers stateside with Valerie.
Guy, let's start off there with FedEx. They came out with a profit warning. They reduced their guidance for the full year ahead, and it's actually now the third quarter in a row that they have done so. They cited some weakness in their higher margin business-to-business volumes. The CEO said that there is a uncertain outlook on demand moving forward. Commenting again around the heightened uncertainty for the U.S. economy. Moving on to Nike, those shares also moving lower. The CEO is struggling with his turnaround plan, this glut of inventories. He also noted that margins are due to come under pressure in the first quarter. He noted specifically tariffs on China and Mexico causing some margin pressure for Nike. Those shares are down 4.3% in the pre-market. Lastly, Micron, some good news here, gave an upbeat sales forecast, mostly due by a boost to AI demand. Their high bandwidth memory chips saw some decent sales for the first quarter. Those are the ones used in data centers, Guy. They also said they're on track for record revenue for the year. That's Micron Technology, up around 1% so far this morning.
Thanks for the update, Valerie. Thank you very much indeed. Coming up, we're going to continue our coverage of what is happening at Heathrow. The London Fire Brigade, within the last couple of minutes, has said that it has brought the fire at the electrical substation under control. This is the electrical substation that has caused such chaos, though, closing Europe's busiest airport. You're looking at a live shot coming from West London. We will bring you the latest updates from Heathrow in a few minutes' time. This is Bloomberg.
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding, it's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That, coupled with our own legacy for having been around for over 160 years, that's what sets us apart. A focus on your story, our legacy.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The top names in business are on Bloomberg.
Over the last couple of months, we are redrawing geopolitical lines. At the same time, we have tariffs. We are trying to reinvent the federal government geopolitically as well as economically, in the middle of a transition, looking to change everything. And as a result of that, the uncertainty is maddening.
Nobody covers business like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Today's CFOs focus on much more than revenues and margins. Their impact goes far beyond the balance sheet.
The world is coming at us faster than it ever has. We're in an evolving business.
Our first job is to intimately understand and anticipate the consumer's needs.
We've been on a journey to be higher growth, more nimble, and more capital efficient.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. New episodes this spring, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Friday morning, good morning, welcome back. European equities are softer. We're up on the week, but we're down on the day. We are seeing a negative picture emerging as well over in the United States. I'm just looking at kind of what we're looking at there. Looks like it's going to be a slow start to the session stateside as well. Plus, we've got witching that we need to work our way through in the options market. So we're actually setting up for what could be a fairly busy day from a market perspective, I would argue. In terms of what else is going on elsewhere, obviously the biggest story that we're watching so carefully this morning is what is happening at Heathrow. Airline stocks, unsurprisingly, under pressure. IAG, the owner of British Airways, is the most affected. Heathrow Airport has been shut down. It has been shut down all day. It will be shut down all day. There's been a fire that's caused a power outage. The fire brigade is now saying that that is under control. I want to go to Alex Morgan. He is at Heathrow and joins us now with the latest. Alex, so we understand the fire is under control. What does that mean in terms of what happens next?
Well, Guy, that's a good question, and we're getting that update in the last few minutes from the London Fire Brigade. They're saying they dispatched around 10 fire engines, 70 firefighters to this major blaze at a substation in Hayes, that's just nearby the airport. Obviously, it took off a lot of local homes, took them off the grid as well. They're saying that fire is now under control. The investigation begins, as in how did this happen? How could it take Europe's busiest airport offline for an entire day? An unprecedented closure. There's no sign that the fire being under control is going to have any change to bringing forward the time which Heathrow will open. It is set to be closed all the way through today. That's going to have a massive impact through the weekend, of course, because Heathrow typically has around 1,400 flights a day. There are around 200,000 passengers coming through here. That's now obviously going to be delayed, not just today, but obviously tomorrow and the day after, because those aircraft, around 120 that were in the air at the time of the closure, they've got to be repositioned. The other flights have to be repositioned. We're going to see days of disruption. Bearing in mind, just a few hours of air traffic control delays can often lead to days of disruption. So, Guy, while the fire might be under control, there's no sign that's going to ease up in terms of the opening time at Heathrow today.
Alex, thanks for the update. You'll continue to keep us updated. Thank you very much indeed for that. Alex Morgan joining us from Heathrow in West London.
Well, as you say, Guy, the airline shares are down this morning. IAG absolutely feeling most of the pain, down 3.2%, but the same for the likes of Lufthansa and Air France. The other stock that is in the red this morning for another day is UBS, after a Bloomberg scoop that UBS is examining the potential relocation of its headquarters if Switzerland does stick to this demand that the lender should hold an extra $25 billion of capital. And we can get more on this now with Nicholas Comfort, our European finance and regulation reporter based out of Frankfurt. Thank you, Nick. I mean, why is UBS threatening this move? Is it just a threat? Is it just a lobbying device? Or is there a realistic alternative HQ for the bank?
So first off, I mean, the reason they're threatening this is clearly the capital requirement would come on top. So the Swiss have been notorious for always having what they refer to as a Swiss finish, i.e. sort of they're a little bit sort of a stronger requirement than in other jurisdictions. But this 25 billion, if implemented as described, would really go a lot further than what other big banks face. And so I think from the UBS side, it's probably pure mathematics. They're just saying sort of like, we cannot compete if this is our cost of capital. If this is how expensive, then the knock-on effect would be for our loans, for our services, and so that's the threat they're making. I think the word lobbying is very appropriate here. I mean, we're in the kind of the hot stretch of these rules being hammered out. So in May, we're expecting this to be put to the Swiss Parliament, and so clearly, like UBS wants to get across its perspective here and be saying sort of that it's detrimental, and to sway the politicians if even they haven't been able to sway the regulators. Just on Monday, we had an interview with FINMA, the Swiss regulator, and they're really sticking to their guns, only offering a kind of they see it as a concession. The UBS side do not see it as a concession in terms of phasing in, slowly, gradually applying the rules rather than one big bang at the beginning. But that doesn't go far enough for UBS.
What would this mean for A, Switzerland, and B, any other jurisdiction that would be prepared to take UBS? UBS is huge. Presumably other regions, other jurisdictions would have some caution when it comes to such a move.
Very good point. So, I mean, depending on how it would be structured, if this was to happen, then, I mean, the question on Swiss politicians' minds would be, is there still going to be credit flowing from our biggest bank to our companies, to our consumers? Now, it's an attractive market. I would doubt that if this was to happen, that there would be any kind of wholesale departure from the lending market in Switzerland. But yeah, the flip side is much more interesting. What about the other jurisdictions that UBS would be looking to move to? Clearly, there's three big options. You've got the US, you've got Asia, and you've got Europe. Now, the US has become a lot more private industry friendly under the current administration, so that might be attractive. Also, a little bit of turmoil there as well. Asia is a big focus for UBS in terms of the wealth management business, so there's an attractive angle there too. But again, the regulators, having this whopping great bank move into your backyard, I mean, clearly they would give UBS a hard time as well. And I'd say the onboarding procedure would be very, very strenuous. And so it would not be smooth sailing to move to another jurisdiction either, Guy.
So, Nick, how do you see this playing out? We had the CEO, Sergio Motti, telling us previously that they're going to make the case for a change to these rules until the very last minute. How much flex is there in these rules from the regulator? Where does this end? How long does it go on for?
I think I mean, my personal view would be there will be some kind of a compromise in the end because each party has something to gain here as well. I mean, let's not forget that the S in UBS used to stand for Switzerland. Union Bank of Switzerland was one of their predecessor companies. So much of their identity and their brand and what they can offer to clients is kind of linked to the stability of Switzerland and discretion, the Swiss bankers. And so for wealth management, UBS's core business, Switzerland is a major asset. And so, I mean, that clearly has to be pushing the UBS side towards a compromise there too. The regulators, maybe they're talking tough on this at the moment. Like I said, the FINMA interview we had, they were not open to compromising too much. But maybe the politicians at the end will be the ones who kind of pull us into an area which is something which both the regulator and UBS can live with.
OK, Bloomberg's Nicholas Comfort in Frankfurt. We thank you for the scoop as we look at those shares in the red again for UBS this morning. I want to turn to another stock that's struggling in the pre-market, and that is Nike. Those shares down 4.4% as things stand. And this is because Nike's turnaround efforts are hitting snags as the company tries to clear out old inventory while feeling the effects of the growing trade war. Which company isn't feeling that? We can get more now with Andrea Felsted from Bloomberg Opinion, who I know has got some pretty strong opinions about Nike trainers. But Andrea, first of all, just tell us, what does this set of earnings tell us about Nike's turnaround, how it's going with the new CEO?
It tells us it's going to be slow. I'm not sure if it's hit a snag, but it's definitely going to be slow. I mean, they told us that Q4 sales will be down by a mid-teen percentage. The gross margin could be down by as much as 5 percentage points. It's clearing out this inventory. Interesting, it said it thought the Air Force One had now stabilised, but it still had too many Nike Jordans and too many Nike Dunks. So it's got to get rid of these overexposed franchises, these sneakers that everybody had and suddenly they've gone out of fashion, before it can really bring in its new products.
So it's reorganising around sports, basically.
That's right.
So football, basketball, etc., etc.
Exactly.
It's focusing much more on sort of the athleticism of the product rather than the fashion of the product. We're already starting to see the effects of that. What kind of products are we seeing coming out? What are they giving us in terms of the idea about where ultimately the brand will be?
They're giving us some, more running trainers. They're trying to connect with retailers. They're trying to reconnect with athletes, particularly running, where they've come under pressure. But these things will take time. There are some coming out at the moment. More will come out. In the meantime, you've got Adidas taking a very different approach. It's much more focused. It's much more focused on fashion, and it's using its brand desirability to then move back into performance. And it's also picked out running as another growth area. So it's going to be a lot of competition.
Do you know what they need? Rishi Sunak. They need him to wear a pair of those kill shots. He was the famous ambassador of
so you bring up kill shots. So Andrea wrote a piece yesterday. Everybody's asking the question, what's the next Samba? Andrea Felsted apparently has the kill shot, the Nike kill shot. Yeah, this is a tennis trainer.
Yes, I'll tell you how this came about. I've become absolutely obsessed with people's feet and looking at what trainers they're wearing. And I just noticed in real life and on social media that there's a few more retro Nikes popping up. So I thought, well, I'll have a dig around. Is this showing up anywhere? And it did show up that on social media, the kill shot seems to be doing particularly well. And they were both very strong, the Samba and the kill shot, about the same time. But whereas the Samba's sort of decelerating, that's quite clear. The kill shot's continuing to build. Now, there's often a bit of a lag between when things show up on social media and when they show up, in sales, etc. But there's a few of these retro models that are starting to, but Adidas isn't going down without the fight. So the new one that everyone's talking about, is the taekwondo. And these are very, very low on the ankle. They've almost got no soles, like a barefoot sneaker. And Adidas are putting a lot of focus on that. That's already being tipped as the sneaker of the year.
But how much
so Nike's got competition.
Can it be, yeah, but how much of a focus can it be on sports if you're going to collaborate with Kim Kardashian and Skims?
Exactly. Now, they're saying that is performance, body sculpting, but these brands, my view is these brands are fashion brands. Okay, you can have performance, you can have athletes, they are fashion brands. And, when you go to Zara, you don't just have one thing that's big. They're already working on what's coming next. And Adidas really Bjorn Golden really seems to get this. He seems to have a pipeline of products. And I think Elliot Hill's catching on, so let's see if he can do it.
Got my eye on a pair of Miu Miu trainers, Andrea. Maybe this weekend.
The fontable trends.
Okay. This conversation needs to stop right now. I don't know what you're talking about. Anyway, we're going to back to the markets in a moment. Rob Arnott's going to join us. This is Bloomberg.
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding. It's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That coupled with our own legacy for having been around for over 160 years, that's what sets us apart. A focus on your story, our legacy.
In case you missed it, on Bloomberg Crypto.
You have sell-side analysts taking a look at what you're doing and starting to compare you to Coinbase. Are you after their business?
Well, I think we compete in the general sense of offering crypto to customers, but also this is a nascent industry and not very many companies have entered yet. Even though Bitcoin has now been around for 15 years, institutions and other companies have been waiting for signals to enter the market.
There are a lot of financial firms that are looking to tokenize private funds also. Yeah. Are you in talks with any of them?
We're generally in conversations with anyone trying to do interesting things in the space. If I had to pick the biggest pain point, AI is like transforming everything. So I think it's tough right now if you want to be in the AI sector as a retail investor. There's relatively few options that you can actually invest in.
Don't miss Bloomberg Crypto live Tuesdays.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers of Harvard on the Fed meeting. The oil industry may not want to do all that drilling President Trump promises. There are some problems getting on the bandwagons of EVs, DEI, and moving to Miami. And the ups and downs of the D.C. real estate market in the age of Trump.
We are watching the city shift.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
"30 minutes into the equity session here in Europe this Friday morning. It's negative. It's actually in certain markets quite negative. So as you can see, you are looking at some markets that are down. Let's call it circa 1%, 0.75% to 1%. That's the picture in Europe. There's a story in Turkey that's probably worth drawing attention to. I just wonder if there's a connection here. Turkish stocks are getting hit pretty hard again. You've got fresh halts once again in that market. You did see a ripple effect Wednesday into European assets as a result of that. So Turkish banks are down, let's call it circa 9-10% at the moment in terms of the performance we're seeing there. I draw your attention to it because it's one of those things that just at the margin may have some kind of an effect. Just give you an idea of what is happening there. You can see some of the numbers on the screen for you. The central bank is trying to step into the market as well to have an effect on what is happening with the lira. In terms of what that means for US futures, I'm not sure there's a big read across at the moment. I think there's a bigger reaction this morning in terms of Nike and FedEx, in terms of what we're seeing in the numbers out of the United States today. You've also got a big options expiry coming up. That's going to be a factor in terms of the session a little bit later on as well. At the moment, the S&P over the last 4 days, Monday, Tuesday, Wednesday, Thursday, up by around 0.4%. So the margin in terms of producing another negative week is small. We could see one. So there's not much erosion required to generate another negative week. So that's kind of the setup into this Friday morning. Perfect person to talk to, Rob Arnott, founder and chair of Research Affiliates, sitting around the table with us this morning in London. For how long, we don't know yet. We'll see over the next few hours. Nice to see you.
Good to see you.
What do you make of the world right now? We're in a position where it does seem as if US exceptionalism is coming to a close, and I'm wondering what you think the implications of that are.
Well, one of the things that I think gets overlooked, how many of the people in the corridors of power around Europe and elsewhere in the world have read Art of War? That is Donald Trump's Bible. And anyone who's dealing with him who hasn't read Art of War is making a terrible mistake to not do his or her homework.
Subdue the enemy without fighting.
Yes.
You could quote from it, which is slightly alarming.
Yes. Very good, Lizzie.
Yeah. We'll probably throw a bit of Machiavellian as well, just to kind of get a bit of the prince into the story as well. We're not sure we go quite that far.
So the EU puts a 50% tariff on U.S. whiskey, and Trump says, fine, I'm 200% on European wine and spirits.
Yeah.
So are you saying he doesn't mean it?
Oh, no. I'm saying that if he gets the EU to back off, then he's won the skirmish without having to fire a shot.
There's a long-term effect, though, of the instability that he's creating for the U.S. economy.
I think it's crazy that Wall Street economists spend a lot of time trying to model what tariffs will do to the GDP, to unemployment, to inflation, when they change day to day. The one thing you can have confidence in is that we're going to see more volatility. And more volatility you can model. More volatility usually means somewhat of a retreat to safety. And a desire to have a margin of safety in your portfolio, which usually means value beats growth.
Yeah, we're going to come on to the value and growth in just a minute. We've got a wait-and-see economy. I think this is what Torsten Slok at Apollo talks about. Everybody's sitting on their hands. Nobody's doing anything. To a certain extent, that is true in the markets, but it certainly appears to be, judging by the data, true in the economy.
Yes.
You get a recession in the States. What do you think broadly happens to U.S. stocks from here? We're already down. Do you think there is further to fall?
I think the market can be selective on the way down. One of the things that's fascinating, a lesson of the dot-com bubble, is it burst almost exactly 25 years ago. The first 2 years after the bubble began to burst, from March of 2000 to March of 2002, the S&P was down 27%, NASDAQ was down 50 on its way to being down 80. And so what about Russell 1000 value? It was down 4. What about Russell 2000? It was up 3. What about Russell 2000 value? It was up 53. Meaning that if you had the foresight to pivot from frothy NASDAQ companies into deeply out of favor small cap value, you were 3 times as rich in 2 years as the person who stayed the course with NASDAQ.
Sounds like he's suggesting maybe we should buy value stocks. Rob suggesting value stocks?
It's possible that I think they're a good deal.
Let me ask you guys' favourite question here, though. So can Europe kind of decouple from the misery stateside? How much of an effect do you see reading through into European stocks? Can it power its own?
European stocks are cheap. They're priced to offer pretty good forward-looking returns. We were known as the inventors of fundamental index. Fundamental index in Europe has a dividend
control and monitoring technology with Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Live from Studio 2 at Bloomberg headquarters in New York, I'm Alex Steele.
And I'm Scarlett Fu. We're kicking off to the closing bell here in the U.S. Not as much drama after yesterday's big Fed meeting.
No, and that rally did not last. Take a look at where we stand with the S&P right now. Down 0.4% around the lows of the session. That rally that we saw yesterday kicked off this morning and then slowly has just faded throughout the day. So where's the money going? A little bit into the VIX. We're now back over that 20 level. Also into the front end of the bond market and definitely also into the dollar, really outperforming. So the safe haven assets, again, taking control of this market, Scarlett.
So you look at it, and clearly that post-Fed rally in stocks and bonds was short-lived. Uncertainty rooted in President Trump's trade war, offsetting encouraging data on housing and jobs that really underscore the economy's resilience, at least for now. Sentiment remains fragile as investors hunt for some signs of stabilization. Here's how Blackstone President and COO John Gray describes the macro backdrop.
There's, I'd say, an overall pretty good picture in terms of employment and good momentum, but we are seeing a little bit of a slowdown here. I'd say the positive is that I think the inflation has continued to steadily decline.
The central bank's downgrade of GDP and employment forecasts, coupled with its outlook for faster inflation, is darkening the mood on the small guys. The Russell 2000 entered 2025 with a fairly positive setup, thanks to a recovery in manufacturing and the promise of lower borrowing costs. But the constant on-off tariff headlines have erased that tailwind. Small caps, they're now down about 7% this year. And a big deal on the basketball court. The Boston Celtics sold to a group of investors and a private equity firm for $6.1 billion. That makes it the biggest NBA deal ever, not to mention the largest takeover deal in sports history. In the next hour, we sit down with one of the biggest voices in the business of sports, Mark Lasry, a former co-owner of the Milwaukee Bucks and current chairman and CEO of Avenue Capital. Alex?
All right, Scarlett, let's get back to that small cap point that you are making, because it's not only what we're seeing with tariffs as well as rates, but it also has to do with what the Fed does. This is a great chart that compares the S&P on a price to sales ratio, that's the white line, so basically how expensive small caps are, to the effective Fed funds rate, that's the blue line. Now, in the early aughts, you can kind of see them moving a little bit against each other. So when you had lower rates, small caps did better. Higher rates, small caps did worse. Zero bound rates, small caps performed pretty well. Then you had a move higher in rates, small caps lost the momentum. And then you have another bottom in rates, small caps rally. And now rates continue to creep up, holding relatively steady. Does that mean the small caps just cannot catch a bid? It's like, what is the catalyst for those small cap companies? If you can't get it from the Fed, you're not going to get it from manufacturing right now, and you can't get it from those tariff headlines, Scarlett.
All good questions. So let's put those to Jill Carey Hall. She is head of the U.S. mid-cap strategy over at BofA Securities. Jill, let me pose that question to you. What is the economic catalyst that's going to get small caps going for good here?
You know, I agree. I think small caps have been more sensitive to the Fed and Fed expectations. We saw that with some of the biggest rallies and sell-offs in the Russell last year. Our economists are expecting that the Fed remains on hold from here. So that's, you know, a challenge to the Russell 2000, which has a lot of refinancing risk. And I think, you know, the worry from some investors on small caps is that, you know, what is the catalyst to get these stocks to recover? And, you know, while I do think there are a lot of opportunities within the small and mid cap space, I am cautious on the Russell 2000. I think mid caps are a better risk reward opportunity right now because for small caps, the fundamentals just haven't really turned around. I mean, in addition to the now incremental potential risks from tariff uncertainty and potential risks to EPS from tariffs, you've had a size segment that's still struggled to get out of its earnings recession from 2023. And we're wrapping up the most recent earnings season. And even though for larger companies, the commentary was much more positive, the sentiment from management on small cap earnings calls was much more cautious, and guidance has still been cautious as well. So I think we'd want to see revision trends and corporate sentiment turn more positively there. You know, if we do eventually see that pickup in profits growth that everyone's been expecting for a while, but keeps getting pushed out.
Right. So that's a pretty long list of things that have to go well for the small caps to really be able to take off. What about the prospect of deregulation and some M&A, especially in, say, the financial sector, where, there's been a lot of hopes baked into this idea that financials will see some consolidation or they'll get benefits from a pickup in deal making?
Right. I mean, I think deregulation can definitely benefit parts of small caps and an M&A pickup as well. M&A, if we do see a pickup, once we get past some of the uncertainty, and we have seen a pickup, over the last year, most of it has been smaller deals. We would expect some pickup this year, but really, there are going to be other factors. The cost of capital is a big driver of M&A. Small cap valuations relative to large, which are still relatively cheap. But longer-term growth expectations for small caps have come down, so that's made the backdrop a bit more challenging. So there is some potential for M&A, and financials, as you mentioned, are a sector within small and mid caps that rank well in our work. I think that is a sector that will benefit from deregulation. Is a higher quality sector. Quality is an attribute that tends to do well when volatility picks up, and that's a sector that generally ranks well across our work as well.
Hey, Jill, the corporate credit market has been a little bit confusing. It's held up really well, and then all of a sudden it didn't start to hold up well, and yields started to move higher, and then it seems to be recovering again. What's the relationship between small caps and credit spreads?
Right. I mean, small caps and high yield credit spreads, you tend to definitely see an inverse correlation there, where when spreads tick up, and as well as when volatility rises, like we've seen, small caps do tend to underperform. When we look at the broader credit risk metrics that we're tracking, not yet flashing warning signs in terms of major credit risk, but you have seen spreads tick up from these very low levels, so that does tend to be more negative for performance.
Control and monitoring technology with Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
It can be the case that it's appropriate sometimes to look through inflation if it's transitory, and that can be the case in the case of tariff inflation.
Everyone's relieved that the Fed didn't jump to significant conclusions.
If we get to that May 7th meeting and they do not find a reason to cut rates, they're not going to find a reason to cut rates this year.
I don't think there's any chance that they cut in May.
The question is how much of a growth deterioration needs to occur before the Fed can react, and it seems to be that the bar is pretty high for that.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Thursday with equities struggling to build on yesterday's bounce as Fed Chair Jay Powell downplays inflation risk.
It can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. And that can be the case in the case of tariff inflation.
So Team Transitory is getting the band back together, preparing to look through any potential bump in inflation. And the president wants them to go even further, writing the Fed would be much better, cutting interest rates as tariffs start to ease their way into the economy. The president calling April 2nd Liberation Day.
At a time when they're hoping to get long-term rates lower, Kevin Hassett also speaking yesterday after the Fed decision said that Fed officials are, quote, a little tighter than they want to be, than they would want to be at equilibrium right now. They've backed away. Let's be very clear. This isn't a Fed that's necessarily under that much political pressure at a time where they're using the T word to talk about tariffs and the potential ramifications for inflation.
There is a bullish interpretation. There is a bearish interpretation. We debated this extensively yesterday afternoon. The bullish interpretation goes something like this. Inflation was revised higher, but the median dot didn't go up. The bearish interpretation is that growth was revised lower, but the median dot didn't go down. This market is putting a lot more weight on one versus the other, reinforced by the message from Chairman Powell.
That's right. And what you're seeing right now happen is, I think a lot of people are trying to understand how the Fed views inflation, because they're ciphering off regular inflation that was already there and they were trying to quell, and this quote unquote tariff inflation. And I remembered yesterday thinking about what Scott Bessent, the Treasury Secretary, said to us around this table, thinking of getting the band back together. He said Team Transitory, if they have any credibility at all, they need to look through the one-time price adjustment when it comes to tariffs.
Yesterday's decision, the inflation growth policy mix of the forecast will take on a life of its own at 8:30 Eastern Time. When we get more data, how will this market respond if we get a deterioration in the economic data, specifically jobless claims at 8:30?
Do they get the sense that this Fed will have the markets back and respond to weakness possibly as soon as May if we do get a sign that that unemployment rate is reaching their target of 4.4% more quickly than otherwise expected? I will just say part of the reason why people are dismissing the hawkish interpretation is because Jerome Powell himself came out and said, you know, with respect to the dots, what would you write down? It's really hard to know how this is going to work out. So if they're telling you we have no clue, we're in a dark room, we're just guessing, but we are looking at transitory inflation and weakening growth, well, that's the reason why people see Dove.
Also, the fact of the matter is they kind of took a hike off the table. And if you're trying to quell inflation, you would need to hike. This quote, we're at a place where we can cut or we can hold. It's what he didn't say that I thought mattered.
Equities this morning struggling to add to yesterday's bounce. We are slightly lower on the S&P 500, just dipping into negative territory in the last few minutes or so. Coming up on the programme, we'll be catching up with Julian Emanuel of Evercore as the Fed triggers a rally in equities in the last 24 hours. We'll speak to the former ambassador to Switzerland, Ed McMullen, on President Trump's tariff agenda, and Ian Steely of JP Morgan Asset Management as Chair Powell brings back the T word. We begin this hour with stocks struggling to add to a post-Fed relief rally. Julian Emanuel of Evercore writing the following. In a Washington where policy uncertainty is swirling, Chair Powell projected a sense of calm and confidence in the eye of the storm. 2025 is a volatile. 3 steps forward, 2 steps back. Julian Emanuel of Evercore joins us now for more. Julian, good to see you.
Good morning.
How many steps forward or back did we take yesterday?
We took a half a step forward. Look, this process, and we think that this is a correction. We are in a bottoming process. The elements that normally tip bull markets into bear markets are not present. The biggest challenge, though, is how policy unfolds, because as we've seen, and Powell pointed out a week and a half ago, the soft data, the confidence, the opinions are all very cautious. The hard data has started to show signs of cracking, but nothing that, as he said yesterday, is significant at this point.
Yeah, I wouldn't say dismiss the soft data, but he certainly downplayed it and played up where the hard data still was and how decent, healthy the economy still is. The question I would have for you as an investor right now, Julian, is whether the easing bias would be constrained if we got a deterioration in the economic data, whether that easing bias is constrained because they'd be worried in any way, shape or form about higher inflation.
I don't think that's the case. Look, the academic research, and if you go back to the trade wars in 2018 and 2019, let alone going back to the last great tariff era, the 1930s, we'll only mention that once, is that basically inflation was not a concept. Inflation moderated into 2019, and the expectation, and maybe it was an unfortunate choice of words, transitory, but maybe it was intentional to really make a point here. The bigger question is that when you think about it, to your point, John, is that the projections for growth are not consistent with a pro-growth president's agenda over the long term.
That said, you said a half step forward. Is it a half step forward for risk assets if essentially this is a Federal Reserve saying that they're expecting a stagflationary-like environment in the near term, which by all accounts has traditionally been terrible for risk assets?
Well, and again, it just goes back to questions of degree, right? So remember, prior to the pandemic, we were thinking that the economic numbers that the Fed is projecting was basically the long run, rate of growth. And in fact, they reinforced that. I suspect they'd prefer to think that the number is closer to 2%. And so from that point of view, it's not necessarily the stag part as much. But again, the whole point here is that the policy disruption we've seen puts the mood such that, you are at that fine line.
You said that maybe it was an unfortunate use of words with transitory. It seemed pretty deliberate. He repeated it several times, and he seemed pretty confident when he said it. He didn't back off from the T word. He embraced that T word. And I wonder at what point we're looking at a revision of what we saw previously, where that word was inaccurately used at a time when you've got a global fiscal impulse that is pressuring yields higher and potentially going to keep inflation at a higher level, just de facto, not only before the pandemic, but more in general, simply because of how many dollars and euros are in the system.
No, and there's no question about it that when you go back to think about the last month, is that the geopolitics of the situation, really caused this fiscal impulse that we see now is going to be the long-run trajectory in Europe. And that's a different set of circumstances and calculations that, if anything, puts a floor under long-term yields, which might be something that the administration wasn't exactly banking on. But again, it comes down to this idea that policy implementation, and this is why, in our mind, how the messaging on April 2nd is so very important, is that you've got to provide, room for the art of the deal to work. Not the sledgehammer, the art of the deal, because confidence is fragile now.
Why do you think it's not going to be a sledgehammer, given everything we've already seen from President Trump? You think April 2nd is going to be a blueprint?
I think, again, if you look at it, they say they aren't as focused on markets. That may be true because they did tolerate this drawdown recently. But there's definitely an eye on markets, and there's a knowledge that there's only so much that you can really sort of do in so compressed a time without tipping the confidence into something where the hard data starts to deteriorate.
They've already acknowledged that they're in negotiating mode. Kevin Hassett said that he was recently this week working with Howard Lutnick, the Commerce Secretary, Scott Bessent, the Treasury Secretary, with other countries to potentially negotiate reciprocity before April 2nd. So in that case, you think a Trump put still exists?
So the Trump put, Fed put, these are just terms, quite honestly. The bottom line is whether you're the Fed chair, the president of the United States, or a head of a Fortune 100 company, there's no question about the fact that over the last 30 to 40 years, the link between the equity markets and the economy is inextricable. It's very, very infrequently where there's any kind of divergence. And because prior to the pandemic, there'd been this consistency where the soft data would lead the hard data, the question is, are we returning to that mode? It's not clear, but we don't really want to take that risk.
All right. If we took a half step forward to yesterday, maybe not in resolving all the uncertainty, but maybe following this bottoming out process, are you getting materially more bullish right now after yesterday's Fed meeting?
Well, the concept of materially more bullish when there's as much uncertainty as there is out there has to be guarded. Okay, so what we're doing is we're saying it's time to rebalance your portfolio, add, essentially, if you're doing, portfolio adjustments, this is the dip you want to buy. This is not hand over fist kind of stuff. We've sort of switched out of our low volatility stocks. They've done incredibly, incredibly well. We're adding a little bit more risk. We like the AI theme long term. We think what we've heard the last couple of days is very positive. But this is tempered because this is not an off to the races situation by any means.
Let's finish on this, a phrase we hear a lot of, wait and see. And yesterday we were asking, how long do you need to wait before you see? How much time have we actually got to wait for? To see whether this link is still well established between the soft data and the hard data. Because the soft data has clearly deteriorated. And as I said, I don't think that the chairman yesterday dismissed it, but I think he certainly downplayed it. How much time have they got?
Well, isn't that old saying April is the cruelest month only because we have to pay taxes in April? I think April is very, very important. It's very important. And if you think about the fact that the conflict in Europe and the conflict in the Middle East have, if anything, intensified in recent days, it's time to put some wins on the board. April is very important.
Lisa gets hers done in March, just so you know, Julian.
I do.
I know.
Is that actually early? I thought that I was kind of late.
I wish I was a March kind of guy.
Are other people like April 14th?
First week of April.
Really?
Like the day before?
Really?
Every single time.
But that gives me anxiety.
No, March is early. March is good. Good for you. Julian Emmanuel, above the court. Julian, good to see you. Equities, by the way, just erasing some of those gains from early this morning in the European session. Equity futures, as New York wakes up, taking a bit of a dive. We're down now by 0.25% on the S&P 500. We'll keep track of that. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Good morning, John. The Federal Reserve left interest rates unchanged for a second straight meeting, but President Donald Trump seemed to disagree with the move. In a post on Truth Social, he said the Fed would be much better off cutting rates as U.S. tariffs start to transition their way into the economy. The Fed's next meeting is May 7th. Ukraine President Volodymyr Zelensky agreed to stop hitting Russian energy assets as a first step toward a ceasefire with the country following a phone call with President Donald Trump yesterday. According to a statement on the call, Trump also offered to help run Ukraine's electricity and nuclear facilities, saying American ownership would be the best protection. And over to Canada, Canadian Prime Minister Mark Carney is expected to call a snap federal election on Sunday for an expected vote on April 28th. The Globe and Mail reporting the move comes as Canada's Liberal Party takes the lead in some public opinion polls on the back of Carney's rise to PM. That's your Bloomberg Brief. John?
Massive turnaround for that party in the last few months, that's for sure. Yahara, thank you. More from Yahara later on this hour. Up next on the programme, the T word makes a comeback.
I think that Chairman Powell was clear that if there were a tariff effect, that it's a transitory one, and that's in every economic model. I just think that the tariff effect is probably zero or negative.
That conversation up next with Rob Casey of Signum Global Advisors, live from New York City this morning. Good morning. Equity futures taking a bit of a dive here. We're negative by 1/3% on the S&P, taking a small bite out of yesterday's rally. This came from Stuart Kaiser of Citi. The March Fed pleases markets. It confuses us. Confused others too. This morning, maybe Stuart isn't confused. The Nasdaq is down by 0.5%. The Russell down by 0.5. Under surveillance this morning, the T word makes a comeback.
I think that Chairman Powell was clear that if there were a tariff effect, that it's a transitory one, and that's in every economic model. I just think that the tariff effect is probably zero or negative. We very much respect the independence of the Fed, and there's a massive literature that independent central banks perform better for economies.
So here's the latest this morning. The White House backing Fed Chair Jay Powell's call that the inflationary impact of tariffs could well be transitory. President Donald Trump going one step further, calling for the Fed to cut interest rates. Bloomberg's Tyler Kendall joins us now from the nation's capital for more. Tyler, welcome to the programme. Actually, on this issue, and it's a key issue, the Federal Reserve and the White House seem to be on the same page.
Yeah, John, at this point, looking ahead, saying that this might be short-lived impacts when it comes to the transition that this administration keeps pushing ahead. Important to note that President Trump has long said that he would like to have some sort of influence over those FOMC decisions, previously floating, for example, that he could have some sort of comment period, even as we hear his senior administration advisor saying that they do respect the Fed's independence. But really what's at the crux of the issue here is that Powell did say that we are already starting to see those tariff impacts on the economy and economic projections, and we haven't even gotten the full scope of the White House's plans yet. You mentioned it there, that Truth Social post. President Trump keep pushing us towards that April 2nd date where there are still so many questions about the scope and the implementation. In a bid to try to get more answers, I actually had my own chance to catch up with Kevin Hassett yesterday at the White House, and I asked him about the timeline for those April 2nd tariffs. How long will it take for us to actually see them go into effect? And he told me that the working assumption would be that those April 2nd tariffs would actually go into effect immediately in a bid to reduce uncertainty. Those were his words, as well as to get ahead of importers potentially front-loading goods into the country in between a tariff announcement and implementation. Of course, John, we've heard different things from different administration officials, including that this could be more of a rolling process over a few months. Kevin Hassett did add that that expectation he outlined to me was, of course, subject to the constraints of Customs and Border Patrol.
Tyler, he also recently said that he's been working with the Commerce Secretary and the Treasury Secretary with other countries to try to get negotiations done before April 2nd. What countries are they looking at?
Right, well, new reporting that India is apparently coming down when it comes to their own tariffs. But we know, according to our Bloomberg News reporting, that these tariffs could really be subject to how President Trump is viewing the negotiating process when it comes to countries being either cooperative or combative. And that is going to be incredibly important going forward. Just yesterday, President Trump ramping up his attacks again on how Canada has been approaching this process importantly. I did have the chance to ask Kevin Hassett also what sort of exemptions or carve-outs there could be. He said, again, that how the formula is going into effect. We are not expecting any carve-outs come April 2nd, and that when it comes to exemptions, it's really going to be based on how low those countries do end up putting their tariffs. And then, of course, the U.S.'s response would be reciprocal.
Hey, Tyler, appreciate the update. More from Tyler later on in the programme. Tyler Kendall down in Washington, D.C. With us around the table here in New York City, Rob Casey of Signum Global Advisors. Rob, good morning to you.
Morning.
Let's start with the good news and the bad news. The good news is that this Federal Reserve seems to agree with the White House that if we get an inflation bump, it will be short-lived. And you can see that in the forecast beyond 25, into 26, into 27. The bad news, I think for anyone trying to run the government, you never really want to see the Federal Reserve come out and downgrade growth forecasts and increase the outlook for inflation. What was your response to yesterday?
Well, I think yesterday what we read first and foremost, right, is that there just is this level of uncertainty. And so I think that the Trump administration is getting to April 2nd as quickly as they can, right, because they do want to set out a path for tariffs, essentially to allow markets, to allow the Fed to bake expectations in. The issue with that is the tariffs that they're talking about, reciprocal levels, about, tariff policy, but also non-tariff policy, things like VAT, it's going to be really hard to match those levels on April 2nd. So, great segment from Tyler, and it sounds like Hassett at least expects the tariff implementation to be April 2nd. We don't think so. It's just too quick a turnaround time.
How long do you think for the tariffs actually then to maybe we'll have the blueprint, but to actually be implemented?
Well, I think it'll depend country by country. So I think rolling is probably a good expectation, right? It'll first and foremost depend on the countries that are willing to bring their tariffs down, right? I think those will be potentially the first announcements that we see, right? There's this idea that it's not so much that tariffs will go into effect on April 2nd and then we will have negotiations. It's that the negotiations are happening now, right? And so whatever we hear on April 2nd, honestly, I wouldn't be surprised if the first truth we get on the morning of April 2nd is this is a win, right? Because we're not implementing tariffs on, say, India. Later on, I think we will see implementation more so across the board, but in particular on Europe.
So what you're saying is the negotiations are happening now. April 2nd is the day we get certainty, and then a few months later we'll get the enforcement?
Well, I don't know if we're going to get absolute certainty on April 2nd, right? I wouldn't want to be held to that. But I do think we will get a relative certainty as to what countries are going to be tariffed over the course of maybe the month after April 2nd, right? It'll be a question of these are the countries that we are now targeting, and we are working to implement certain levels per country.
Do you think that's going to concern the administration? Because the markets are going to view that as more uncertainty. We're just living in this paralysis.
Well, it hasn't concerned them so far, right? So I would say to expect full 100% clarity and certainty on April 2nd and to expect that we don't get movement after April 2nd is probably wishful thinking.
There's another sort of fly in the ointment here, which is what actually gets through. There are certain legal challenges that have been ongoing to a lot of what Trump has tried to do. And a number of the celebrations and the victories that President Trump has announced have been walked back or have had a little bit more of a complicated profile. How much of what we're going to see on April 2nd is going to be enactable in the short term, let alone the long term, just within the legal frameworks that there are?
Well, the executive has very wide latitude under IEPA, right, the Emergency Economic Powers Act. So I think for the most part, we could see some court challenges. But, I mean, IEPA essentially gives Trump all the leverage that he needs, all the power that he needs to enact these tariffs country by country. It may not give him the leverage to enact a universal tariff, right? But that's not what we're talking about.
Is there a recognition within the White House that it is important to create some certainty right now, given that everyone around the world is talking about uncertainty, and that word is the new drinking game? Is there a sense that this is actually becoming more of a problem rather than a feature?
Well, I think it's a problem for markets, right? But it's a feature when we're talking about Trump, if foreign policy, international policy, right? Trump is, he uses the idea that he's kind of this crazy man in the White House, I think much to his advantage, right? And it's not to say that his decisions or the announcements that he makes aren't rational, right? I think there certainly is a policy and a strategy behind them. But for countries to not know what his next move is, I think benefits him more than it hurts him.
When you say IEPA, though, that's a national security lever they need to pull. They're talking about, when they talk about messaging on tariffs, reciprocity. You can't use IEPA for reciprocity, or to Lisa's point, it will end up in the courts.
Well, I think it very well could end up in the courts. But the argument the Trump administration has made time and time again, right, is that the U.S. economy is being taken advantage of. It's being taken advantage of by allies. It's being taken advantage of by adversaries. And so I think that there is this sort of link between protecting the U.S. economy, protecting the U.S. worker, and, what we might more traditionally think of as being national security.
I know the spring's about to start. Blue skies. Can we take a more constructive view? What are the chances that the Europeans come out and say, I think we can make a deal here. We'll drop our tariffs on autos for you. Let's level things out. Let's do exactly what you want to do. What are the chances of that actually happening?
Well, I like the sound of that.
I love the sound of that.
And maybe on autos, there is, potentially a bright spot, right? But I think one of the major issues is the intractable concerns between Trump and the Europeans are not things that the Europeans are willing to give on, right? We're talking about CBAM, we're talking about steel and aluminum, Boeing, Airbus, digital services tax is another important one, right? These are things that the Europeans are ideologically committed to, equal and opposite the way Trump is ideologically committed to either removing them or punishing them.
Rob Casey of Signum Global Advisors. We're getting closer and closer to that April 2nd date, and I'm with you both. I think I'm with a lot of you watching this programme as well. Will we actually get any clarity on April 2nd? Because this might take some time. It might take a while.
We might get the rollout on April 2nd, but to Rob's point, the implementation might happen and the enforcement might happen weeks or months down the line. Remember, depending on how they enact these tariffs, IEEPA can be day one, but you go 232 or 301, there has to be a public comment period, and that can take a long time.
Something about what Rob just said really struck me, which is it's a feature for this administration to have uncertainty when negotiating with some of the countries around the world. It is a bug for markets. And at what point does some of the uncertainty in markets create something of a bug for the administration in some of the raw data coming out from the domestic sphere? And how do they expedite the timeline where it can be a feature for the international negotiations? It's sort of two separate wheels that are spinning at the same time.
The short answer, not yet. They don't seem to be too deterred by what's happening in financial markets, or for that matter, the economic data. And I'd go as far as saying the chairman agrees with them. Chairman Powell yesterday in the Federal Reserve pretty much echoed everything we've heard from the administration over the past few weeks.
With one exception, increasing the rate of unemployment, although they did talk about a level of uncertainty, and increasing inflation. And this also is something that they don't want to see, at least not this year.
A one-off bump. We'll see if it's a one-off bump. Equity futures right now, the S&P negative in this session lows. We're down by 0.7%. Up next on the program, Ed McMullen, former U.S. ambassador to Switzerland, on Trump's tariff policy.
How can optimizing our operations through AI and machine learning technology
help us continue to meet growing global demand?
How can utilizing cutting-edge technologies like the metaverse
help me get the resources I need to run my business efficiently?
By continually asking how, we're optimizing our drilling, exploration, and reservoir mapping operations to streamline processes.
Another day, asking how.
Another day, meeting your needs.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Equity futures here on the S&P 500, negative by 0.7%. We're taking a bite out of yesterday's gains. Check out the Nasdaq. We're now down by 0.8. Peter Cheer of Academy saying this yesterday. This year's dots seem to solidify. We're at 2 cuts max for this year, rather than at least 2 cuts. That may weigh on markets in the coming days. That's an interesting way to frame this. If you look at the dots and the distribution of the dots, we have moved from at least 2 cuts to maybe 2 cuts max. And Lisa, that's a shift.
There is a larger question of how much of a signal can we get from the dots. Some people could say that they still have 2 dots priced in, even with potentially higher inflation, is dovish. Other people say the fact that there are only 2 dots and that's the max is that somewhat hawkish. The takeaway is they don't know, but they are projecting higher inflation and lower growth, and that potentially is a problematic mix for risk assets.
We had this debate yesterday, and we could have this debate all morning.
We don't have to.
If you were on the Federal Reserve, we could. We probably should. Maybe for a minute. 60 seconds, 60 seconds.
Carry on.
If you're on the Federal Reserve and you put out those forecasts yesterday, would you have anticipated the equity market being up as much as it was? Because the former Boston Fed president, Eric Rosengren, was out on Twitter, X, just yesterday, and said that members of the committee saw more risk of upside to inflation and more risk of downside to growth. The market may have reacted too much to no change in the rate forecast, but the heightened risks are more consistent with stock market declines. There was some pushback to that bullish interpretation in yesterday's session.
Certainly, it sort of was a surprise to see markets rally the most for a Fed day going back to July. A question, though, from Amanda Lynham. How much was that already priced in? This idea of slightly slower growth, slightly higher inflation. We've already seen Wall Street firms from around the world really come out with that kind of projection. The Fed was saying the transitory aspect, and that probably was the biggest part of that, saying they're going to look through a one-time bump in tariff-related inflation, and that gave people confidence they're going to place more emphasis on downside growth.
Will this market look through it? Check out the bond market, 2-year, 10-year, 30-year. Yesterday, yields dropping at the front end of the curve. That continues, down another 395 at the very front end of the curve. But check out the commodity market. Lots of reasons for copper to be back through 10K. Gold, another all-time high in yesterday's session.
Watch this space. It is the hedge against absolutely everything, whether it's stagflation, whether it's central banks that are trying to diversify away from the dollar, whether it's something of a downturn when it comes to economic growth. And so for all of those reasons, people have been going into gold. At what point does that have to stop rallying for the risk asset rally to really get back up and going?
Gold just a little bit lower today. We're down by 0.7%. On our radar this morning, our top story for financial markets worldwide. Fed Chair Jay Powell saying the impact of tariffs may well be transitory. President Donald Trump going a step further, calling on the Fed to cut rates with reciprocal tariffs set to take effect on April 2nd.
So what's so interesting about this is exactly what Scott Bessent, the Treasury Secretary, told all of us around this table a month ago. He said, get the band back together. If Team Transitory wants to look at tariffs, that they should look at it as what it is, a one-time price hike. Something interesting, though, Jay Powell said yesterday, was that when you looked at the tariffs in 2019, things like washing machines had tariffs placed on them, but things like dryers didn't. Still, you saw prices elevate. And I think that's what they're concerned about. Whether or not that those individual objects, those individual imports have tariffs on them, the entire supply chain could get a one-time price hike.
That comment by President Trump didn't have a lot of bite behind it. And a lot of people didn't give it a lot of credence that suddenly, will he fire Fed Chair Jay Powell? That seemed to be off the table yesterday because it sounded like Fed Chair Jay Powell was taking very much a page, to your point, from Scott Bessent. It sounds like he had been having lunch with him every week, like they are wont to do. And he listened to what he had to say. He said, okay, let's get Team Transitory back together. The band is here. We believe you. We believe your projections. At a certain point, you have to wonder, are they out of the scrutiny now of the president and now under the hot lights of data that is very complicated? And that has to be the concern for markets.
We get more data later on this morning, 8:30 Eastern time for jobless claims. Let's get you the latest on foreign policy. The Ukrainian President Volodymyr Zelensky backing a ceasefire on energy targets with Russia. The agreement coming after President Trump spoke with leaders of both nations earlier this week. More ceasefire negotiations are expected this weekend over in Saudi Arabia.
So Steve Witkoff said this to us yesterday. He said the technical teams will be going there. Overall, it looks like there is this pathway to peace. When it comes to the technical teams, though, there's going to be a lot of different policies they need to negotiate, security arrangements they need to negotiate. Something I picked up yesterday off this readout. President Trump said he discussed with Zelensky electrical supply and nuclear power plants. And then Zelensky came out and said they're looking at Zaporizhia. This is Europe's biggest, most important nuclear power plant. It is in Ukrainian territory, but it's the Russians, since most of the war, that have had control over it. Potentially, this is where deals can be done. If the U.S. were to come in and say, we're going to be the ones that operate it, in essence, that would be in a security arrangement.
Can we make some progress here? We hope so. We're certainly making some progress on this front. Some more good news for the administration. NVIDIA looking to spend hundreds of billions of dollars on U.S. chip manufacturing. The CEO, Jensen Huang, telling the FT investment will ramp up over the next 4 years in an effort to shift supply chains away from Asia in the face of President Trump's tariffs.
Fascinating, especially because what he said is not only is it tariffs, but it's also a national security issue with respect to Taiwan. This from Jensen Huang. We know that we can manufacture in the U.S. We have a sufficient diversified supply chain. If any disaster were to threaten production in Taiwan, he said, it will be uncomfortable, but it should be okay. I just have to go back to this. How much is this a direct response to tariffs? And how much is this just girding for whatever increase in geopolitical tensions there are between China and the U.S. and what that could mean for Taiwan?
NVIDIA's down in the pre-market by close to 1/3 of 1%. Let's talk about those tariffs. Just 13 days to go until President Trump's threatened reciprocal tariffs go into effect on April 2nd, including a 200% levy on European wine, champagne and spirits. Ed McMullen, the former U.S. ambassador to Switzerland, joins us now for more. Ambassador, it's good to see you, sir.
Jonathan, good to see you.
Can we avoid the tariffs on wine, spirits and champagne?
I hope so.
What are the French telling
Tragedy, right?
I've been stockpiling.
You spend a lot of time in Europe, sir. Walk us through what they're saying to you, how they're responding, and maybe draw a distinction between what officials are saying and what business leaders are saying?
Yeah, I think it's very important because the reality is I was on a trade mission, a private trade mission over in Switzerland and Italy. And when you talk to the governments or you hear what the governments are saying, it's very different from what people are saying. Met with over 80 CEOs over the period of 5 days, 6 days. Without fail, every one of them has a long memory and they understand the history of where we are. 2018, 2019, Mr. Emanuel or earlier referred to this. We've been here before. We know where the president's coming from. He's been very clear on reciprocity and demanding reciprocity on tariffs. I think every single CEO who was in those rooms understands the reality. The economy rebounded in ways we've never seen. It was generational success. President Trump did it in 1819. Scott Bessent is an amazing asset for the president on the economy. He adds stability. He adds insight. And I think we're going to see an amazing recovery, just as we did in 18 and 19. And one, I think, that will be unprecedented.
I imagine you were very popular on that trade mission because I imagine every CEO wanted to know what can we expect on April 2nd. Do you think that it's going to be a sledgehammer when it comes to tariffs or a blueprint? Yeah,
it's a great question. I think, though, we can look at history. And President Trump is very predictable. He makes it clear what he's going to do, and he does it. Lisa just said this earlier. This is a clear message to the world that we're done being taken advantage of. Reciprocity is the key. What I told business leaders is your job is to make sure that your government, not the Brussels bureaucrats, but your government, sovereign nations, make clear where you stand on reciprocity. The Swiss, 99.9% of their products are not tariffed. They are reciprocal. The Italians, similarly, working hard to ensure reciprocity. Maloney, fantastic leader. She's dedicated to a relationship with the U.S. on trade like no other. These are two countries that I think are the shining stars of Europe. The rest of Europe that's following the Brussels bureaucrats are the ones who are going to have the problems.
Well, speaking of that, the president spoke to Breitbart yesterday, and this is what he said. The ones that wouldn't be as friendly to us in some cases treat us better than the ones that are supposed to be friendly, like the European Union, which treats us terribly on trade. So what are you saying right now, when we get reports that Kevin Hassett, Scott Bessent, Howard Lutnick are dealing with countries, it is on a bilateral basis, not the European Union as a trading bloc alone?
Well, I can't comment on what they're doing in a bilateral relationship. I can say this. In my experience, we have seen very clearly business wants there to be a bilateral conversation between sovereign nations because those nations independently have a message to give. The European Union as a whole is truly controlled by a group of bureaucrats in Brussels who have no clue what's going on back home 1,000 miles away in Hungary, in Poland, in Switzerland. This is where the bilateral relationship and the bilateral negotiations, and Jameson Greer, I have to say, is a fantastic guy. I worked closely with him while I was ambassador, does a great job. He worked with Lighthizer. He understands the president's message. We all understand there is a history here, a road path to success. Scott Bessent's laying it out. I think the president's laying it out. And I think we're going to see short-term, the same thing we saw in 1819, short-term challenges. But the terror of tariffs, I think, is more clickbait than it is reality.
When you look at history, though, we did see exemptions. We did see carve-outs. Do you expect that this time around?
I'm not quite sure where we're going with that. I think April 2nd will be a good indication on bilateral reciprocities. I think individual companies are critical. I know in Switzerland, where I was experienced, the average job is $130,000 a year. There are 300,000 of those jobs in the United States. We cannot risk those jobs and those investments. And I can tell you this, too. Those 80 CEOs, they know where the growth markets are. They're not in Europe. They want to be in the United States. They want to be investing. So I think they have been given an incentive by President Trump to once again help the recovery in the United States because as the U.S. goes, so goes Europe, so goes the world. And I think that's the real opportunity for these business leaders, and they know it.
From the business leaders who I speak to, the terror in tariffs isn't just some of the headline risk. It's the lack of understanding what the ultimate goal is.
Yes.
There's this question of bringing back manufacturing to the United States. There's a question about raising revenue to offset some of the tax cuts. And then there's a question of just trying to, create reciprocity and even things out that could potentially even lead to lower tariffs down the road. It just is confusing when you see some of the relationships with Canada. What did Canada ever do to the United States? And suddenly that's our biggest fight right now at a time where there potentially are bigger fish to fry.
Well, I think the president dealt with Canada and Mexico in the first term. And I think they've recovered from that, and they've gone in a different direction, and we're trying to bring them home. That's what President Trump's working on. And frankly, Canada actually on several fronts has got some issues that we have to deal with. The president's working on it. They're an important partner. They're on our border, as is Mexico. And I think the president's clearly shown that he's willing and really focused on making those relationships work. You go through difficult times in any negotiations to get to positive, right? And I think that's where we are right now.
What do you make of the timing of going at Canada at this point, before we have an election? Because I can imagine a scenario where if the Conservatives had won, and they may well still win. That election is at the end of April, reportedly set to take place. That snap election could be triggered by Prime Minister Carney later on today. The Conservatives were in a really strong position with a 20-point lead. Poilievre could have been the next Prime Minister of Canada, still could be. And he would have been a fantastic partner for President Donald Trump. You could have had this North American powerhouse that was going to deregulate everything around energy, low energy cost, accessible energy, etc., etc. And you've seen what's happened. This fight between Canada and the United States has started. Sentiment has shifted in Canada and the support has gone back towards the Liberals. How does that help the cause of the United States?
I had a great conversation with the former ambassador, President Bush's ambassador to Canada. And I can tell you from what I've heard is the real people back in the homeland in Canada, throughout Canada, they understand that the policies of Labour have really hurt them over the years. That's the fundamental reality. That's what we dealt with in this last election. Americans, many of whom have never voted for a Republican, came out and voted for President Trump. I think we will see similarly the same situation with the Conservative government in Canada, based on what I've heard from ambassadors who are there on the ground, who continue to work with Canada. Canadians love Americans. They travel here. They know we're a critical partner. And we go through ups and downs like any family.
Do you think we're risking that relationship?
Not at all. I think the president knows the importance of it. And I think it's time that the Canadians understand the importance of it. The Canadian government. The Canadian people understand it. It's the government, the leftist government in Canada, that has been the problem. It's the reason Canada has suffered the problems they have. And I think reciprocity is the key. That's what trading partners and neighbors do. They have reciprocity if they want free trade.
Ambassador, always appreciate getting time with you.
Jonathan, great to be with you.
To get a better understanding of the world. The former US Ambassador to Switzerland there, Ed McMullen. Canada in focus in a bigger way over the last few weeks.
They're booing us at hockey games. Although Ambassador McMullen is saying that the relationship, like any family, I guess it's like one brother booing another brother.
Do you get booed when you walk into the house?
I'm not a brother, but I have seen some really interesting antics at home. Look, there is this question about sequencing. There's a question about goal. There's a question about just how to go about doing it. I think that what remains to be seen, and what I think a lot of people are looking for on April 2nd, is what are the metrics needed to strike a deal? And right now, we don't have a sense of that. If that can be achieved, that could create more clarity.
Well, when it comes to Canada and Mexico, also, most people I talk to think this is just the beginning, opening salvo to bring up the negotiations of the issues that the current administration has with USMCA.
Trade very much in focus. Equities, by the way, softer here. We're down by 0.75% on the S&P. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here is Yahara Hackers. Hey, Yahara.
Hi, John. President Trump is set to sign an executive order this afternoon to dismantle the Department of Education. Sources telling Bloomberg the order will direct Education Secretary Linda McMahon to, quote, return education authority to the states. Elon Musk's social network X has raised close to $1 billion in new equity from investors. Sources telling us here at Bloomberg the company is considering using some of the proceeds to pay down its remaining debt load, and that even Musk himself participated in the deal. And Finland has been named the world's happiest country for the 8th straight year. The U.S. fell to 24th place, its lowest ever level in the global ranking. The study by the Wellbeing Research Center over at the University of Oxford is based on a 3-year average of a population's self-assessment of its quality of life. That's your Bloomberg Brief. John?
If you've ever met Alexander Stubb, the leader of Finland, you'd understand that. Always happy. Always in a good mood.
And he seems so healthy. He
right?
always, just.
I think he's a cyclist.
100%. They're all cyclists. They're all triathletes.
It's those Nordic countries.
Let's move to Finland.
Pretty impressive, isn't it? Up next on the program, Team Transitory gets the band back together.
It's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. I think that would depend on the tariff inflation moving through fairly quickly, and would depend critically as well on inflation expectations being well anchored.
Up next on the program, Ian Steely of JP Morgan Asset Management, live from New York. You're watching Bloomberg Surveillance.
can optimizing our operations through AI and machine learning technology
help us continue to meet growing global demand?
How can utilizing cutting-edge technologies like the metaverse
Help me get the resources I need to run my business efficiently?
By continually asking how, we're optimizing our drilling, exploration, and reservoir mapping operations to streamline processes.
Another day asking how.
Another day meeting your needs.
Stocks up 1% yesterday, taking some of that back this morning. Futures lower across the board. On the S&P, negative by 0.6%. On the Nasdaq, we're down by 0.8. Under surveillance this morning, Team Transitory gets the band back together.
It can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. And that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
So here's the latest this morning. Fed Chair Jay Powell downplaying tariff concerns, saying the inflation impact might well be transitory. Ian Staley of JP Morgan Asset Management writes, we believe the Fed will be able to respond with more aggressive rate cuts if the labour market falters, even with inflation still above target. Ian joins us now for more. Ian, welcome to New York. It's good to see you.
Thanks for having us.
I think you've nailed the most important point for financial markets right now. Are they constrained? Can they respond if the labour market data weakens over the next several months? What gives you the confidence that they can?
I think if you take a step back and think what happened back in 2018, the response was that they waited a little bit, and they probably waited a little bit too long, but ultimately they then reacted. And Jerome Powell was absolutely right. That was a period where inflation was transitory, where it didn't have a huge impact, and actually it was the growth and the labour market that was more critical to them. And I think that will be the case this time. And I look at it from the way, if you think about what they did yesterday, growth forecast revised down both years, inflation forecast revised up 1 year. Next year, they don't actually see much of an impact. So I do think they're going to look through it. And if they start to see really weak payrolls, that's when they're going to react.
I'm with Stuart Kaiser. I found yesterday deeply confusing and deeply contradictory because on one hand, they were talking about how they're downgrading growth and they're going to look through inflation. On the other hand, Fed Chair Jay Powell seemed to dismiss some of the soft data that indicates weakening, which suggests that they'll be late. How much do you have confidence that they could adjust that stance should some of the soft data start maybe being a little bit more consistent or bleeding into, on the margins, certain hard data points?
I think the way I looked at it was that I saw this as a Fed chair who actually is concerned about the economy. Like reading between the lines, I thought they were concerned about a bit of weakness going on, but they haven't got the evidence yet on the hard data to react to it. And I think what actually is quite clear is they just don't know, and none of us actually know exactly what's going to happen. They're in a really tough spot at the moment. And you think back to 2023, and we had the head fake of the soft data there showing signs of weakness, and it never fed through. So they're probably a bit mindful of that. But ultimately, if you do start to see hard data roll over, and it does typically take a few months, I do think they're going to react. So it's probably going to be more later this year that will be happening.
I understand why the front end of the yield curve rallied. I understand why people started to believe that maybe this Fed would respond to weakness in the economy. Why did that trickle into the long end of the yield curve? Why did people buy the idea that not only is this transitory, but the entire international story that we've been talking about of a relevering in Germany and in China wouldn't suddenly be relevant anymore because the Fed's cutting rates? Why is that sort of the logical conclusion?
But I think he made it pretty clear. They were going to focus on the growth aspect of things. He sort of dismissed all the questions around inflation. And if they were concerned around inflation, maybe that's the back end has to move a little bit higher. But if he's going to look through all of that, and then you've got the asymmetry where he talked about we're either on hold or we're cutting, that probably gives confidence to the bond market.
So this is basically the market believing him. This is the market getting back on team transitory. The market is getting back in the team transitory band. Is that what you're saying?
And I think that's right, because that's what happened in 2018. The last time we did transitory was the pandemic, and yes, that was wrong. But if you think about the pandemic, the difference there is we had positive growth and positive inflation. If you're having an environment of negative growth or a slowing in growth, then the inflation, we should be looking through that, particularly if it's a one hit from tariffs, and particularly if you start to see weakness in the labour market, because that ultimately will bring inflation down.
Powell referred to the tariffs yesterday as being tariff inflation, different from regular inflation. How do you decipher between the two?
I think it's difficult, and I think he actually said it's going to be difficult for us to exactly calculate what is tariff and what is just regular. And the problem, and the slight nuance that we've got relative to 2018, we obviously went into 2018 and inflation was below target. It's not at the moment. So again, that's something they just have to be mindful of over the coming months as they think about what they're going to be doing, because inflation was just at a worse place to start with.
Just to pick up on Lisa's line of questioning, let's sit on the markets a little bit more. Perfectly intuitive. Fed cuts rates, see a rally at the front end, got that, yields drop. That's what happened yesterday. Help me understand what happens to risk if the Fed is cutting because growth is deteriorating but inflation is still above target. How does high yield credit trade in that world?
So, like high yield credits, obviously, it's widened a little bit because of the growth. I think it depends how deeply we think these growth impacts are going to be. And again, that goes back to the problem that we've got, that Jerome Powell's got, is we just don't know. We don't know what's going to happen exactly on April the 2nd. We don't know how long this is all going on for. It's a very difficult argument. I think what we can say, though, is going into this, corporates were in really good position. They're very healthy, fundamentally looked very sound. And I think that's what you have to step back and think about. And yes, if you see a real deterioration in growth, of course, we're going to see some widening in credit spreads. But I still think there's this all-in yield argument that we've talked about a lot. You know, people like 7.5%. There's no question about that.
Saw that throughout the end of last year as well, coming into 2025. Let's just finish on this. Economic data later this morning, 8:30 Eastern time, we get US jobless claims. This feeling yesterday that the Federal Reserve and Chairman Powell reduced the importance of the soft data. I wouldn't say dismissed it, but we've said repeatedly through this hour, perhaps downplayed it. How important is the hard data going to be? Do we put additional weight on things like jobless claims? How do we trade on that information?
I think the hard data is really important, and I think actually the jobs market is probably the thing we really need to focus on, because if you do start to see weakness there, it's going to filter through to the rest of the economy. So hard data, jobs market, that's what we really need to be looking at.
More hard data a little bit later this morning. Ian Staley of JP Morgan. Ian, thank you, sir. Jobless claims, 8:30, Lisa, the one to watch.
If you get some sort of significant uptick, how much do markets really respond to that? And what is the response? Is it the belief now in a Fed put? Is it a belief that bad news is bad news? I am so confused because I go back to Stuart Kaiser. You look at a stagflationary mix and risk assets rally the most for any Fed day going back to July. Go figure.
He's confused. He's not alone. Up next on the programme, Evan Brown of UBS, Monica Guerra of Morgan Stanley, Mike Pyle of BlackRock, and the former Kansas City Fed President Thomas Hoenig. All of that and more in the second hour of Bloomberg Surveillance. That's just around the corner.
How can optimizing our operations through AI and machine learning technology
help us continue to meet growing global demand?
How can utilizing cutting-edge technologies like the metaverse
Help me get the resources I need to run my business efficiently?
By continually asking how, we're optimizing our drilling, exploration, and reservoir mapping operations to streamline processes.
Another day, asking how.
Another day, meeting your needs.
It can be the case that it's appropriate sometimes to look through inflation if it's transitory, and that can be the case in the case of tariff inflation.
The Fed is in a tough spot. They find themselves in the middle of an escalating trade war.
They'd rather stop short on rate cuts and wait for policy and to see how that plays out through the economy.
This just makes the growth backdrop all the more critical. That really has to hold up for risk assets to validate this move.
All they've told us is we don't know what's going to happen, and essentially, therefore, we are frozen where we are.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now, and we start with your scores. Equity futures declining this morning, taking a bite out of yesterday's big post-Fed rally. Equities down by 0.5% on the S&P, and the Nasdaq 100 down by close to 0.75%. We get more economic data a little bit later, 8:30 Eastern time for US jobless claims. The soft data, how dependable is the survey data? How important is the hard data now?
Well, right now we're hearing that University of Michigan is one outlier survey that no longer matters to the Fed, and it never really mattered to the Fed. And so in 2022, when you thought that it did, you were making it up. That's at least from Fed Chair Jay Powell's point of view. Look, if you get initial jobless claims tick up materially, how much does that re-engage the idea of the Fed cutting rates more quickly? That's one aspect of this. And then the other aspect is how much does that support risk assets at a time when you actually have slowing growth, and that could potentially be pernicious to the outlook for the United States?
I thought the T word was retired. I thought we got past that. I thought that was toxic in the halls of the Federal Reserve, but apparently not. It was implied by the forecast. If you open up the SEP, you can see it. A bump to inflation in 25, and then if you look at 26, 27, compare the forecast to where they were in December, exactly the same, no change. For this Federal Reserve, they're prepared to look through it.
They're prepared to look through it. Jay Powell called it yesterday tariff inflation, different from the regular inflation they've been trying to quell, using the same terminology that Scott Bessent, the Treasury Secretary, has been saying when it comes to tariff. They're transitory. Maybe they could have used a different word, brief, fleeting, evanescent, but they're transitory, and that the Fed should be looking through them if they want to have any credibility. This is what the Treasury Secretary said, and this is what Jay Powell said yesterday.
A dovish interpretation of Chairman Powell. Difficult not to have one in the news conference. I wonder how many other people on the committee share that view. If you look at the distribution of dots, if you really, really want to get into this, there's a hawkish skew relative to where we were in December. So when we get the Fed speak over the next couple of weeks, I think it could be very interesting to see how much daylight there is between certain officials and what we heard yesterday from the Federal Reserve.
Yeah, just how cohesive is that team transitory? Is it truly encompassing all of the Fed members, or is it a couple of key members at the very top who are happy to be having lunch with Scott Bessent? Look, I think that there is a real question here. I also think there's a great deal of uncertainty, and we have to keep coming back to this, that when someone asked him about the dots and why they didn't move based on some of the different forecasts, he said, well, what did you write down? I mean, what am I supposed to do? This isn't such an easy time. You come and do this.
I can't stand it when they do that. I've got to be honest with you. There is an arrogant tilt to some of the delivery that I saw yesterday. I have to say, we've got to call balls and strikes. I call it as it is. There was a sense of arrogance there. It's not their job. It's not the journalist's job to put out the forecast. It's the Federal Reserve's. It's why they can go out in several years' time and commission $800,000 for a speech. They have to make a forecast.
Putting aside arrogance, there is this point where they're telling you they don't have a clue. And I think that that is something that becomes very difficult for markets to know what to do with, because as much as we're trying to glean a reaction function, how dependable is it when ultimately the data could really profoundly change?
Deep breath, I'll settle down. Should have slept more.
Evanescence.
Yeah. She got out the thesaurus, didn't she?
I love this.
I know.
I'm sorry, but transitory an evanescent inflation. No.
Then call it fleeting or brief. We've already went through a transitory environment that many would say, like Mohammed Al-Arian, was a mistake for this.
This hour's going to be special. Equities right now in the S&P down by 0.5%. Coming up this hour, Evan Brown of UBS Asset Management following a Fed-fueled relief rally. Monica Guerra of Morgan Stanley with President Trump saying the FOMC should cut interest rates, and Mike Powell of BlackRock on why U.S. recession risks are overblown. We begin this hour with futures negative despite stocks seeing their best Fed day since July. Evan Brown of UBS Asset Management writing, Powell did what he needed to do, which was to keep a low profile and wait for more clarity on Trump's tariff agenda before sending a strong message on rates. Evan joins us now for more. Evan, good morning. Good to see you.
Good to see you, John.
As a fiery open to this hour, forgive us. Your interpretation of yesterday. Let's start there.
Yeah, well, I think Lisa nailed it by saying the Fed doesn't have a clue. None of us have a clue. We're waiting for April 2nd and the big tariff news, and it was the Fed's job to just say, okay, with the tariffs already in place, here's how our forecast has adjusted. But other than that, just do as little damage as possible. Don't pre-commit yourself to anything, because we just need to see what's going to come out on April 2nd. And so I think, you see the shift in the dots, you see the shift in the forecast, but really I think Powell gave a good press conference in which he probably used the word uncertainty 1,000 times. And that's the reality.
Because things are very uncertain, so you can't put too much weight on the forecast. But I do think this is an important exercise to learn something about the reaction function. How would they respond to certain scenarios? Do you have a degree of confidence that if we do get a deterioration in the hard data, if it follows the soft data lower, that they're able to respond by cutting interest rates?
Yes, strong conviction that's the case. We're very much of the view that, and I think Powell essentially shared this, that they seem more concerned, or I shouldn't say they, Powell seems more concerned about the downside risk to growth. And that's our view, too, is ultimately you get this one-off shock in inflation. That's going to weigh on real incomes. It's going to weigh on business hiring decisions and CapEx decisions. And ultimately, the Fed, once they just start seeing a hint of that hard data weakness, they'll be more inclined to cut. That's what we saw 2018, 2019. even though inflation is more elevated, I think that's the bias of the Fed, and I think that's the right one.
Which is the reason why I understand the reaction of Treasuries rallying at the front end. I really don't understand the long end. Basically, the market that previously had concepts of inflation being stickier and possibly even reaccelerating over the long term heard the transitory word, said, you got it, all right, we're in, and we're going to buy Treasuries. At what point is the fact that the Fed is going to cutting rates in the face of weakness potentially increase the risk of longer-term inflation becoming stickier, more entrenched?
It could. It's difficult. I mean, there's a lot of things going on with the long end right now. You've still got concerns about the budget deficit. You still got concerns about what's happening with a rise in rates around the world, particularly in Europe, and so that putting some upward pressure there. So I think you are going to see. We have more conviction that you'll see more of the action at the front end of the curve as the Fed shifts.
So is that what you're talking about when you say Treasuries remain a good hedge for risk assets? That it's really cash-like Treasuries, not necessarily long end.
Closer to the front end, yeah, that's our view.
What do you make of the rise that we've seen in gold? The fact that it hit a record high yesterday after the press conference, at the same time you did get some sort of rally in risk assets.
Yeah, I just think gold is, it's the perfect manifestation of policy uncertainty. I mean, yes, we've got what we all know is the steady accumulation by central banks around the world that are providing some kind of support there. But really, the one hedge for kind of I don't love using the word stagflationary because I think it exaggerates the situation that we're in. But an environment where you have slower growth and where you have stickier inflation, gold has proven to be the most dependable hedge in that scenario. And gold just continuing to rise in this environment reflects still that growing uncertainty and reflecting an uncertain Fed yesterday.
Do you think you'll be less uncertain after 13 days after April 2nd?
That's the thing. We would hope so, but we really don't know. We'll get a lot of announcements, but how much is the administration going to implement tariffs right away versus say, okay, we're going to have this review period and we're going to leave time for negotiation? How much of it is going to be based on these reciprocal tariffs being based on tariffs versus non-tariff barriers? And the reality is, it does not seem like the U.S. Trade Representative is adequately staffed up for the complexity of all of the things that they're going to need to do to actually make reciprocal tariffs work. So my concern is that we go and we have this event and a lot of the tariffs are announced, but we don't know what's actually really on and what's not, and it's going to take time, and that's going to prolong that uncertainty for businesses. Which I think is another reason why we kind of lean into bonds. Is I think these headwinds are going to stick with us for a good part of the year.
If we're more uncertain even after April 2nd, and there's basically businesses saying they're going to be on pause, then would you view the Fed as really leaning into the fact that they're concerned about growth and less about inflation?
Yeah, I think so. I mean, look, we're talking about soft versus hard data. I do think you're going to need to see some weakening of the hard data beyond what we've seen so far. It's been very modest to get the Fed really moving.
Will they then be behind the curve, though?
They could end up being like a meeting or two late, but I think in the end of the day, if they're a meeting or two late, that means they're doing 50 basis point cuts later this year if things are getting really bad.
I want to congratulate you. You were early on pro-China and talking about the China trade and international trade. I'm just wondering whether you're closing that out, whether you think that that's basically had its run, and now you're starting to pick up the pieces in bonds and gold.
Yeah, so we've had bonds this year. We've had gold for a good part of the last year, and then we've had this international exposure in China and Europe, and that fortunately has worked out well. I think the speed of the move at this point is getting us to say, okay, it's time for a little bit of a break. I mean, you look at European banks, they're trading like a meme stock right now. It's like 35% up year to date.
Can you translate taking a break? What does that mean?
What I would say is, some consolidation. We kind of move sideways a little bit and would not be surprised at all with with tech and Mag 7, which have taken an absolute beating, if we get a little bit of rotation back into there, over the next few months. But I do think the structural theme is going to be more towards allocators moving, away from the U.S. and just seeing better opportunities. Look at Germany. We've been waiting for this fiscal stimulus to get unleashed for a long, long time.
Decades.
It's finally done. I think that theme has something to run. And so, we expect over the course of the year and coming years, more allocation into international markets, getting a lot of questions about it from clients. I think U.S. investors have a very, very long home bias. And it's been a wake-up call over the last few weeks. And so, I think you'll see more allocations into international.
I know how that pitch has gone for strategists for the best part of a decade. They say you need to diversify, you need to buy international, and they just go to, whatever. I think that's started to change over the last few months.
Yeah, that's what we heard yesterday. And we were talking about how there's nothing better for an advertisement, an educating lesson than saying, look, it's trading like a meme stock. You might want to get in.
Evan Brown. Good to see you, sir, as always. Thanks for being with us. Evan Brown of UBS Asset Management. Plenty of feedback on the Fed decision yesterday. Appreciate all the incoming emails. This from Kit Jukes of SocGen. Central banks are flying in the fog without a radar. That seems to be how you feel this morning.
Well, yeah, and it's really frustrating because it's hard to say anything particularly insightful about flying in the fog with blinders on, and that's essentially what they're telling us. So at this point, how can we understand what the reaction function is? And I'll add to this. Who's going to be at the head of the Federal Reserve by the beginning of next year at a time when potentially they're facing a pretty complicated mix of data?
Is that a question? Because I can't answer it.
Okay, who?
I can try. I can tell you who'd like to be.
Okay.
He's the guy who dissented.
Right. Yes, about the balance sheet. So this just raises a question. What is his name rhymes with Solar?
I think we could just say it. Governor Waller's put a bit of daylight between himself and the committee. And Governor Waller's been able to stick his neck out on a few occasions. And we saw that with tariffs, by the way. So he was the first one to come out and say, I don't think this tariff policy issue is going to be inflationary. And then you saw the rest of the committee start to follow, based on the communication we got from Chairman Powell just yesterday.
Yeah, it just raises another layer of uncertainty. If there isn't going to be continuity at the leadership of the Fed, can we really rely on a reaction function for being longer lasting than, say, the remainder of this year?
And once Bowman got Barr's job, Waller was nominated by President Trump in a first term. That's got to be the favourite right now. It's got to be the favourite right now.
Housewives of Washington.
We'll see. These things can change. Equities at the moment softer. We're down by 0.4% on the S&P with an update on stories elsewhere this morning. With your Bloomberg brief, here's Yahara Hekes. Hey, Yahara.
Hi, John. India will be included in President Trump's reciprocal tariff slated to take effect on April 2nd. In an interview with Breitbart, Trump said the country is, quote, one of the highest tariffing nations in the world. To try and avoid tariffs, India had lowered duties on imports of some American-made products and even agreed to buy more energy and weapons from the U.S. Meanwhile, NVIDIA is reportedly planning to invest hundreds of billions of dollars in U.S.-made chips and electronics. The Financial Times reporting NVIDIA will spend about $500 billion in the U.S. over the next 4 years. CEO Jensen Huang telling the FT NVIDIA can manufacture its latest systems in the U.S. through suppliers like TSMC and Foxconn. And copper prices topped $10,000 a ton earlier. They are now a bit lower. The rally comes after President Trump ordered the Commerce Department to investigate U.S. imports of the industrial metal last month as a likely precursor to imposing levies. Since then, U.S. prices have spiked and traders have scrambled to send the metal to America ahead of any tariffs. That's your Bloomberg brief. John?
Hey, Yahara, thank you. Tariffs front and centre. This data point out of Canada just moments ago. Small business optimism in that country collapsing to a 25-year low. Just some of the data points you're seeing in response to the policy changes.
Yeah, Canadians care. They care a lot. And this has become a real issue. And we've heard that from the Bank of Canada themselves, saying that we cannot see exactly how we're going to progress because of uncertainty. And we heard the same thing from the Riksbank and the SNB overnight.
Another data point, if you are just joining us, small business optimism in Canada collapsing to a 25-year low. Up next on the programme, same question, same answer.
President Trump fired 2 members of the Federal Trade Commission. If those firings stand, is that a threat to the Fed's independence?
So I think I did answer that question in this very room some time ago.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Nope. Monica Guerra of Morgan Stanley joins us next. Live from New York City this morning. Good morning.
asking how. We're creating real opportunities for women.
Another day asking how. Another day pushing the boundaries of my potential.
A softer session today. Equities down in Europe on the DAX were lower by 1.4%. No positive follow-through over in the United States either. Here stateside, equities softer. We're down by 0.4%. On the Nasdaq 100, we're down by 0.5%. Under surveillance this morning, same question, same answer.
If those firings stand, is that a threat to the Fed's independence?
So I think I did answer that question in this very room some time ago, and I no desire to change that answer and have nothing new for you on that today.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
You've got to always have a follow-up question ready for these guys, just in case they go short. It's like a nightmare for any journalist. Like, no. Oh, no. What do I ask now?
I actually feel for her. And frankly, they're like, I could completely
Can you expand upon the no?
Yeah.
No.
He played that game yesterday in the news conference, too, a few times with various questions. Fed Chair Jay Powell reiterating he's not concerned about President Trump's threats to Fed independence. Trump pressing the Fed to cut interest rates later on in a post on Truth Social last night to cut interest rates and embrace Liberation Day on April 2nd. Bloomberg's Tyler Kendall joins us now from Washington. Tyler, we talked about this briefly. Just how much daylight is there between the Federal Reserve and the White House?
Well, John, at this point, it appears that they are on the same page when it comes to there being a potential short-term inflation bump due to tariffs. And Jerome Powell saying yesterday that he does believe that those long-term inflation expectations are well anchored. However, when it comes to the growth forecast, it does appear that this White House is taking some issue with that. Kevin Hassett yesterday telling reporters that his forecast is 2.5% GDP growth for this year, of course, differing with what we saw from those FOMC projections. Now, just to go back to the bite that you played at the top there, we should note that while President Trump has previously criticized Jerome Powell, particularly back in November, heavy criticism about how the Fed was cutting rates close to the election, he has said that he does intend to let Powell serve out his term. And we have heard from this White House that they do respect the Fed's independence. Going back to Kevin Hassett yesterday, who, by the way, last month did reveal that he was having regular meetings with Jerome Powell. He says that at this point he has no intentions to cherry pick the Fed chair's statements.
Hey, Tyler, appreciate the update. As always, Tyler Kendall there in Washington, D.C. With us around the table to extend the conversation, Monica Guerra of Morgan Stanley. Monica, good morning to you. Let's go to the president's post on social media yesterday. Liberation Day is April 2nd. How are you describing April 2nd for clients? What's going to change? What's going to remain the same?
I think it's going to be, a will you or won't you moment. We're essentially have to take the lead from Lutnick. And what he's made clear is that all of these reciprocal tariffs, could either go into effect or not. And that's sort of the big driver, right, of all this policy uncertainty. And so we're trying to sort through that with our clients and essentially keep them really focused right on those long-term, investing goals, et cetera, but also try to look through potential tariff risk and highlight different industries and sectors that could be insulated from potential changes.
So what industries, sectors, and countries specifically are you focused on?
We're looking, obviously, at China. How far can they go with China, I think, is the question right now. People forget that under the Biden administration that he kept ratcheting up tariffs with China. And so, yes, these are new tariffs with Trump, but it is an extension of that 2018 policy. So how far can you go there? Look to see what's happening with India. Obviously, Mexico and Canada, we think that there's, less of a risk for long-term tariff ramifications there just because of how closely our supply chains are integrated. But when you're thinking about industries that are insulated, it's utilities, real estate, financials in some cases. And so for us, those are the areas that we're looking at. And some of those areas are actually also beneficiaries of potential deregulatory policy. So once we actually move past downsizing, cuts, tariffs, all of this, austerity, I think the narrative will eventually change.
You mentioned India, and the president mentioned India yesterday in this interview with Breitbart, and he said they're going to probably be lowering those tariffs substantially. On April 2nd, we'll be charging them the same tariffs they charge us. Do you see this period right now as the negotiation? Because Kevin Hassett said he's working with Commerce Secretary Lutnick, Treasury Secretary Bessent, now with countries to try to see if reciprocity could be reached.
Yeah, and that's what essentially that's what they're doing over this period. They gave us that April 2nd deadline, and we'll have more news, right? More shall be revealed on that day. The thing for me when I'm thinking about fiscal policy and budget, what people forget is that they're planning to use tariffs as a big offset. And I've talked about that on here before. But what that means is that there is going to have to be some certainty before they get a budget across the line. So when I'm talking to clients and thinking about market volatility as it relates to policy uncertainty, we do think that that'll likely continue through the summer, but that August through that October period where they have to get things locked up, they're going to have to make hard decisions and account for where the tariffs are actually going to be levied. And so we'll have more certainty then.
This is something that Tom Becker of BlackRock raised, this idea that people think that the U.S. is practicing fiscal restraint right now, but that's not actually what's going to happen. And later this year, you could actually see fiscal expansion, and we're just seeing the offsets to what that could look like later on. Do you agree with that? Are we going to actually still see fiscal expansion in the United States at the same time that we get fiscal expansion in Germany and fiscal expansion in China? Everyone's exceptional in a new fiscal expansionary world.
I think that you get fiscal expansion in 2026. So if you're thinking about legislation and what can get done this year, it's all about that budget bill. So it is going to be a restrictive policy. Now, at the same time, where you get growth is from that deregulation activity that's happening in the background. So those two things are going to offset each other, but it doesn't necessarily mean the same type of fiscal, expansion, the fiscal tailwinds that we've seen. 2026 is when I think, I keep saying, they're going to turn the spigot back on, because what is the job of Congress? It's to manage interstate commerce, look at the tax code, and spend. And so that is what they're going to go back to, right, is what they do best, right? And that's what they do under any administration. And so this is a point in time moment, and then we're going to go back to business as usual.
And based on the debt pile, what they do best is spend and spend a lot. And then a whole lot more. Monica Guerra of Morgan Stanley. Monica, it's good to see you, as always. Surprise coming into 2025 wasn't US policy. It was how everyone else was planning to respond to it. We started to see that from Europe. I think we've got to ask more questions about how Canada is going to respond to this as well. So the Globe and Mail reporting today that the Prime Minister Mark Carney is set to call a snap federal election on Sunday for an expected vote on April 28th. We'll see if we get a final decision from the Prime Minister later on over the next several days. But it's interesting to see how the data is already turning in places like Canada. I mentioned this briefly if you are just joining us. Small business confidence dropping to a 25-year low in that country, pushing potentially Canada to respond as well.
Especially at a time when you're talking about 25% tariffs, and you're talking about severing a relationship that has been like a family at a certain time, that you don't have a sense of what's going to potentially replace it. You can understand it. So you get a fiscal bazooka there too. Everyone's doing it. Why not?
Not everyone can do what Germany's trying to do. Not everyone has the fiscal space.
Can everyone do it at the same time as well?
With great difficulty potentially for this bond market. Mike Pyle of BlackRock on why recession fears are overblown joins us next. From New York, this is Bloomberg.
How can the opportunity to accelerate women's professional development
help me become a leader in my industry?
How can being part of a growing cohort of female innovators
help me be a role model for my children?
By continually asking how,
we're creating
real opportunities
for women.
Another day asking how. Another day pushing the boundaries of my potential.
Nice rally yesterday. We take some of it back this morning. Equity futures negative by 0.5% on the S&P. On the Nasdaq 100, lower by about 2/3% on the S&P 500. 2 hours until the opening bell. Let's get you some morning movers. Here's Yahara Hacker. Say Yahara.
Hi, John. We start with Stellantis falling 3.7% here in the pre-market. This is after its chairman said tariffs are a risk to its future car production plans in Italy, even as the company makes big investments there. But also weighing on this stock is a downgrade by the team over at Piper Sandler. The analyst is warning that all automakers except for Tesla, should be avoided. Next up, we have Five Below shares. Those are soaring here in the pre-market, up nearly 10% after the discount retailer issued a better than expected outlook. It's interesting to see it rising so much because the company did say it expects tariffs to weigh on margins. That's because 60% of its products come from China, but they say they are trying to mitigate this by raising prices, but of course, keeping them below $5. And last up, we have Darden Restaurants. Those shares are falling slightly, about 0.6% after the company behind Olive Garden just reported results. Third quarter sales missed estimates, and looking ahead, it maintained its guidance. Of course, it'll be interesting to hear what executives have to say on the call about the consumer, since we did see restaurant spending fall in the latest retail sales report. John?
It was a soft part of the report, that's for sure. Yahara, thank you. More from Yahara later on this morning. On our radar this morning, President Trump saying the Federal Reserve should cut interest rates as he prepares for a fresh wave of tariffs, posting on Truth Social, quote, the Fed would be much better off cutting rates as U.S. tariffs start to transition their way into the economy.
You know, normally, I remember a couple months ago, if President Trump had messaged this before he was inaugurated, people would have gotten very concerned and said, oh, my gosh, he's questioning the independence of the Federal Reserve. It seems like there's been a bit of a coming together, frankly, of Fed Chair Jay Powell and certainly Treasury Secretary Scott Bessent. And a lot of what Fed Chair Powell said yesterday can't be that offensive to what the White House is saying. So even though he put this out there, I don't feel a lot of outrage on Wall Street, you know, saying, oh, my God, this is going to
because you're desensitized.
Exactly.
You think so?
It was only a matter of time. He said that he thinks he knows, has a better feel of where rates should go. He's a real estate guy than even the Fed. He's like, I know I can't dictate the policy, but I certainly have an opinion, and I'm going to share it. And that's what he did. He shared his opinion. I would say if the president's watching this morning, maybe the Fed could cut rates when he has more certainty on where policy is going. And for that, we need to wait 13 days for what he is calling, quote, Liberation Day in America.
I am desensitized. Isn't that the point?
Everyone is.
That's kind of the point of this whole thing, no?
We've heard it so many times that it just doesn't carry the same weight that it used to. People used to freak out about this in the first term, and now it's just like, yeah, here we go again.
People used to freak out about a lot of things, and now people are just sort of like,
I was more surprised about how late it came. Like, I woke up to that, and I went to bed thinking, weird, we didn't hear from the president.
You were expecting a live blog in the news conference. I think we all were. Equity futures right now just a little bit softer. More on the Fed in just a moment. I want to get an update on foreign policy. President Trump telling Iran's supreme leader he has 2 months to reach a new nuclear accord. Sources telling us here at Bloomberg, Trump laid out the deadline in a recently delivered letter as he increases pressure on Tehran.
This is a story I had yesterday, this letter that went via the UAE to Tehran. Trump is saying you have 2 months. This is a carrot and stick approach. There's an overture saying maybe we can make a deal. At the same time, we see maximum pressure coming back on Iran, potentially even more sanctions, but also we see what's going on with the Houthis. Basically, the message to Iran is stop with not just nuclear, but also the money that you are funding to proxies like Lebanese Hezbollah, Hamas, and the Houthis.
That's the latest on foreign policy. Elsewhere, the White House is considering extending Chevron's license to pump oil in Venezuela, reversing a recent push to have the company wind down operations. The Wall Street Journal reporting the U.S. will still impose penalties on other countries doing business there. Mike Wirth of Chevron was in the building, in the studio with us a number of weeks ago. We talked to him about this. This was always going to be on the radar of this administration.
It sounds like he's been spending a lot of time in Washington, D.C., lobbying them to explain that if Chevron gets out, guess who gets in? China. Guess who ends up buying some of this oil? And it creates this real pressure. If you do want to create some sort of isolation and to have a geopolitical negotiating tool, how do you do it in a way that doesn't advantage some of your potential opponents in other potential strategic ways? And this has been something that has been an ongoing challenge.
That's the latest reporting from the Journal. Let's turn back to the markets. Stocks just had their best Fed day since July after Fed Chair Jay Powell says tariffs' impact on inflation might be transitory. Mike Powell of BlackRock writing, while negative stock-bond correlation has re-emerged, we do not believe it will persist. With sticky inflation, tariffs and significant U.S. fiscal deficits, the Fed faces challenges and term premium will come under pressure. Mike joins us now. He's also the former economic advisor to President Joe Biden. It's good to see you, Mike, as always.
Good to see you.
Should we start there? How does it feel? Does it feel good? Have you shaken the Washington, D.C. off? Do you feel better about it?
I've got a spring in my step. Happy to be back in New York and happy to be with you.
We can get into the markets in just a moment. I'd love your assessment of where the economy is and how these policy changes might influence where the economy goes in the coming quarters.
Yeah, I mean, certainly I think we're in the midst of a pretty significant set of shocks. So obviously, trade policy uncertainty, both the magnitude of it and the uncertainty around it. Certainly, I think some slowdowns more broadly in the data. The flip side is, the United States is a very dynamic, very resilient economy. And I think what you heard from the Fed yesterday is while these shocks are significant, while growth is likely to come down, while inflation in the short term is likely to move higher, still there's a kind of underlying strength there that's going to see growth through.
When it comes to tariffs, all the players. Obviously, you weren't not in the Trump administration, but you know who they're dealing with on the other side. Do you think we get to a place where it's methodical reciprocity?
So I think what we've seen from other countries is, a likelihood that, this negotiation is going to play out in the backdrop of not just tariff announcements from the United States, but threats of retaliation from others. And I think that, I think one of the big questions as we roll the clock forward over the next 3, 4, 5, 6 months is, not just where do U.S. tariff levels end up, but where do other countries end up with their tariff levels? To the extent that, deals are possible, negotiations can reach some kind of resolution that ends up with tariffs perhaps lower than what gets announced on April 2nd on both sides. I think that's going to be ultimately a world that's healthier for growth and inflation globally. I also think at a minimum, as we roll the clock forward, we're going to get more certainty, and that's going to take some of that uncertainty discount off of economic forecasts as well as markets.
But if there's this reciprocal tariffs and then there's the hit back, the tit for tat, do you think there's a chance you can tip the United States into a recession? Powell said it's moved up, but it's off the table for now.
Yeah, like I said, I would just echo, Chair Powell. The shocks that we've seen are significant. We're going to see significant shocks. That's going to lower growth. That's going to mean, at least in the short term, higher inflation. But that the underlying momentum, the underlying dynamism, the underlying strength of the U.S. economy is, quite significant, and that's hard to turn around.
You might agree with the Fed on that front. I get the sense you're not exactly joining the band yet of transitory. You're kind of on the sidelines saying, I'm not sure that that's actually the case. And you made a point about you're not totally buying the long end rally that we're seeing in treasuries. Can you talk a little bit about what you're seeing that makes you disagree with the Fed's assessment that we can resurrect this word transitory?
Yeah, so I think that, that when you look at the long end of the U.S. curve, yes, we've seen a rally over the past couple of weeks as these growth scares have worked their way into the market. But looking out over the medium term, inflation does look somewhat stickier. And obviously, we're going to have a shock on that in the short term. I think fiscal deficits are likely to be persistently high. And, when you face a backdrop like that, I think you do see pressure on term premium built up, particularly from the starting point we're at today. And that means that bonds are going to be less strong as diversifiers kind of rolling ahead as they have been the last 2 or 3 weeks and as they were, during the 2010s. That means that investors are going to have to seek diversification in other places, whether that's managing fixed income in different ways or seeking uncorrelated sources of return that can provide that diversification.
Where do they find those uncorrelated sources of return? And I'm so pleased you've brought up this topic because I've lost count of how many times we've asked this question over the last few weeks or so, haven't we? We've gone back and forth on this. Are we seeing a reduction in risk mitigation characteristics of treasuries? Over the last few weeks, I think slowly you've started to see some evidence of that.
Gold. I keep thinking gold. Are you just going to gold? And is that the reason why you see it keeping on rallying?
Yeah, I think that exactly to your point, John. Obviously at the beginning stages of the pullback, you saw really strong reactions from the Treasury market. That's diminished as we've gotten kind of deeper into this period of volatility. I think that's a harbinger of what's to come. At BlackRock, one of the things that we would say is you should, seek diversification from things like stable long-term cash flows that are less growth sensitive, that are more inflation sensitive, places like infrastructure. The thing that we really look at are things like, our quantitative multi-strategy hedge fund, built on the back of 40 years of innovation and leadership. They've come through this period generating solid alpha. And what it proves out is, having a range of different strategies, a range of different ways of generating alpha. And in this environment in particular, what's worked is, strategies that are primed in market reversal periods, strategies that provide liquidity to segments of the market across asset classes that can generate alpha even in the face of market dislocation. And that's what investors are looking for.
John, that's not nearly as sexy as gold. multi-asset, diversification, steady cash flows.
But, they've got things to sell here, Lisa, not just gold bars.
I know, exactly.
Private markets, infrastructure funds, all of those kind of things. I'm not throwing shade. Total respect for the position. The answer used to be bonds, used to be German bonds. And obviously that's not the answer anymore. How have things changed in Europe from your perspective?
Yeah, so I think it's actually a really interesting moment in Europe. I think the debate within the firm is this a trade or is this a more durable investment? On one hand, obviously, Europe, Germany has stepped forward with a set of fiscal policy changes that, as far back as when I was in the Obama administration, we were calling for. That is really tremendous to see. But I think that among the bellwethers that we're looking for is this going to be coupled by changes in the regulatory environment? The Draghi report talked a lot about the degree to which Europe remains uncompetitive in the technology sector, the types of spaces that really drive innovation and growth. If we see a turning of the page there, that might be, a precursor for a much more durable European trade over the long term and take it from just a 3-month, 6-month trade to something much more long lasting.
I'm sitting here smiling. I've known you a while. It's nice to hear you talk about markets again. It's been too long. It's nice to have you back in this seat. I want to finish where we started. How are we going to make sure that talented individuals keep going down to Washington, D.C. to do the kind of work that you did, that Dalip Singh did, that Wally Adeyemo did? How are we going to make sure that continues?
So, I think when I look across, a number of friends that I've had who've served not just in, Democratic administrations, but Republican ones. I think to folks like, Justin Musnich, who was the number 2 at the Treasury Department under the first Trump administration. I look into this one and see, really thoughtful, qualified people as well in important pockets of that administration. I think that the call to service is a strong one and the call to deliver for the country is a strong one. And I expect that we're going to continue to see that across administrations of both parties.
I hope that remains the case. Mike, it's good to see you. Mike Powell there of BlackRock. We've talked about this before. Really talented individuals that we see on both sides of the aisle. In this administration with President Trump, we spoke to Secretary Bessent about that, in the previous administration as well. That's what you want to see. You want to see the best of America still going down to Washington, D.C., and I hope that remains the same.
I'm smiling because that sounded like you're running. No, I'm kidding. I'm not going to do that to you. I'm just thinking to myself, though, that is what I've heard from a lot of people, that the call to service is one that you answer. And you do just hope that continues through the years, especially through the turmoil.
Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, here's Yahara Hackers. Hey, Yahara.
Hi, John. Hamas says talks with mediators to halt Israel's ground incursion in the Gaza Strip are ongoing. The operation is seen as a response to Hamas's refusal to release the 59 remaining hostages. This comes as Israeli Prime Minister Benjamin Netanyahu says a larger front of the war could open up in the West Bank. Meanwhile, the Ontario Teachers Pension Plan is shutting down its Hong Kong office. Sources telling Bloomberg it's trying to reduce its China exposure amid rising geopolitical tensions. In a statement, the fund said its Hong Kong office will be wound down over the coming 18 months without giving a specific reason. And California Governor Gavin Newsom has been mailing cell phones to CEOs of the top 100 California-based companies with his phone number programmed into the contacts. Newsom's office said he's been doing this since November in an effort to connect more directly with business leaders in the state. That's one way to do it. That's Bloomberg Brief. John?
Yahara, is that story for real? That is absolutely unbelievable. More from Yahara a little bit later. Did you hear that?
Yeah, I don't know why you would need to send CEOs
a phone with your cell phone number in already.
But you're the governor, so everyone should be taking your call, no? Unless you're too busy maybe doing a podcast.
Which he's been very busy doing, which I've listened to, which wasn't too bad, to be honest with you. I know a lot of people have criticised it, but I don't think it was too bad. The one with Charlie Kirk was the first one, right?
That was the first one. I've seen rollouts of it on Twitter, the second hand that made it Twitter, but I'm not
watching him slowly become conservative in that first one. Anyway,
he was convinced by the end of it that he was almost
very quickly
agreeing with Charlie Kirk.
Up next on the programme, Team Transitory gets the band back together.
It's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. I think that would depend on the tariff inflation moving through fairly quickly, and would depend critically as well on inflation expectations being well anchored.
Up next on the programme, we'll catch up with the former Kansas City Fed President Thomas Hoenig. From New York City, this is Bloomberg.
By continually asking how, we're optimizing our drilling, exploration, and reservoir mapping operations to streamline processes.
Another day asking how.
Another day meeting your needs.
So here's the state of play. Just a little bit more defensive this morning. Equities negative by 0.4% on the S&P and bond yields down by 4 basis points. The 10-year getting away and breaking out of that range. The 10-year down to 420 so far this morning. Under surveillance this morning, Team Transitory gets the band back together.
It can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. And that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
So here's the latest this morning. The Fed Chair Jay Powell alleviating tariff concerns, saying the levies might only trigger a one-time price hit. We can lean on the expertise and experience now of the former Kansas City Fed President, Thomas Hoenig. Thomas, welcome back to the program, sir. We'd love your assessment of yesterday. It was a three-part act, the decision, the news conference, and the new projections. How would you summarize things?
Well, I think, number one, yesterday was not a surprise to anyone. Everyone knew that they were going to hold constant given the level of uncertainty. I think also for me, it was not at all surprising that they backed off quantitative tightening, bringing it down from 25 billion to 5 billion a month. And that reflects their concerns about liquidity in the market, given the uncertainties that the tariff brings on, that the fiscal situation brings on. So they did, in fact, ease relative to their quantitative tightening program. And I think that's important because that brings liquidity into the market. So no surprises from my perspective. I think, right now, everyone's talking about the tariffs. That probably is one time, depending on so many things. Whether we really get in a trade war, tariffs trade war, that could extend it and make inflation more difficult. The other thing that no one's talking about that I think is every bit as important is the fiscal situation. Our debt is going to go up again. That's a big deal in my mind relative to what the Fed will do in the future.
So hold on a second. It sounds like, Tom, you don't necessarily buy the idea of transitory inflation on a wholesale level, maybe with respect to tariffs. But on a broader level, you think that it's not quite the same argument that inflation wholesale is as transitory as maybe it otherwise would be without that kind of deficit overhang. Is that correct?
That's what I'm saying. There's a risk here. Number one, think about it. We have huge debts coming forward. If we get through the transitory tariffs, that would be fine. But we're going to spend a lot more money again as a nation. The Fed's going to have a lot of pressure from this administration and from the economy more broadly to monetize some of that and to help the banking industry monetize that debt that's going to be coming on board. That should put inflationary pressures up higher. And number two, remember that they keep saying that policy is restrictive, but real interest rates are in the 1.5% range. That's not particularly restrictive in historical context. So I don't think we should be all that sanguine if we get through this tariff that we're home free. We'll see. I hope we are, but I have some reservations, yes.
It sounds like you disagree on several fronts with some of what the Fed put out yesterday. First of all, the idea that they forecast inflation coming lower after this year, that one-time bump. And then also this idea that going forward, you're going to have slowing growth, but it's not going to be some sort of downturn, that it's going to be sanguine. Do you think that it is setting up for a policy error, that the Fed is looking through inflation as a short-term phenomenon without considering some of the fiscal overhangs that you're talking about?
Well, let me put it this way. They're not talking about those issues. They're focusing in on the tariffs, which everyone is. But monetary policy is supposed to be a long-run process. And you have to think of where you are a year from now, but 2 years from now, and they're projecting everything just comes right back into normal. But I think that they won't talk about the fiscal problems we have in this nation. That's a big deal, and I think the Federal Reserve will be under pressure. So, I'm not sanguine about the long run at this point, given the absence of discussion about one of the most important things this nation faces, and that is a growing, huge national debt problem.
Last night, the president did tweet that the Fed would be much better off cutting rates as U.S. tariffs start to transition. His words, ease their way into the economy. Does it bother you that this president still takes to social media or talks to the press and tries to dictate what the Fed should do?
Well, I don't know if he's dictating or if that was this is my view. There's nothing wrong with that. Look, everyone has a view about what the Fed should do. I don't have any problem with that. Now, if he forces it and starts threatening it, that's a different story. But I think, and with that in mind, why shouldn't the Fed, I think, be talking about fiscal policy? It makes their job all that much more difficult. So why shouldn't the Fed be saying, Congress, we're worried about the debt. This is an issue. It'll affect our ability to control inflation. Work on that. So I don't. It doesn't bother me that he does it, so long as he doesn't force it down their throat.
Tom, I want to pick up on one point that you put out there where you talked about the pressure to monetize the fiscal deficit down the line should that become untenable. And I just wonder if you actually think that is a likely outcome where essentially as the U.S. deficit becomes larger, in order to offset that and lower longer term yields, the Federal Reserve will expand their balance sheet once again. You think that's feasible?
Well, I think they'll have pressure to do that. Yes, whether they do it or not, I don't know. But I hope they don't, and it's not feasible, and that they make that clear. But think about it: we're going to add $2 trillion more of debt this year. We have to turn over debt. There's going to be upward pressure on interest rates from that, and the Fed will be under a lot of pressure to reduce that. And that's really what has happened over time relative to causing or allowing inflation to break out in this country. Yes.
Hey, Thomas.
Your concern.
Lucky to catch up with you this morning, sir. We appreciate your time. Thanks for being with us. The former Kansas City Fed President Thomas Honig there, leaning on some of his experience at the Federal Reserve to think about where we are for this Federal Reserve in 2025. And Bob Michael at JP Morgan Asset Management, I think, framed it really nicely going into the decision yesterday about how much of a moment this really was for this Federal Reserve. A challenge, the central banker's dilemma, when you have downside risk to growth and upside risk to inflation.
Which do they prioritize? And yesterday in the press conference, it seemed like there was more of a focus on downside to growth simply because inflation was transitory. There is a caveat here, and this is something that Thomas just brought up. Is it just inflation tied to tariffs that's transitory, not necessarily some of these other overhangs? The projection seems to suggest it's all inflation, but that's an important thing at a time where you can't really scientifically parse out what's tariff inflation and what's related to some of these other
He acknowledged that, didn't he?
Exactly.
In the news conference. So if you get a bounce later this year, that's going to be an interesting one.
Correct.
He turns around and says, we can look through this, we can respond, but you said it's very difficult to understand what's the difference between the two. So how do you know?
And how do you look through it at a time when previously transitory has turned out to not have been a successful band, at least on the Hot 10 list?
Yeah, it's been very difficult. The band's getting back together.
Yeah, well, let's see if they can stay together.
Great song, isn't it? I wasn't expecting to hear it yesterday, I have to say. I was surprised by that.
The transitory?
Yeah, just to throw out the T word.
Let's hear what the beat's like.
It's becoming a big distraction. But maybe that was the intention. Coming up next on the programme, Greg Bowdle of BNP Paribas, Brooke Roach of Goldman Sachs, Luke Tilley of Wilmington Trust and Matt Brill of Invesco. The third hour of Bloomberg Surveillance. Up next.
How can optimizing our operations through AI and machine learning technology
help us continue to meet growing global demand?
How can utilizing cutting-edge technologies like the metaverse
help me get the resources I need to run my business efficiently?
By continually asking how, we're optimizing our drilling, exploration, and reservoir mapping operations to streamline processes.
Another day, asking how.
Another day, meeting your needs.
It can be the case that it's appropriate sometimes to look through inflation if it's transitory, and that can be the case in the case of tariff inflation.
Everyone's relieved that the Fed didn't jump to significant conclusions.
If we get to that May 7th meeting and they do not find a reason to cut rates, they're not going to find a reason to cut rates this year.
I don't think there's any chance that they cut in May.
The question is how much of a growth deterioration needs to occur before the Fed can react, and it seems to be that the bar is pretty high for that.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
I really don't remember the last time we had this much debate about how to interpret a central bank decision from the Federal Reserve, but we had tons. For this market, though, it was absolutely convinced yesterday that it was bullish. Equities off to the races, rocketing higher into the close. We were gaining by something like 1% on the S&P 500. Session highs, we were pushing even higher than that in the middle of that news conference. This morning, we pulled back on the S&P 500, just a little bit softer by a third of 1%. On the NASDAQ, down by 0.5. The next hour is all about the economic data. 29 minutes from now, we get jobless claims. Jobless claims in America, 8:30 Eastern time. For now, though, we need to talk about another central bank decision. And this time, Lisa, it's the Bank of England. Interest rates unchanged at 4.50.
Yeah, as expected, with 8 voting for this and 1 dissent. This really is a fascinating decision because of its lack of interest, frankly, how much it's the same as previous iterations. Rates are on a gradually declining path. The Bank of England says a gradual and careful approach to easing is appropriate. But this is fascinating, moving in the opposite direction, raising their first quarter GDP growth forecast to 0.25% from 0.1%. So you will see this moving in the opposite direction in a very confusing mix of trade headlines.
Let's head down to the Bank of England, just outside of Threadneedle Street, across the road from the Bank of England. Joining us now is Lizzie Burden from the City of London. Lizzie, welcome to the programme. Just break down how the vote shaked out in the end and what you're looking for in the headlines.
Well, John, as expected, this is a hold. It's interesting that it's an 8-1 vote split. Catherine Mann going from Arch Hawk to Arch Dove, voting for a jumbo cut, and today for a hold. So completely changing her tune. But in recent weeks, she has been emphasising the need to keep policy restrictive and echoing the theme across the Monetary Policy Committee that caution needs to be the watchword here because of all of the uncertainty around tariffs and trade policy coming out of the US. And then the second round effects of that on inflation expectations and wages and prices here in the UK. It's interesting as well, Lisa, that you pointed out that growth forecast upgrade. I am sure that is going to be very, very welcome over on Downing Street. The Chancellor, Rachel Reeves, preparing for her spring statement next week. And, of course, growth, the Labour government's number one priority. But as well, interesting that they've maintained that guidance that the rate path ahead is going to be gradual and careful. So not a lot of change here. No press conference today, no forecasts, and pretty much what was expected.
Lizzie, that spring statement taking place on Wednesday next week at a time when the Germans are easing fiscal policy and easing things potentially aggressively in the coming years. How much space does Chancellor Reeves have in the coming 12 months?
Put it this way, John, Britain is broke by comparison to Germany. Rachel Reeves does not have the same set of options that Germany has when it comes to increasing defence and infrastructure spending. I was speaking to her on Monday, and interestingly, we had a conversation about her headroom against her fiscal rules. She left herself a razor-thin margin back in October. That's been wiped out now pretty much because of the gilt yield moves. And she emphasised heavily, actually, the need to build up that fiscal cushion again. And that's been confirmed by our colleagues on the Economics and Government team, Phil Aldrich and Joe Mays, that actually she is going to leave or even build up that £9.9 billion headroom. It comes, though, from spending cuts, which for many harks back to the Conservatives. And to me, what's fascinating about that is it seems like she's more concerned about the bond vigilantes than she is about upsetting the left wing of the Labour Party.
Lizzie, appreciate the update. Great work as always. Lizzie Burden, outside of the Bank of England in the City of London. A few headlines to go through. I'll share them with you now if you're just joining us. 4.50, the interest rate at the Bank of England. Bank rate remains unchanged. The vote, here's the breakdown for you. 8 voted for no change, 1 voted for a quarter-point cut. The approach, let's talk about the approach from Governor Bailey. He says the approach will be gradual and careful, but interest rates are on a gradually declining path. That's the Bank of England this morning.
Yeah, and upgrading the growth forecast to 0.25% from 0.1%. I will just say that one terminal user messaged in, it's like wanting an ice cream sundae and your mom gives you a baby bite of vanilla ice cream. Not enough because 0.25% isn't something to really celebrate still. I thought that was notable since it was in the opposite direction of what everyone else is
Someone's tortured childhood. Is that terminal subscriber?
All I can say is I relate.
Isn't it like being promised a banana and actually getting some ice cream?
Well, I mean, look.
Isn't that the growth forecast?
Thank you. I think that is the correct way to look at it because ultimately it is welcome. It is the opposite direction. And frankly, on Downing Street,
there you go. We'll take some of that.
I'll take a little taste of ice cream. It's sweet.
Love some ice cream. Right now, breakfast. Anyway, equities right now in the S&P down about 1/3 this morning as Fed Chair Jay Powell downplays inflation risk. Greg Bowdle of BNP Paribas writing, we see the driver of the market switching from systematic to discretionary flows. If the market bounces, we think it could be a shallow bounce and one to fade. Greg joins us now for more. Greg, good morning. Good to see you. We're fading that bounce. We're fading it this morning. It got faded pretty aggressively in the last couple of hours or so. What did you make of yesterday? Let's start there and then we can go through the rest of the stuff.
Yeah, I think it was a relief rally for equities that we didn't get anything from the Fed that I think really changes the bigger picture for equities, but neither did we get anything that was negative. So, our view is that we could have a bit of a relief for equity markets this week as some of the positioning got very washed out last week. And I think the absence of anything negative from the Fed was really seen as a positive.
In the forecast, though, to put out forecasts and downgrade your outlook for growth to the extent they did, and to not see the median dot move lower with it, in fact, to see the distribution of the dots have a more hawkish skew, that can't be bullish, can it?
No, I don't think standalone that's bullish for equity markets, but I'm not sure how much of a surprise it was for the market either. Concerns around growth have certainly picked up this year, and to hear that kind of reflected by the Fed, I think is a little bit more of the narrative that has given US equity markets a troubled start to the year.
Before we try to understand the mystery that is a confused and in the dark Fed, I want to understand positioning and where we are in the sort of unwind of the trade that had been the momentum stocks. Are we done with that? I mean, if we wash that out, now we're responding to the concepts of stagflation and what kind of response we could end up getting from, say, the Federal Reserve.
Yes, the way that we think about these things is in different stages and different buckets of investors. So when we look at positioning, we can split it into things like systematic investors, long-short hedge funds, and more directional investors. And what we've seen is certainly that systematic part of the market looks very washed out. So we saw some huge outflows from CTAs, volatility target funds, levered ETFs that we think were more than $100 billion of outflows over the last month. We think that those are largely washed out, and there's a more benign outlook for the next couple of weeks. Now, what that doesn't answer is the bigger question of what are discretionary investors going to do? What do they think about the growth outlook? We saw huge inflows into equities at the end of last year. So the question is whether it's the corporate picture or the macro growth picture has enough change there to drive those investors to change their behavior. The answer is not yet.
If there's an international ball of money and it's kind of washing around different places where it thinks that it's going to be treated best, does the Fed cutting rates potentially by 25 basis points in the face of truly weakening growth entice that ball of money to the United States?
I don't think so. The question around how the market reacts to the Fed is always, why are the Fed doing what they're doing? So if you have a modest slowdown in growth and you have a deep cutting cycle from the Fed, that's something you think would be bullish for US equities. Whereas if you have a shallow cutting cycle from the Fed because growth is deteriorating, then that's less bullish.
What would be the catalyst for the market to really start to rally?
So
you say it's about a confluence of all these issues, which we're not really going to have any solutions to, at least in the short term.
Yeah, that's kind of the thrust of how we're looking at the market in the short term, is that you can have a relief rally if the news flow from the Fed is better. You can have a relief rally if the feedback from the NVIDIA event this week was a little bit better. But if we're worried about trade, tariffs, fiscal uncertainty, monetary uncertainty, growth slowing down, the consumer, it's hard to see all of those things kind of alleviate or the concern alleviate at the same time. This is why we think we can have these kind of pockets of relief rally, but it's very hard to see the market go on a kind of sustained move higher to make new all-time highs without really seeing a lot of things change in terms of the outlook.
What would the market need to hear on April 2nd in order to have maybe a sustainable relief rally?
So I think anything which kind of calms people's expectations that tariffs ratchet and we have further retaliation and it becomes this kind of tit for tat. But I think that even if we saw something that calmed the markets regarding tariffs, to the point, it's not going to clear the decks of everything the market's worried about. We're still going to have to get through the next corporate earnings season. There's some signs of slowing there. We're still going to have to address some of the issues that have weighed on large cap tech this year. So I think confluence of events is why we think it's hard.
Let's get to the earnings. I'm pleased you brought it up. Delta Airlines in the last few weeks, I think it's probably one of the most important data points we've had. It's not just soft data. The CEO, Ed Bastian, of the company are coming out and saying Q1 won't be anywhere near as good as we thought it would be because consumer and business activity stalled in the middle of February. Can the hard data get any harder than hearing that from Delta?
Yeah, so I think one of the things that ultimately we think is always most important for equity markets, away from policy, away from macro, is always going to be the corporate earnings. If you see corporate earnings disappoint, it's very unlikely that the equity market's going to do anything other than have a tough time. And I think when we look at this earnings season, it's notably been a more challenging one, the prior earnings season that we've been through, than what we've become accustomed to. And I think that's been broad-based. So some of the kind of cyclical bellwethers, things like Delta, but we also saw some downgrades in some of the more secular growth stories at the start of this year as well.
How do you judge whether they're just sandbagging us? And I say this because, no, I'm serious, because they talk about transitory. I think it's transitory, but we're going to really lower the bar so we can jump across it later. I mean, how much is that part of what's going on? And, I say that partly because how can we really judge an outlook that's based on the dark room that we're all in blindfolded?
Well, I think the real answer is that we can't. And whether it's trade, tariffs, monetary policy, John's questions on earnings, it's more questions than it is answers. So this is why we think we're going to be in this environment where it's heightened uncertainty for equity markets, which drives more volatility, and it makes it much harder to sustain a rally. We think hedging is something that investors should be very focused on at the moment.
I don't think doubt is a forecast, though. It's realised. They're telling you what happened in February. That's the difference here. You can say, OK, I don't believe your outlook, you're sandbagging us, you're lowering expectations. Perhaps they are. We've seen a lot of that from the retailers, and we'll talk about Nike on that front in that regard in just a moment. But with Delta, they told you what happened in February. So the softness, the weakness is not just survey data. They're seeing it in actual activity.
Yeah. The only caveat to that, and I'm with you, I'm 100% on the Delta was the biggest data point probably of the past month. The one caveat to that is it's not falling off a cliff to that extent.
It's true.
And so it's not that people aren't traveling. It's that it's seen a significant downdraft. And he said that he expected that to be alleviated when people feel good again and then just need a vacation. So, there is that.
We're always on the same page. For equity markets, though, think about this. So GDP's come down from 2.5% to about 1.5%. And we've repriced GDP forecast in, the space of a month. So we've come down almost 1 full percentage point compared to what the street was looking for at the start of the year compared to now. Now, I want to understand from your perspective, Greg, just to wrap it up, in a world where you're downgrading growth that way, do earnings typically come in a way that supports equity markets?
No, I mean, the simplest thing is to look at nominal GDP growth relative to earnings, and the two are pretty well correlated. So if you're bringing your growth forecast down, it's unlikely that you're taking your earnings forecast up.
Have we brought our earnings expectations down sufficiently to account for that?
No, I think earnings forecasts have come down somewhat, but they've retraced from what were pretty optimistic expectations at the start of the year.
Greg Battle of BNP. Greg, appreciate it. Thank you, sir. Lots to think about, I know, and there's so many different conflicting data points that we all need to grapple with in the coming weeks.
Your point is a very smart one. Either earnings expectations have to come down or those Wall Street firms have to go back to the revisions and revise them again back upwards. But something has to give because that delta's getting wider.
This is what this equity market's been responding to, all of this over the last several weeks or so. Futures right now down by about 0.4% on the S&P. Let's get you an update on news elsewhere with your Bloomberg brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. Turkish markets are showing signs of stabilizing after authorities stepped in to offset demand for dollars following the detention of President Erdogan's main political rival. Because of this, you are seeing the lira recover against the dollar, while the main stock index rose 1.1% today. But as you can see, still has not recouped all of its losses from yesterday's plunge. Meanwhile, Canada's foreign minister says China has executed 4 Canadians holding dual citizenship on drug-related charges this year. The executions further straining ties between the nations, with China saying Canada should respect its laws and not interfere with its judicial sovereignty. And the White House is considering extending Chevron's license to pump oil in Venezuela, reversing a recent push to have the company wind down operations next month. The Wall Street Journal reporting Chevron CEO Mike Wirth met with Trump at the White House yesterday as part of a larger gathering of energy executives. That's your Bloomberg brief. John?
Hara, thank you. Appreciate it. Up next on the programme, the Morning Calls Plus. Brooke Roach of Goldman Sachs ahead of Nike earnings after the closing bout. That conversation up next. Live from New York City, that opening bout 1 hour and 15 minutes away. Equity futures just a touch softer. We're down 0.4%. The opening bout just around the corner, 1 hour and 13 minutes away. Equities a little bit softer compared to the rally that we got yesterday going into the close. In that Fed meeting, unleashing a 1% rally on the S&P 500. The S&P this morning down by 0.4%. The Nasdaq down by 0.5. Let's get you some morning calls. First up, UBS upgrading Southwest Airlines to neutral, noting the potential for improving financial performance. Their stock is higher by 0.6%. Your second call from Piper Sandler, downgrading Rivian to neutral, warning the EV maker is exposed to a, quote, potential triple whammy of policy risk That stock is down by 1.85%. And finally, Morgan Stanley lowering its price target on 5 below to 110, saying tariffs present a significant margin headwind. That stock this morning still just about positive. It's up by 9% in early trading. Let's stick with retail. Investors looking ahead to Nike earnings for another read on the state of the US consumer. Brooke Roach of Goldman Sachs writing, we believe it is still early in Nike's turnaround journey, and we have yet to see material signs of brand heat improvement. She has a buy rating on the stock with a $90 price target. Brooke joins us now for more. Brooke, welcome to the program. Let's get into it. What are you looking for later on today?
Good morning, and thank you for having me today. We believe that all eyes are on Nike's earnings result this afternoon. And as we look to the report, we do believe that focus is centered on signs that the brand turnaround is working. New CEO, Mr. Elliott Hill, outlined several strategic actions taken to improve the brand over the course of the past couple of quarters. And we believe that you're starting to see signs that those actions are taking root. We have seen some refreshes in marketing. We've seen some changes in promotional activity. And we've seen some signs that they're looking to reduce discounting on Nike.com. As a result, all eyes are on any signs that fiscal 26 may be able to return to growth and what the impacts of recent changes might have on sales growth and earnings.
What's the growth market, Brooke? Is it going to be the United States? Is it going to be overseas at a time where there's a real question about that? Will it be trying to rehitch its wagon to the NFL?
I think one of the big questions is whether or not they will be able to return the North America market to growth. We believe that the reset in North America is very important. We are seeing signs of improved marketing. We are seeing signs of improved innovation. And we are seeing some signs that the North America consumer is engaging with that improved marketing and innovation. Generally, in our sector, when markets begin to improve in North America for retail brands, we start to see signs that brand heat can translate internationally. So we believe investor focus will be very centered on North America.
The big counter argument is on holdings, is the potential increase in HOKAs, is the fact that in all the running groups that we all see in the morning in Central Park, there isn't necessarily a huge domination of Nike shoes. Instead, there are a whole host of other brands. At what point does that become a real problem? Because there are these competitors and they're scrappy and they're getting in.
We are seeing a lot of signs that Nike is refocusing on innovation across each of their core sport categories. The new CEO is focused on returning the brand to focus on sport and to engage with those core running communities and those core sport communities. As a result, we've seen better innovation with more new product. We've seen the launch of the Pegasus Premium and the Vomero 18. And the company is refocusing on engaging with those local communities and with specialty retail running. So we believe that they are starting to make the steps that are necessary to return to competitive market share positioning in each of those core categories.
Brooke, even if they have a better product, what's to say people are buying? Dick's Sporting Goods, they expect a sales slowdown at the same time that surveys continue to say that consumers are worried about the uncertainty that's coming from policy in Washington and the tariffs.
Overall, we have seen signs of some consumer slowdown and macro choppiness over the course of the last few weeks. At first, there was some focus on the potential that this was a function of weather, but overall, we have seen some more comments about slowing overall. I think as we look at Nike's turnaround story, investors are much more focused on what will happen in fiscal 26, which will be beginning in June of this year, and what Nike can do on a relative competitive positioning to improve the brand heat so that they can gain back that market share regardless of the macro backdrop.
So is basically what you're saying is 2025 is going to be really a period of transition for Nike to then potentially nail it in 2026?
We believe that the company will be returning to growth in the back half of their fiscal 26, and that many of the actions that have already been outlined by management are going to drive lower sales and lower margins in the first half of fiscal 26 and thus calendar 25.
There's a challenge still to come. Brooke, appreciate your time to break this down for us. As always, Brooke Roach there of Goldman Sachs on Nike. Nike so far in the month of March down 8%. You mentioned Dick's Sporting Goods down double digits so far this month, and that's the concern.
Because Dick's Sporting Goods is saying that they're seeing a sales slowdown for this year of 5 to 7%. So even if Nike had a product that everyone was buying, like you mentioned, those running shoes or HOKAs, people are pulling back and they're potentially not even buying it, let alone the fact that Nike's not having something that's really exciting consumers right now.
What this conversation did reveal, though, that there are some companies who are better than others to reveal where the consumer is at right now. This is one of those situations where if Nike comes out with weak earnings, and I've got no idea what the results will be a little bit later, but people will say there's structural issues, there's idiosyncratic problems with Nike. It's not a clean read on the U.S. consumer.
That was my takeaway as well. This is one that's been trying to reclaim its spot in the sports attire race, and it's having a hard time because the race has changed. Not only do you have these upstarts, you have resale platforms. You've got Walmart getting in on that in a massive way. You have all sorts of new ways of distribution that they've been playing around with in terms of, are they in stores, are they out of stores, how do they deal with this? And that's going to be challenging for them when you have others that are really making real terrain.
They slipped post-pandemic and they're struggling to get back up. That's for sure. Need to reset a little bit in just a moment at 8:30 Eastern time, so 6 or 7 minutes from now, we'll get US jobless claims. This is another read on the US labour market. I'll share the estimates with you. 224 is the estimate for claims. The previous week was 220. So we're not looking for deterioration in the headline number in just a moment. But every single week, as the fears about economic growth and potentially a downturn continue to build, that data point becomes more and more important.
And people will be parsing it more and more carefully to understand exactly where the layoffs are coming from and whether the stagnant labor market is starting to break in the wrong direction. One thing I'm looking for is continuing claims, because that is the people who are receiving jobless claims benefits over a longer period of time. That is expected to tick up to one of the higher levels going back several years. So if you start seeing that kind of trend, how much do people extrapolate out?
That would speak to the anxiety in the labour market right now. That people are worried about their ability to go and get a job if they're out of work. That would speak to that directly. We also saw anxiety around unemployment start to climb in UMich. Now, I think you could sit here and say UMich is not that important. It's driven by politics. But we've seen several echoes of that in other data points as well.
And also, even in this most recent UMich, they said across political demographics, most consumers were saying that they are feeling a little bit angsty and uneasy. What I care about jobs lately is what is coming out of Washington. How much is Doge actually cutting? And is it hitting the hard data, all the pronouncements we're hearing from Elon Musk?
The Beige Book, and you mentioned this, actually, because you actually read it this time and thought that it was interesting.
Blaming Anne-Marie.
I'm blaming Anne-Marie.
It got interesting this time.
Oh, it's always
usually
interesting.
Beige. This time it was a bit more exciting.
What was it? Pink? Let me just tell you, I think it's always pretty interesting, but this time around it was actually especially interesting. And you pointed to the anecdote that I thought was really compelling, which is the stack of resumes on people's desks looking for jobs. That is a change after a long time where that labor dynamic was very different and speaks to sort of things becoming a little bit less balanced.
Psychology shifts quickly, doesn't it? I'm kind of pushing against that, just making sure that people just stand firm, stay strong, keep asking for more.
That's your rallying cry?
I just think that once psychology becomes informed that way, the leverage shifts even more aggressively.
Keep going with that.
Ask for raises.
Yeah,
yes.
Keep going with that.
Maintain your confidence in your self-worth and all of that.
Keep going. I love this.
What'd you read last night? I'm not going to throw cold water on this. I didn't read anything. I was in bed at about 6:30.
Lucky you.
Up next on the problem. Jobless claims just around the corner. Luke Tilley of Wilmington Trust joins us. Matt Brill of Invesco as well. Mike McKee's going to break it down. The opening about 60 minutes away. Equity futures on the S&P down by 0.4%. On the Nasdaq 100 down by 0.6. In the bond market, just ahead of jobless claims, your scores will look like this on a 2-year, 10-year and 30-year. The 2-year is down by 5 basis points. The 10-year is down by 6 at about 4.18. A break of 4.20. We've got a gap lower on a 30-year yield as well. We're down by 6 basis points. With your economic data, let's cross over to Michael McKee. Good morning, Mike.
Good morning, John. Well, we are getting the first numbers in maybe from the Philadelphia Fed. Here come the jobless claims numbers. 223, just below the forecast, just above what we got last week, which was 221,000. Now, the interesting thing in the numbers this week is that the number of people who are claiming federal unemployment benefits for the first time fell again to 1,066. 2 weeks ago it was 1,600, and now all of a sudden we are seeing much fewer. And that may be because a lot of these people, if they are getting laid off, are getting some kind of severance, and they can't claim until that point. Continuing claims were, let's see, 8,215 last week. So a slight rise there, but basically we're not seeing a lot of the federal Doge layoffs having an impact. Now, Philadelphia Fed did come in higher than anticipated, 12.5. The forecast was for 9, but this is down from 18.1. And the thing that everybody is looking at on these regional indexes is prices paid. Prices paid go up a lot, 48.5 after 40.5 the month before. So still some inflation pressure, no problem with the labor market, and it seems like Mr. Trump's tweet is not going to affect anybody at the Fed, given these kind of data.
I wouldn't expect it to right now. Mike, just to sit on the jobless claims number and compare it to continuing claims, are we seeing any subtle signs that once you're out of work, it's harder to get work?
Not really, not yet. It's slowly creeping up, but 1,859,000 last month, 1,892 this month. So it is getting a little bit harder, perhaps, but overall, it's still a sign of a labor market that is relatively healthy.
Mike, thank you, sir. Echoing what we heard from Chairman Powell pretty much directly in that news conference yesterday. So that's the latest economic data. Lisa, just to go through the bond market, yields are lower, down 3 basis points. The 2-year 394, the 10-year just a break of 420.
Yeah, not a huge reaction given the fact that we didn't really learn anything that we weren't expecting in this data. I do go back to this question about what the lag time is between the soft data and the hard data. This is something that Mohamed El-Arian has talked a lot about, that usually there's a 3 to 6 month lag. It seemed to be poo-pooed by Fed Chair Powell. Right now, the hard data is not showing us a real sense of alarm, even though the survey data is suggesting it.
And to Mike's point, what's the lag data for the Doge effect? Because you're not seeing it show up right now. And to his point, potentially a lot of these individuals that were laid off with the federal government got severance pay. So they might not be able to go and ask for a claim. When do we start to see that impact the data?
That's the latest on the economic data front. Let's get back to the chairman of the Federal Reserve and the decision of the last 24 hours. Luke Tilley of Wilmington Trust weighing in on that decision, writing the following. We continue to think the labour market and inflation data would justify a rate cut at the May meeting, but given Fed Chair Jay Powell's response, we are moving our first expected cut to the June meeting. Luke joins us now for more. Luke, welcome to the programme. I want to build on what we heard just yesterday from Chairman Powell with you in just a moment. I want to start with the forecast, though. What was your initial reaction to the adjustment in the SEP that we saw relative to December?
Yeah, well, the big change, obviously, is to the GDP forecast and that coming down. And I think that incorporates what we had been expecting, is that the strength of the consumer at the end of last year was not really strength in the sense that the consumer keep powering the economy ahead. What we saw was really strong spending on durable goods in November and December. That was coming a lot from replacement purchases from the storms, and then also people getting ahead of tariffs. So there was a lot of people at the end of last year that thought the economy was just up and away, in this sort of almost like a no landing scenario that was going to generate inflation. And of course, we've seen consumer spending come back down in January, retail sales down in January and February. And really, the more accurate picture is a consumer that is, it's doing okay. It's pretty solid, but it's going to decelerate. And that's why I would expect GDP to come down. We've had a 1.8% forecast for 2025 for a while. So the Fed now is very close to that with their 1.7.
So, Luke, growth comes down, inflation goes up, and it's that piece of it that's interesting. So from a market perspective for investors right now, they want to know if this Federal Reserve is in a position to respond to deteriorating data if we do get that weaker economic data. Are they constrained somehow by higher inflation prints? What would you say to investors this morning?
Well, we've had the same story for a while now, and it's that the consumer was not strong enough to keep pushing inflation higher, nor was the consumer strong enough to take on increased prices of imports and drive inflation higher. We thought that basically if you raise the prices on imports, that they would start spending less on domestic services, like going to the movies or haircuts or restaurants or anything like that. So we really didn't perceive that there was an inflation problem. We've been messaging that for quite some time now. I think the Fed, in a good way, was talking very differently about tariffs yesterday than 7 weeks before, acknowledging that the increase, a tariff increases the price of a good, but that's not necessarily inflation. It's only inflation if consumers can handle it and they're ready, willing, and able to keep paying those higher prices and keep spending elsewhere. And that's sort of what it sounded like at the end of January, the previous FOMC meeting. But of course, the messaging yesterday, as you've pointed out earlier in the program, very different. Basically, a step level one-time increase in prices of those imported goods, but we wouldn't expect it to generate inflation that would go on.
Okay, so Luke, it seems like you're actually on board with that, and yet you think that the Fed took May off the table in terms of cutting rates, in part because they are looking at the hard data. Do you think that actually this increases the chance they're going to be behind the curve if you do think that the soft data is indicating a much faster pace of deceleration economically?
It feels a little bit like last year. I think we were probably the last people to take July off the table last year and say, well, they're not even really leaving the door open. And then when they got to September, of course, they cut by 50 basis points and they had to play some catch up. I think yesterday it was in response to a direct question about May. And Chair Powell said, we're not in a rush, And so that's about as clear as a Fed chair is ever going to get about we're not going to cut rates at the next meeting. So that's why we have to push our first cut out one more meeting. I also don't think it's hugely important. The economy is not going to hinge on 25 basis points over the course of 7 weeks. But as I said, and as you read in the quote at the beginning, I do think that the economic data will justify a cut by May. We're going to keep seeing slower job growth. We're going to see slower consumer spending. I think the inflation data will keep slowing down. So it'll justify that, but that'll be fine. As long as they're talking about it at the May meeting, that should ease financial conditions.
We have this near-term data, and John was talking about the Delta earnings and the call about how much demand has been dropping off. We've heard that same thing from other companies that cater to consumers, and raises this question, how far behind is the hard data? We don't see it in the jobless claims. We don't see it in a lot of other data points that have been coming out from the government. At what point do you expect to start seeing this in the data, or can you dismiss this as watch what they do, not what they say? And those two things can be very different.
Yeah, I'm definitely a fan of watch what they do and not what they say. And I don't really think we're looking for a deterioration in the hard data, signaling recession or anything like that. If you just look at year over year retail sales, year over year consumer spending, it's at pretty mundane, normal levels that we had in 2018, 2019, when inflation was not a problem. And I think that hard data speaks directly to that. The labor market's going to be a lot more interesting. We think that the job openings are going to continue to decline and jobs are going to slow down. One of the interesting things here is that because of the uncertainty of the tariffs, we do expect firms to maybe hold off on hiring. And that dynamic, it wouldn't actually show them cutting their open positions. Just sort of, hey, HR, let's wait a little bit and see how these things turn off and not pull the trigger on actually hiring somebody. And that's where you would see it come through. So it's not going to show up in the JOLTS data right away. But one thing that we have seen, even though the job growth is okay, you're not seeing the unemployment claims, we're seeing shorter work weeks. It's 2 months in a row now that the average work week is really low. And when you combine that with slowing job growth and slowing wage growth, and you look at just total wages paid, that's at the slowest growth rate that it's been since the pandemic. So it's really starting to slow down, but it's like seeping in kind of sneakily. Because it's just basically lower wages being pointed out. You've got reduced overtime hours and that reduced work week. So in some ways, it is coming through in the hard data. It's not pointing to recession, but it is a slowdown, and I don't think generates any inflation pressure.
Luke, you have a recession probability of 35% and GDP of 1.8%. What I find so interesting about your call is it's the call you had around the time of the election next year. Meanwhile, everyone has really revised what they're thinking about growth and also potential recession because of the tariff story. What did you see in November that people are starting to catch up now?
Slowing labor. There was slowing labor demand all of last year. It's going to slow down the hiring. We're looking at job growth that is coming in at around 150, and you've also had a significant contribution from government jobs last year. So when you look at private payroll growth, it was slowing down already through the second half of last year. There were some strong consumer spending numbers, but like I said a few minutes ago, I think that those were a little bit of a head fake. And if you think about what's going to end up driving consumer spending, it's not savings. There's not many savings left. It's going to be job growth and wage growth. And when those things are slowing down, you're going to have a slower economy. It's going to fall down below 2% this year. That's how you don't end up with any inflation pressure. So I will say last year at the end of the year, it was incredibly hard to read through some of the impacts. There were multiple hurricane events, storm events, the election, people getting ahead of tariffs. So you really have to be looking at longer term trends and not hinging on one particular data point. But this is that slowing is what we've been seeing for quite some time, Anne-Marie.
A lot of people are catching up with you. Luke, appreciate it. Luke Tilley there of Wilmington Trust. Neil Dutta of Renmax saying almost precisely the same thing coming into 2025, saying the tariff blame game is overdone. There's more than just tariffs going on here.
There is a slowdown in the consumer after spending quite a bit. People talk about the slowdown in retail sales in particular as having to do with just how much they spent last year. But also, people have been traveling everywhere. People have been spending everything. And at a certain point, it seems like this year is sort of the sobering year. The sobering
post-pandemic hangover.
I feel like that's what's happening. I think so.
This is what Neil and the administration talks about. There is this hangover. And before the tariffs came into the play and center stage, you already saw a slowdown. There was weakness in the economy. But now what Neil would say is this isn't a lazy excuse for economists and analysts to use the tariffs as the reason why they may have to really look at their growth outlook and rate it downwards.
There's a difference between a hangover and a detox, though, right? Not to go too deep here, but ultimately the administration's talking more about a detox.
That's actually a really good point. A hangover is a temporary sickness that is sort of induced by your
hair of the dog, if you're that way inclined,
exactly.
You know, like wake up and
carry like
on.
You've had any experience with that whatsoever. But detox is a longer process that takes effort and
speaking with someone with experiences after the hangover, you are hoping you get a detox.
I don't drink. You all know that. Matt Britt of Invesco writes this. Balance sheets are strong and the macro environment is supportive of risk-taking, yet forecasting the remainder of the year has a wide range of outputs. Matt joins us now for more. Matt, welcome to the programme. We've also had a bit of a valuation reset in financial markets as well. An important question to ask, and we asked this at the start of the year. What's our capacity to absorb bad news? Has that improved? And does that bode well for markets for the rest of this year?
Hey, good morning, everybody. And yeah, we actually had asked ChatGPT for a catchy phrase for this market that we're in, and it came out with inflation hangover. So you guys are definitely onto something there. So, as for markets and credit specifically, we've gone wider. So we've adjusted on a valuation standpoint from very tight levels to more moderate, but they're still rich. But if we were to go into recession, credit levels will have to adjust significantly wider from here. So, you talked about 35% chance of recession. That's generally where ours is as well. But the tail risk is certainly fatter than normal. However, balance sheets are in really good shape because companies were expecting a recession for the last 3 years. So everybody's been calling for a recession in 2022, 2023. They kind of gave up on it in 2024, and now we're back at it. So the good thing is they haven't levered up, and so we're in good shape. So I think there's ability for companies to absorb it, not really so much ability for spreads to absorb it because they're already on the tight end of the range.
Which is the reason why a lot of people were surprised, a lot of people being myself, that credit spreads have continued to tighten on these sort of stagflationary mixes, stagflationary light mixes. They're not actually stagflation. And yesterday we saw the same, in particular with high yield contracting yet again. How can you explain that?
So I think if you go back 5 years ago, you had almost to the day. So I remember March 23rd, 2020, you had the Fed step in and start buying corporate credit. So I remember the date because I could leave my office and leave the fetal position for the first time in about 5 days because it was so bad. The Fed stepped in there and it was needed at the time. And we've had a lot of talk around, is there a Trump put? Is there a Fed put? And what I heard from Powell yesterday is that there is definitely a Fed put that is out there if needed. And they basically told you, or Powell basically told you, I am willing to cut even if I see inflation tick up, because if the economy is slowing, I think that's the more important thing, because I think the inflationary pulses are going to be temporary rather than the slowdown, which could be more severe. So with the Fed telling you that, I think that the tail risk got cut a little bit yesterday. And there's yields where they are. People want to buy. They want to buy. They just need a reason to buy. And Powell stepping forward yesterday gave you a little bit of calmness that he will be there if things get bad, just like he was 5 years ago. So I think that gives you the confidence. But, it's still not all the way there. There's still a lot of volatility. But overall, I think people will buy on any kind of calmness. And that's exactly what we saw yesterday.
Matt, I'm with you that the Fed yesterday cut risk when it had to do with credit, when it had to do with the credit cycle, when it had to do with the economy turning downward. I didn't get the sense that they cut risk when it came to inflation. And inflation over a longer period of time, given that they are getting back on team transitory, and there is this sense that it is going to be a one-time price shock, and down the line, there won't necessarily be ramifications, whether it's tariffs or whether it's not. That's the one kind of fly in the ointment that we've been talking about. Is that accurate? Does that really reflect the releveraging that we're seeing around the world, as well as some of the price pressures that are coming from other places?
So I think your interpretation is 100% correct. The way I would think about that as credit investors, now we're total return investors, but at the end of the day, we are credit investors. Inflation is not the worst thing to credit investors. The economy going into recession is. So that getting lesser of a risk, I think, is better for taking on high yield risk, bank loan risk, IG risk, EM risk possibly as well. Total return and what happens, with the long end of the curve. You actually saw the long end of the curve. It steepened. It was lower, but it did steepen yesterday. So, generally the market is telling you that we'll worry about inflation later. We just need to make sure that we're not immediately going into a hard stop. And that was the takeaway that I had yesterday. Clearly, again, we have a lot of hurdles coming up. I don't want to see an inflationary environment like 2022 all over again. But Powell got a little sassy with his comments around transitory, and he pulled out his Caroline Levitt yesterday, and he was basically saying, yes, transitory was different in 2022, but if you go back to the last time there were tariffs back in 2018 and 2019, it was transitory. So I liked his conviction on that. That gave me a little bit of confidence, and I like to see that side of him. That was pretty good.
It certainly hit a nerve. The only thing I would push back to this time around versus Trump 1.0 is, and we were talking about tariffs in 2019, it was about China. Now when we're talking about the president and his policy proposals, it's about Canada, Mexico, the European Union, India. We're talking about everything under the sun, including already 20% tariffs on China. So isn't it harder this time, this environment, and can't the inflationary impact be bigger?
There's a lot going on, right? It's from a lot of different angles. It's really going to be difficult for the market to adjust and understand. And Powell basically admitted that. He said, I don't know that I can pinpoint what is transitory and what is not. And you're absolutely correct. With one country, one angle, it was kind of a little bit easier versus if you're getting it from 18 different angles around the globe. I think that will be a lot harder for him to look through. The good thing is, to me, if he believes that it is transitory, which I think he does believe that, and he sees the economy soften, he is going to cut. So that's the bottom line that I took out of yesterday, versus he's not going to be conflicted. He's going to have a very confident approach to it. And I think that's good for credit. Now, it may not be great for overall yields. We'll have to see. But over the near term, I do think that eliminates some severe tail risk to the market that might not have been there otherwise.
Hey, Matt, this was fun. Appreciate it. Thank you. Matt Brill there of Invesco. He was sassy yesterday, wasn't he?
He was on several fronts.
Yeah.
Yes. What would you write? Transitory. Did you just say transitory? I did just say transitory.
Pretty blunt, wasn't it? The press secretary's very sharp, by the way. I mean, I enjoy it. It's great. I enjoy the press secretary. I enjoy it when Chairman Powell's that way. But you do want a forecast from Chairman Powell. Like, none of this, what would you do? I don't care what the people in the room might do. I'm not interested in that.
In fairness, it is a little bit of a difficult situation right now to come up with a forecast. And I think he was reflecting that with a slight bit of, really, guys?
I love Mike McKee, but I don't want his forecast. I don't think Mike McKee wants to offer a forecast. Let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahara Hacker. Say, Yahara.
Hi, John. Amtrak CEO Stephen Gardner abruptly resigned as the Trump administration threatens to pull funding for mass transit systems. Gardner saying he stepped down to ensure Amtrak continues to, quote, enjoy the full faith and confidence of this administration. His successor has not been named. NVIDIA is reportedly planning to invest hundreds of billions of dollars in U.S.-made chips and electronics. The Financial Times reporting NVIDIA will spend around $500 billion in the U.S. over the next 4 years. CEO Jensen Huang also told the FT it can manufacture its latest systems in the U.S. through its suppliers like TSMC and Foxconn. And Tesla is recalling all Cybertrucks produced and sold in the first 15 months the truck was available here in the U.S. This is due to a safety issue with steel trim pieces that come loose because of an adhesive it says is susceptible to environmental embrittlement. Tesla estimates that 1% of the more than 46,000 pickups it's calling back have a defect. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for the update. Thanks for this morning. Up next on the programme, we'll run you through the next 24 hours and a week ahead from New York City. This is Bloomberg. 37 minutes away from the opening bell. Equity softer here by 0.4% on the S&P, and the Nasdaq 100 biting into some of yesterday's gains. We're down by 0.5. Your trading diary in your week ahead is shaping up as follows. At 3:30 Eastern, President Trump signing executive orders after the closing bell. Earnings from Nike and FedEx. Friday, Fed speak from the New York Fed president, Mr. Williams. Look out for that. That's important. Sneak peek of next week, PMI data and consumer confidence still to come. Tyler Kendall joins us now from Washington, D.C. Tyler, the president doesn't stop. More executive orders coming later. What are you looking for?
Yeah, John, two big events today that we're watching. Later on this morning, President Trump is expected to address a digital asset summit in New York. It will be virtual from the White House, but it does mark the first time that a sitting president has addressed a crypto industry conference. We'll be watching there, and whether or not any of those EOs later on today could be related to the crypto industry. And then at 4 p.m. Eastern on the official White House schedule, there is an event related to the Department of Education. Our Bloomberg News reporting that he could be signing an executive order that would direct federal officials to start dismantling the agency. We should note that he can't do this unilaterally. It would take an act of Congress, but the White House so far has already started to pare back funding as well as staffing in the agency as it tries to slim it down, making good on a campaign promise to try to bring education back to the states. We should just quickly note it does raise questions about funding going forward when it comes to the education department.
Tyler, appreciate the update. Tyler Kendall down in Washington, D.C. It has been non-stop, hasn't it, for the last 2 months?
Absolutely nonstop, and 13 days is the big one. The Liberation Day, as the president was talking about yesterday. I'm interested to see what more tea leaves we get in terms of trade negotiations, because Kevin Hassett said him and the team, Howard Lutnick, Scott Bessent, already talking to countries about maybe them bringing their tariffs down in advance of this April 2nd.
I'm looking at this tea leaf. The EU is delaying its 50% proposed tax on whiskey, American whiskey, to get some of its other, negotiations ready.
It's happening.
It's happening. But also spirits. Why are they in the center? It's like whiskey, champagne. I don't like your teas.
Why are we touching wine?
It's important to people.
Right,
it moves
exactly.
the dial on the conversation.
I know, but it'll be.
Don't touch my champagne. Not for me. Equities on the S&P, negative by 0.4.
I've had
Coming
your
up tomorrow,
champagne. It's good.
Jack Caffrey at JP Morgan, Nouriel Roubini, Kate Moore, and a whole lot more. This is Bloomberg.
Welcome back to another special Miami Open update for Bloomberg TV and radio from Tennis Channel. Nick Kyrgios claimed his first tour win in 896 days as he got past American Mackie McDonald. The Aussie's been sidelined by multiple injuries and was forced to retire in his recent opening round match at Indian Wells. And don't forget, you can watch all the action live daily on Tennis Channel.
London's Heathrow airport will be shut all day Friday after a fire caused a significant power outage, throwing one of the world's busiest airports and the travel plans of hundreds of thousands of people into chaos. Let's go to Bloomberg's Guy Johnson in London. Guy, so just tell us what we know. What is the latest from the airport? How are these authorities actually responding to the fire?
So there's a fire nearby. It's not actually at Heathrow, Jemana. It is at a substation close by, but it's taken out power to the entire region, and as a result of which Heathrow is caught up within that. So we are now expecting Heathrow to be closed all day. It will, according to the latest reports from Heathrow, open at midnight tonight, but that at the moment is unconfirmed in terms of that being a final moment for Heathrow to be able to reopen. But it is going to be closed all day. The latest from the power company seems to indicate the power will be restored by around 3 p.m. This afternoon. This is, as you say, one of the world's busiest airports. It is potentially the second busiest airport on the planet. 1,351 flights are due in and out of Heathrow today. 700 of those are for IAG, the owner of British Airways. It will be severely affected, but other flights around the world are going to be affected as well. Air India indicating that it's turned aircraft around. A number of aircraft coming out of the United States have been turned around. Qatar is indicating that it has 6 flights currently being impacted by this. We'll see what Emirates has to say a little bit later on. So big airlines are being affected. Obviously, this is kind of the first wave of aircraft that would be arriving kind of around now into Heathrow. It's a huge moment. We have seen similar incidents in the past, but this is the last I can remember where Heathrow has been shut as a result of a fire, as a result of an electrical shutdown. We haven't seen this, and clearly questions will be asked about just how much redundancy there is at Heathrow and the ability of a major airport to keep functioning with a power outage, I think is a key question.
Yeah. And Guy, you just ran through some of the responses from key airlines from around the world, Emirates, Qatar, of course, British Airways too. But just put it into context for us, given how busy an airport Heathrow actually is, how much of a global impact this could have on travel? How much disruption could it cause worldwide?
So it's going to cause enormous disruption worldwide, Jemana. So you think about... I was just running through what's happening right now. The ripple effect of that is enormous around the world. It's going to not just affect Heathrow, it's going to affect every major airport around the world, simply because aircraft will not be where they are supposed to be. They were meant to come into London, they were meant to go back out of London, they're meant to be somewhere else. These aircraft are constantly in motion and being used. So the fact that you've got 1,351 flights not taking place today means that lots of aircraft are going to be in the wrong place. So this isn't going to be isolated to just Heathrow. It isn't going to be isolated to just the UK. It is going to have a ripple effect around the planet that could last for days and days and days. Even if Heathrow reopens at midnight tonight, the effect could last 2 or 3 days. It will take a long time for global aviation to reorganise itself, get aircraft in the right place and sort itself out.
How can optimizing our operations through AI and machine learning technology
help us continue to meet growing global demand?
How can utilizing cutting-edge technologies like the metaverse
help me get the resources I need to run my business efficiently?
By continually asking how, we're optimizing our drilling.
I want to start off with the rally that we're seeing in the stock, also the growth that you saw in the latest reporting period, it's very much linked to the success of Xiaomi as well. So can you just also spell out that customer relationship and how important that is for Kingsoft Cloud as well?
Yeah, sure. Thank you for having me. Thanks a lot, David. Thanks a lot, Annabelle. So I think before I kind of recap on earnings, also want to mention that if you really look at the Xiaomi plus Kingsoft Group as a most probably today powerful and influential ecosystem company and a technology company today, we actually enjoy a great benefits to serve them as a more exclusive cloud provider for them. If you think about back to basics, basically when you think about AWS, it's actually coming because of the strong base of the Amazon business. And also because of the cloud business is strong and Microsoft is very strong. So my view is giving a very good, strong demand of the consumer business, EV cars, and also the WPS. We have about 600 million users in Kingsoft Office, WPS. We actually have a very strong basis to use a cloud from consumer internet, from our production tools, and all different verticals of the applications. So that actually drive a lot of the user scenarios of the Kingsoft Cloud business. So that's actually on the volume side. But also if you look at on density and the different applications, if you think about all the different verticals, the cloud actually drive from a traditional IaaS-related, very simple layer of the IaaS services to today is more integrated model because the data need to fit into the model getting better on every single day, and the outputs has to be really on a real-time basis. Historically, if you think about that, is storage, data networking, and computing can be allocated among different vendors, but today, the client really appreciate only one vendor can go with all the full stack solutions. That actually gives Kingsoft Cloud a very good position because we're working with the client not only on a single layer of so-called IaaS services, but we actually go up from IaaS to PaaS level services and providing a lot of good solutions to help them to really use a model as a production tool to generate workflows and to generate final efficiency of the output. So that's actually a dramatic change from the traditional IaaS to a more integrated MaaS services.
And does that make future revenue more or less predictable?
I think it's more visible. I think two things. First of all, as you know, I call it more from the supply-driven to the demand-driven. So historically, because we serve the large accounts, but today, as you know, we call this AI democracy, right? So the cost of investment to AI is actually bring lower a little bit because of the DeepSeek and all the topics we can talk about, and actually help us because we want the diversified client basis. And the lower cost of the investment for the client actually can expand our client universe. But on the other end, use AI is actually require a much higher technology know-how and experience. Right. So that combination will help the cloud provider like Kingsoft Cloud because we want a long tail of the mid size of the enterprises who actually want to use AI, but without the DeepSeek and all the new technology, the investment and the barrier to entry to AI technology is much higher. But today, given the DeepSeek and all the things, more clients in the recent conversations we feel they want to try these new things, right? Historically, saying, oh, I spend you to 10 million, 20 million to just start to do that. But today, a few $1 million can help any clients to really drive their internal process.
So you see more enterprises, I guess, beginning to use AI services, and that can also drive demand for Kingsoft Cloud's products. How do you compete, though, against the emerging hyperscalers in this space? And I'm talking about Alibaba and Tencent in particular.
Sure. Another key word I want to say is we used to think cloud business is a scale business, right? Scaling is important, you lower costs, but today, I think scale is still important, but more importantly is how you help the client to drive the value from AI as a production tool for renovation. So I'll give you a few examples. For example, today, when you talk about, for example, the digital auditing, right? When we're working with auditing firms, when we're talking about the user scenarios to help the lawyers to drive and drafting better contracts and to save time to be more efficient. And those type of tools, you need to really understand client needs. And basically, you need a very thin layer of consulting services, provide solutions, help clients to really go deep and deploy AI capability. So that actually the full stack of the services value. So my point is, if you really go deep and have a close relationship with a client will actually go with you. So my point is, historically, we need to go shopping, find good clients, but today, the client is actually coming to us because right now, not many cloud companies do have a good knowledge on the industry know-how, and that actually is our expertise. And given we have a proven success, for example, to serve co-pilots for WPS, over 600 million users, to serve Xiaomi for the new cars and the new mobile phones and robotics, and given we have a strong relationship to serve enterprises and all the traditional industries whose knowledge about AI is relatively lower penetrated. And those are a lot of work we actually can do and probably can do better compared with other peers because, Kingsoft has been in business for over 37 years, and we have many, many large corporate accounts, and we can do a lot of cross-selling, which is actually very unique if you compare with other cloud providers in China today.
Right. And I guess how it's good to be connected, say, like the Xiaomi relationship only gets bigger and, to your point, deeper, and those switching costs go up. How concerned are you that of customer diversification? Let's put it that way.
Yes, I think it's a very good question. So my view is you need to look at the near term and the kind of the medium term. In the near term, I think probably already noticed that there's a great momentum for Xiaomi and Kingsoft ecosystems become more influential from different verticals. So I think we need to grow with them. So my point is, number one principle is go to basics. To serve Xiaomi pretty well, so that will help us to train a good technology in-house. And as you know, the beauty of cloud model is you need to have a very strong basis, and you use that to lower the cost of procurement, supply chain. You're basically sharing the resources with different companies. So the diversification is important for the medium term if you really want to drive the profitability, because the efficient need to be built on a large foundation. So I think for the short term, we'll go to basics to serve Xiaomi because it will go with a great momentum to growth. But also going forward, I think utilization, efficiency, sharing of the resources, and putting the know-how into all different verticals to capture kind of the mid-tier of the enterprises usage is actually important for us to improve the profitability. So we'll kind of take it on two different steps.
You mentioned the different verticals, and you mentioned as well Xiaomi exploring robotics. This is a very hot market right now in China, and there's a lot of different companies that are sort of starting to emerge in this space. How big do you think it can be for your business?
Yes, I think generally speaking, my point is I use the word of tip of the iceberg. The cars, robotics, people when see that physical expression of AI in the room, out on the road, it is only probably the last mile of the AI usage because most of the AI is embedded into the chips and all the sensors in the physical items. But my point is, before the thing become real, simulation of the data, building the algorithms, saving the data, doing all the digital mapping, and all the things actually has to be built much earlier before the cars and robotics on the road. So my point is, when we look at our revenue pipeline, that actually also important for us because all the R&D spending and the pre-research are important for cloud provider to help them to really build their future for the R&D process. And if I may also want to kind of recap quickly on the numbers actually reflecting on this topic because a few things. I think we are moving really 2 years ahead because before we announce the earnings this Wednesday, the consensus on Bloomberg is probably going to be profitable in 2027. But we're actually moving 2 years ahead on the operating profit margins because of a few factors we just talked about. Diversification, go to basics to serve Xiaomi, and make sure we give client a good know-how and technology, and rather than compete on the commodity business of the ICE services, which we did many years ago. So that's one part. The second part is we deliver about 30% of the YOY growth. The consensus is only 20%. So the last point is, as you know, in the past few years, our lowest GP margin was only 1%. Our EBITDA margin was negative 20%, but this quarter, our GP margin is around 20%. Our EBITDA margin is about 16%, which is a huge improvement. So we actually deliver a great turnaround story for the past probably a year or two, and actually reflecting the share price and evaluation in the past 100 days. And I think all the factors we just talked about, diversification, sharing, efficiency, and really change from scalability the game to a more know-how and a technology value add. I think that's actually a few things we are kind of working on, and hopefully it's going to continue to deliver. And hopefully 2025 will be a good year. I think we are going to maintain a full-year profitability on the OP side as our target, and I think our growth on the top line will be accelerated in 2025.
And let's also talk about the investments that Kingsoft has been making, or Kingsoft Cloud has been making into AI in particular, because it is such a developing landscape in China. Yesterday, we actually spoke with Kai-Fu Lee, who is the chairman of Sinovation Ventures, also the founder of 01.ai. But he spoke to us about how many tools or AI models he actually thinks can dominate in the end. Just take a listen.
I think probably, I'm guessing 3, DeepSeek, Alibaba, and ByteDance. And they'll evolve over time, right?
Okay, there's a few names missing on that list.
Yeah.
Only 3.
Well, there will be many others who aspire to build one,
right?
And we'll see if there's a 4th player. But even within these 3, I think DeepSeek currently has the momentum, and that's why we're embracing that.
I'm curious for your views on that one, because I know that you've made investments in names that aren't on that list that he mentioned.
So before I come to my comments, I think another key word is also about so-called AI factory, which basically Jensen Huang is always talking about in the NVIDIA earning calls. So that actually is an emerging concept. My point is the model, which reflecting the algorithm and intelligence, the data, which actually is the input and output of the intelligence. And third part is a computing power, basically to help link up 2 things together. My point is all 3 are important in today's environment. And you need to really, one company cannot do everything. So that's why I totally agree. You need to find an AI factory that can link up a capacity from 3 different layers and dimensions. I think Dr. Lee is right. The model itself is important, and we do feel there's a huge debate regarding the closed model versus open-end model and what's the value of open source communities. I think I'm in a view that more model will be good for our business, because we are going to build the AI factory, as Jason Huang mentioned, that actually combine our computing power, industry know-how, algorithm, and the data. So we actually combine all the 3 key elements to generate AI as a final value tools. So the model itself will great input, but my view is I think going forward, they will be concentrated in a few different models, but the technology path will go down deeper, because the model need to solve real-time and real-world issues, and you have distributed models, so-called smaller size model, can be installed on the devices, on robotics, cars, and maybe on some co-pilots, and become real agents. I think those models will be a reflection of a large model, but my view is a large model is a foundation, but probably not many companies has to compete on that area, but what's kind of linking to the final output of the value is more important, and we are trying to be positioned as a value chain in that close and loop and closer to the final users. That's actually my point.
Well, it comes down to money, and you're the CFO. You mentioned that you're ahead of schedule on some of the profitability.
OP margins, yes.
So, well, do you think you'll make money this year? Do you think you'll turn profitable this year? That's number 1.
Yeah.
And number 2, do you think you need to raise money, given the runway you just laid out for us? And how do you figure out how much money do you actually need?
Thank you, David. It's a great question. So I think as we all learn from financial theory, right, my EBITDA margin is a leading indicator for my cash flow and EBITDA is a leading indicator for my OP margin. So as I mentioned, my gross margin increased about 20%, my EBITDA margin right at 16, which used to be about negative 20, and my OP margin moved ahead 2-year schedule. So last quarter was OP margin operating profitable, break even. So my point is our goal is to for the full year 2025, we try to be profitable on the OP margin side.
On the OP, okay.
Yes. So second point regarding your question, I think today I also encourage the market and investor look at AI not from a more supply side driven economics to a more demand driven. My point is we used to do the budget by saying, oh, this is what I have today, right, and this is what I can get, A plus B, this is my budget for C, which is this year's target. I think given the AI, we do see a lot of strong demand, especially after DeepSeek. More emerging clients, actually, especially as I mentioned, mid-sized clients, they want to try and use AI. That's actually very strong demand. So my point is we need to really switch the focus from what we can do to what market wants. And we use that to drive our budgets. To close your question, my view is as long as the demand is there, right, we will always find a way to finance in the company, to grow the company. I'll give you just one example. In the last few quarters, we basically grew on the top line, as I mentioned, 30% year-over-year based on all the public earning numbers. I think we are probably the number one in terms of YOY growth for last quarter. But if you look at my cash flow, last 3 quarters, we are cash flow positive on operating cash flow. We didn't raise any capital, but we also find a good and the most optimal way to financing, for example, acquisition of the assets, so on and so forth. For example, we have the off-the-balance sheet leasing agreements. We have operational leasing agreements for data centers, capital leasing for the servers. We have the client payment in advance to financing the short-term client utilization, because given the strong demand, the client actually willing to financing some of our purchase for going forward incremental demands. To close the question, I think we're going to be very prudent and manage the balance sheets and make sure that the demand can be met, but there's more financing tools we can use today rather than the traditional tools.
How can optimizing our operations through AI and machine learning technology
help us continue to meet growing global demand?
How can utilizing cutting-edge technologies like the metaverse
Help me get the resources I need to run my business efficiently?
By continually asking how, we're optimizing our drilling, exploration, and reservoir mapping operations to streamline processes.
Another day, asking how.
Another day, meeting your needs.
I mean, we just sort of mentioned some of the highlights there. Thanks very much for joining us in studio. What stood out to you from the numbers in particular?
Well, thank you. This is the second year of our 3-year plan that we've put together and announced to the market. We've been on execution mode the last 2 years and really about enhancing our customer base, winning new customers. So we won several new customers in fashion and luxury, very high margin customers. And much better in terms of working capital for us, really driving us our return on invested capital. And that's really have kind of led to our more of structural growth, despite you hear all the negative consumer sentiment out there. We delivered 21% net profit growth, way higher than what we targeted for at the low teens and the net income. And as a result of that, we have garnered a lot of the highest cash balance we have on record. And we've announced back in August that we will be distributing some of that cash through an excess cash return program to our shareholders. So we have $420 million in cash right now. We're going to give out $180 million extra on top of a normal dividend over the next 3 years. So just looking at 2024, we are giving up about $1.71. So that's almost about a 10% dividend yield in today's share price. Dividend is up.
Yeah, I think we're flashing some of your customers there, everything from sports, luxury, fashion, and casual. You mentioned you have new customers. Can you tell us who the new partners are?
One sports customer, they're doing their relaunch with Under Armour, with Kevin Plank, CEO, founder, coming back. NBA All-Star Weekend was almost a month ago.
Yeah.
They have a new product with Steph Curry, with Masonry, with aftermarket luxury car maker. Very interesting product, but that's just the beginning. I think for them, the rest of the product will be coming out for over the next year or two. We're helping them on the product side. Okay, and in addition to that, I think people recognize our product development skill set, and that's why they come to us. And we're looking at other premium sports customer also. Hopefully, end of this year, we can talk about when we finally launch the product. You'll probably see it in the stores. Very exciting, but there's several other customers on a pipeline for us.
Nike was another name that we saw on that board, and we had their earnings, and something that kind of came through, and that was the struggles that Nike continues to face in terms of trying to clear through inventory. Do you see across your customer base any signs of sort of higher than expected stockpiles of inventory, given as well weaker consumer sentiment?
Yeah, our relation with Nike is very unique because we are more of a higher end premium. We do all the most difficult products for them. And those are typically the limited runs, so typically not you see in the inventory. So we're a very different, unique market. And then with them, even for this year, we're looking at probably flat for them year on year because they have more products. Actually, as you know, there are new CEO coming in. They want to create fresher products. So there's actually even more product development in the pipeline with them.
Let's talk about the outlook now. A lot of people talk about tariffs, which we can get to directly in a moment here. But just the general outlook is uncertain and clouded. There's several major markets in the world, we'll talk about China in a moment, like the U.S., for example, where consumer confidence seems to be trickling lower because of inflation or what have you. What are you seeing as far as the outlook from your customers? What are they telling you about their sort of inventory plans moving forward? And where are you seeing things okay? Where are you seeing things not okay?
I think in general, overall, most of our customers are looking at the U.S. market, also over global consumer market, cautiously optimistic. No one we can predict what will happen with, impact of the U.S. policies on their own economy, but everyone's cautiously optimistic. The lucky thing we can do is that we've been winning so many customers that over the last few years, we have very diversified customers, over 40 customers, and we can actually, thankfully, reallocate. When one certain customer is weaker, we can actually reallocate the production to someone else.
The capacity, okay. Exactly.
So in this case, this next 2025, we're full. We're completely full for the full year. In a weird way, if there's a cyclical upturn, we probably would be more supply constrained. But we're running in full steam right now.
Yeah, I was going to ask you as well. So across sports, luxury, which segment is doing better than others, and which one has a bit of softness there?
Definitely, I think a lot of people have seen luxury has been weaker. Okay, and that's without saying. I mean, Chinese consumer is a big market for them, so it is definitely slower. What was interesting is that a lot of our fashion customer is actually getting stronger. Okay, now a lot of the fashion brands are probably more tied to the U.S. market, but I think it's more unique brand to brand. They have unique product innovation. For example, I'm wearing a pair of shoes from Amiri today. Looks great.
A wide shot?
Yeah, I think we can actually show those shoes.
Next time I should stand up, actually, probably.
There we go.
We have this product that's, a dress shoe, tassel, old shoe silhouette for men's suits, but extremely comfortable. So you'll never slip in the water or on the wet floor or the hills. Much very different than leather shoes from before. So it's something that, we help them productize.
Were you expecting to have your shoes on TV today?
Well, I probably would wear different socks, I guess. I did not know that. Yeah. You caught me on that one. But yeah, so,
no socks, man. No socks is the way to go. I always tell it.
Well, so we have a great product development team that helps our customer in time to productize new product silhouette, but we incorporate new technology that wasn't around for some of the men's shoes from before, and so that's why we've been able to win new customers, and so we think it's a very structural thing.
We can get to tariffs as well, and just talk us through it. I know you said that you're not seeing too much of an impact, but why exactly aren't you seeing such a bearing on the business outlook from those?
Yeah, it is purely because even, I'll tell you, when we talk about U.S.-China tariff, even the tariff situation, we were surprised. We thought most of our customers have already diversified away from China because we don't work with them in China. And then we got calls from them and said, hey, we still have some factories. We work in China. We just haven't outsourced those production yet. So if you guys have capacity in, say, in Vietnam or Indonesia, we would like to kind of strip some of that to you. And so we're, in a way, taking market share because our production is already diversified away from China. And the existing production we have in China is really China for China. Okay, so it's really for the Chinese market.
But are you concerned, though, because obviously the U.S. has these other countries that divert trade in their sights, and so they're looking possibly at levying tariffs as well on places like Vietnam. Are you concerned about that at all?
That's going to be, I think, a concern for production or for brands and manufacturers and also brands all over the world because there isn't anywhere else you can, existing factories don't exist somewhere else. So if it's not China, it's not Vietnam, it's not Indonesia, Thailand or India, there aren't that many more places that have existing infrastructure for that. So I think that would be a different conversation. I think if that does happen, I think, we can only offer diversity for our customer and see how each country will negotiate, of course, with the U.S. government.
As far as customers go, that's interesting. You can tell what the outlook for the economy is. It depends on what the priorities of the customer. What are the number one concerns? So, is it flexibility in the supply chain? Is it your ability to deliver lower cost? Is it your ability to ramp up capacity? What would you think is a common denominator among your customers right now? What is top of mind of all of them, agnostic of what segment of the market they're in?
I would say for us, for Stella, because we're known for high-end quality and product development, number one thing for our customers is quality. And even this year, as we expand our production in Solo, we will have a controlled production. So we want to make sure the quality ensure is actually great. Okay, and that's the thing we want to commit to deliver to our customer. And that's why they come to us, okay? Now, recently, because of what you've seen in the turmoil in geopolitical, diversification has been number two, and actually maybe more forward than other time before. And we offer Bangladesh, Indonesia, Vietnam, and China, and Philippines. So that's why we can actually low balance depending what the geopolitical situation is. Cost is more on the last point. At the end, once you come to Asia, cost is typically lower already.
The final question, CFO, need to ask you. You mentioned 420 million in cash. You're giving out $180 million. What is that ideal cash balance for you guys? And how else are you looking to manage your cash?
We look at $180 million cash for the excess cash return.
Yeah.
We have another $100 million capex for expansion. That was delayed, I would say, over the last 2 years.
And you're taking that from cash?
It's basically fully funded. We kept it on a balance sheet to fully fund this project.
Okay.
So if you take all the $280 million out, we're slightly below $200 million. And that's probably an optimal cash level. And that's how we determine the excess cash return program in general, because we don't need all this excess cash. And we want to make sure we give it back to shareholders and have a higher dividend yield for everyone.
And just very quickly, capacity-wise, this year, we're
increasing 5% in terms of production. It's already built. We're just trying to control how we ramp up the production. But in terms of expansion, my CEO, Steve, and I are looking at the next 3 to 5 year plan, okay, where we want to increase new footwear factory, expand into handbag and accessory. So we're building a new factory and looking at new locations that we're going to expand further volume.
How can optimizing our operations through AI and machine learning technology
help us continue to meet growing global demand?
How can utilizing cutting-edge technologies like the metaverse
Help me get the resources I need to run my business efficiently?
By continually asking how, we're optimizing our drilling, exploration, and reservoir mapping operations to streamline processes.
Another day, asking how.
Another day, meeting your needs.
We talk about this environment of greater volatility, but I think it is fair to say there's no panic. It is just about capital being deployed differently.
Well, I think we've had volatility regimes before, high ones and low ones, and it seems like we've probably come out of the low vol regime already last year. So we are in a more uncertain environment. Stocks are moving in a more volatile fashion, but there are some fairly good underlying fundamentals here and there. For example, U.S. growth has not fallen through yet. In Japan, we've got a virtuous circle going on. So even amid the volatility, we'd probably look for some opportunities to diversify and also look for value in many different markets as we look through this volatility.
You're taking comfort in the fact that the U.S. economy has not fallen through yet. Do you expect, a further easing in the U.S. economy in a significant way, perhaps?
So, yeah, our outlook is for the U.S. economy to slow. However, we don't foresee, at least our central case is not one for an imminent recession. As I mentioned, we still see some good underlying fundamentals. For example, employment in the U.S. is still fairly stable, even though sentiment has fallen a bit. So in this situation, it's not time to head for the hills. We still want to remain invested in the U.S., but it looks like the world is waking up to opportunities outside of the U.S. too. So that's good. That's opportunity for portfolio diversification. So the U.S. isn't the only story around.
But we're seeing a record relocation of capital from the U.S. to elsewhere. How are you reading into this then? I mean, are the opportunities now greater elsewhere versus the U.S.?
Well, if we take a look at where valuations were, and even where they are right now, they're still relatively lofty. So even if we do expect growth in the U.S., and if we're already invested in the U.S., that might not be where we want to increase our investments. And we have seen some undervaluation elsewhere. And Japan is one prime example. We are still near the lower ends of the valuation range over the last 20 years, and that's with the structural recovery that's going on, the improvement in governance, the fact that wages are rising, inflation is picking up. So there's value to be had outside of the U.S. So I'm not surprised that there is some reallocation going on. I just don't think it's time to panic.
Where else do you see money, capital heading to apart from Japan?
Well, we have started to see some revaluation going on in Europe, for example, and also in China. And in Europe, it seems to be a totally different story from a fiscal standpoint. Until recently, we saw Europe, even though the ECB was easing rates, then European nations, especially the large ones like Germany, they were reluctant to engage in greater fiscal easing, even with growth pretty soft. But that seems to be changing. And also, European savers still have engaged in precautionary savings, which means they have the wherewithal to consume in the future. And with rates heading lower, at least the overnight rates heading lower, there might be less reason to hang on to those precautionary savings. So we might be seeing a turnaround from very stagnant growth to at least a little bit more upside in Europe. In China, of course, we're still dependent on what happens with tariffs and how China responds to them.
Naomi, is it possible to be talking about Europe exceptionalism at a time when U.S. exceptionalism is actually waning?
Well, I think that I've been in the camp where when we talk about exceptionalism, then I think we have to be a little bit more detailed. Of course, U.S. growth has been very strong to date, and we've seen the performance in U.S. stock markets. That certainly has been exceptional. But in the future, do we expect that to be the only story that matters? No, we do not. The rest of the world also matters. So I think that maybe the narrative is changing from this U.S. exceptionalism that can't be touched to something more like higher stakes growth in the U.S. Maybe we will see a pricing in of greater risk premia, even though there's opportunity in the future for the U.S. Perhaps we'll see a pricing of greater risk premia for U.S. assets.
How can optimizing our operations through AI and machine learning technology
help us continue to meet growing global demand?
How can utilizing cutting-edge technologies like the metaverse
Help me get the resources I need to run my business efficiently?
By continually asking how, we're optimizing our drilling, exploration, and reservoir mapping operations to streamline processes.
Another day, asking how.
Another day, meeting your needs.
In terms of the extensive footprints with your leasing of distribution facilities, I'm just wondering if you've noticed any change in tenant behaviour or demand in this environment of trade uncertainty.
Good morning. Up until about 2-3 weeks ago, all the signs were extremely positive, and there was almost a surge of demand on the back of a pretty slow 2024. In the last 2 to 3 weeks, I sense a change in tone in terms of some decisions being slowed, but the need is actually there. Whether it's translating into actual leasing remains to be seen. We haven't seen any negative data yet, but there's usually a couple of week lag. So I'm looking very carefully at the data that's coming in.
Is it particularly challenging at the moment forecasting demand? Because uncertainty is a word we're hearing a lot at the moment, even from the likes of the Federal Reserve Chair, Jay Powell. I mean, how are you thinking about and positioning ahead of all these tariffs we're expecting on April the 2nd?
So it's interesting. Any kind of disruption, whether it's a pandemic or an earthquake or tariffs now, puts a lot of pressure on the supply chain. And as a result, companies need to carry more inventory in the supply chain to be able to fulfill their needs. So it's a little bit counterintuitive. Tariffs slow down the economy and create more inflation. But actually, in the very short run, it increases demand for logistic facilities. In the long term, of course, demand is tied to economic growth. And if tariffs continue, I would expect long-term demand to soften. But the short-term effect is for sure positive.
Tell us about sort of outside of the US, where are you seeing the growth and investment priorities, particularly in Asia?
Well, I think China is actually bottoming, and there are signs that I wouldn't say it's totally coming back strong, but it is definitely off the bottom, and it feels a little stronger to me. Japan has had very stable demand in the last couple of years. There's been a fair amount of supply that's come on the market in Japan in 23 and 24, so vacancy rates have increased. But demand has been solid, and now construction has slowed. And my expectation is that that continuous demand will absorb the space in the next 24 months.
I find it interesting that you see potentially sort of that recovery in China, right? Because we know that the logistics sector, after a lot of investment in anticipation of a long-term boom in e-commerce demand, that's seen a real slowdown. Does that mean you see that corner really being turned? And how much of an investment are you looking to make in the Chinese market?
Well, it's tough to say for sure whether it's a turnaround or an inflection point or just maybe a dead cat bounce. I'm not quite sure about that. I think we need to wait and see. But I do feel that the sentiment is getting a little bit more positive. And our volume of investment will totally depend on the opportunities as we see them evolve. We don't have a budget for investment. We're always looking around the globe for the best opportunities, and we operate in 20 countries, so we can always allocate capital to places where we see the best opportunities in the long term. The other market that I should have addressed in your prior question is that India is actually pretty strong, and we're building a pretty significant business in India.
Yeah, can you tell us a little bit more about that? What is the demand outlook like for India, and does it provide a more stable trading environment?
Well, for now, for sure, the demand dynamics are very positive. Obviously, you have a large population. That population is gradually getting more affluent and therefore more consumption. And the key to our business is consumption. The more consumption, the more space we lease. So that has continued in India, probably better than most other places around the world. I would have said until about 2 to 3 weeks ago that the U.S. was the engine, the locomotive that was really pulling the rest of the global economy. But as I said earlier, it remains to be seen whether that will continue or not.
Well, you're joining us from Japan today. I'm just curious what brings you to that country and what opportunities you're looking at there.
Well, we have a very long standing business in Japan, going back in excess of 20 years. It is the second largest market globally for us, and we're both a developer and a long-term owner of real estate in this market through a J-REIT. And as part of my normal duties, I do visit markets to catch up with our team and to get a real firsthand look at what demand is and what the market dynamics are.
What's the opportunity and growth that you potentially are starting to see when it comes to data centers and infrastructure and investment when it comes to AI demand, right? Because at a time when perhaps you are seeing traditional retail and warehousing slow somewhat in the US, are you seeing some of that demand shift to the likes of data center facilities?
Well, there are independent drivers for each one, but you know, at the moment, the demand for data center space is not driven by the economy. It is growing so much faster than the rest of the economy that fluctuations in economic growth are not going to affect data center demand in the short term. If you really believe all the announcements that the large users of data centers have made, the numbers are just staggering. They're in the hundreds of billions of dollars. And of course, the limiter on that is the availability of power to run these data centers. So we're very active in the space. Many of the same land positions that we have for logistics lend themselves to data center development. But the key is procuring the power. And today, we have procured about 3 gigawatts of power, which is very significant. And we're working on opportunities that could be in excess of 20 gigawatts. We're not going to get all of those power applications, but we're working really, really hard to secure power. We're also looking at off-grid solutions, what they call on-premise solutions, to generate power on-site, independent of the grid. And of course, in different countries, that works differently. So there is no general way of talking about that.
Control and monitoring technology with Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
I want to ask you about this meeting and the takeaways. To be a fly on the wall, did you talk about permitting changes that you could make now that would lower the break-even cost of oil to allow producers to keep pumping and keep making money?
We did. You know, we heard a litany of delays, of uncertainty about whether they could get permits, whether they could do this or whether they could do that. So we were in listening mode and heard a number of things. And our message was the goal of this administration, President Trump got elected to increase American energy production. More supply means lower costs, more jobs, more opportunities, and more geopolitical power. So we were in listening mode, but absolutely said we want to be helpful to unleash American energy.
Secretary, when you talk about listening mode, last week I was at CERAWeek by S&P Global in Houston, as were you, and I listened when many CEOs said they had concerns about tariffs. Did you address some of that yesterday at the White House?
Tariffs wasn't discussed at the meeting. It was more a broader unleash American energy and all that. We actually didn't get into the tariff dialogue.
What would you suggest then to energy producers who are concerned, if not about the lasting impact of tariffs, some of the confusion that has surrounded this conversation? Mr. Secretary, you've seen the market reaction, and this is a reality for every business owner.
It is. Look, the president's got a vision. He's got a bold agenda, and it's being created right now. So there's negotiations with multiple countries. Think of his overwhelming goal. He wants reciprocal trade. If a country has high tariffs on us, he wants them to lower their tariffs on us, and he'll match that reciprocally. So these are negotiations that need to go back and forth. So I understand the uncertainty. We all feel it. We all see it. But I think it's a negotiation going to a great place. But we won't have clarity. I think it won't be that long, but we're not there yet.
I do want to ask you a question about our reporting that you will seek up to $20 billion to accomplish the president's goal of refilling the nation's oil reserve. Obviously, you'll have to go to Congress on that. Have you done that? And what will you do about that moving forward in Washington, D.C.?
Yes, it's critical in our ask and in our agenda. You know, that the strategic petroleum reserve is for just that. It's to be strategic safety and security in the event of very bad world events. They may never happen. We hope they don't. It's like insurance, but you've got to be prepared for anything. We've got to have our country secure and safe no matter what happens with energy, because if you get energy wrong, nothing else matters. So yes, we're going to Congress to get money for that. Sadly, it takes much longer to refill the Strategic Petroleum Reserve than it took to drain it for political reasons, not strategic reasons, in the 2022 midterm elections. So it's a multi-year process to fill it, but we want to get going as soon as we can.
We talked about that last time you joined us from Port Sulphur, Secretary. Just quickly before we move on, do you know how soon you can make your first bid on oil, the first batch to refill the SPR?
I suspect that's up to Congress. So Congress is going through a process there.
Now, though, or do you want to see $50 crude before you make that move?
Oh, no, we would happily. We're not going to guess the price of oil and all that. We would happily buy crude right now. Obviously, if we see spikes higher or huge dislocations, we might stop buying crude. But no, if we had the approval right now, we'd be in the market today.
President Trump, Mr. Secretary, reintroduced the prospect of a minerals deal with Ukraine today. This is what he said. I'd love to get your reaction.
We're also signing agreements in various locations to unlock rare earths and minerals and lots of other things all over the world. But in particular, Ukraine, we're doing very well with regard to Ukraine and Russia. And one of the things we are doing is signing a deal very shortly with respect to rare earths with Ukraine, which they have tremendous value in rare earth, and we appreciate that.
Got everyone's antennas up today, Mr. Secretary. What are you hearing about this? How quickly could it happen?
I think a deal could be done quickly. It's a brilliant idea when you think about it. We often use this misnomer term, natural resources. Those resources have been underground for millions of years and they haven't benefited anyone. I call them natural materials. They only become resources when technology, capital, and human activity brings them out of the ground and turns them into resources. But to have the United States as your partner to develop materials that have been sitting there for a long time unused, that's upside to Ukraine, it's upside to the United States, and of course it's a joining together of the nations in an effort on the ground in Ukraine. If I'm Ukraine, I am all in on that deal, and as the American Energy Secretary, I am all in on that deal.
You know, last night we spoke with retired General Wesley Clark, former NATO Supreme Allied Commander. Here's what he had to say about putting U.S. involvement in energy facilities in Ukraine.
Those are old, what we consider obsolescent nuclear plants. We didn't design those plants. They're not our plants. We can't just transplant people over there and say, hey, by the way, this is the GE design, go after it. It isn't. But yes, we could learn to take care of those plants. Zaporizhia, the plant's been partially occupied by the Russians. They've threatened to damage it and destroy it at various times. It wouldn't be such a bad thing if the United States says, well, now you can't touch it because we're in it.
Secretary, your response to that?
Yeah, of course there's complexities in everything when you do business offshore, overseas. Boy, I've done business in countries much more difficult to operate in than Ukraine. But, you know, of course, the general's right. It's a different plant design. But you would bring local experts that know that plant, and you'd bring high-end nuclear experts from the United States, and together, I think wise decisions would be made. If the political decision is made for the U.S. to lead the operation of that plant, so be it. We could do that, I think, with very little problem.
Well, Secretary, have you spoken with any American companies that would be interested in buying a plant like Zaporizhia? And if this happened, whether it was that or another, would your department regulate it?
No dialogues about that yet. No dialogues about that yet. But America's full of expertise in this area. And boy, I, at the Department of Energy, have been overwhelmed with people putting their hand in the air and saying, put me in. How can I help? What can I do? So I think we would see tremendous interest. Something needed to be done. We'd have tons of people wanting to do it.
Upskilling is becoming more important. So the world has to be prepared for it. So there has to be a complete shift in how people obtain these skills and what is the shortest path for the individual and for the employer. With generative AI, workplaces have suddenly found a tool that can either compete with the existing talent or can be a competitive advantage. The reality is you can leverage that tool. That's the only way to convert that challenge into an opportunity.
Welcome to Bloomberg Markets. I'm Vonnie Quinn. Solid economic data on housing and jobs helping.
एक क्रूड ऑयल का ध्यान रखना गाइस, ये जो रीटेस्ट जोन है यहाँ से बाइंग का टारगेट फिलहाल इतना ही है, लगभग 40 से 50 पॉइंट। यहाँ पर थोड़ा बहुत वापस रिजेक्शन मिल सकता है, तो जो लोग यहाँ से बाइंग में हैं वो थोड़ा संभल के। मैं एक्सपेक्ट कर रहा हूँ इस रेंज को, यहाँ पर ये रेंज बनी रहनी चाहिए। किसी एक साइड ब्रेकआउट या ब्रेकडाउन होगा, या तो नीचे 5845 के नीचे या फिर ऊपर कहीं इस लेवल के ऊपर कहीं, तभी ये रेंज ब्रेक होगी। नहीं तो दिस इज़ अ रेंज, नीचे से बाइंग में थोड़ा ट्रेड मिल सकता है, ऊपर से सेलिंग में भी थोड़ा बहुत ट्रेड मिल जाएगा। ठीक है, बाकी नेचुरल गैस भी सपोर्ट पर ही है, वहाँ पर भी बाइंग का प्लान कर सकते हैं। 5:30 भी हो गया, न्यूयॉर्क सेशन ओपनिंग है, लेट्स सी कितना और वॉल्यूम जनरेट होता है।
All the Cybertrucks it produced and sold in its first 15 months it's been on the U.S. market. So that's over a safety issue that Tesla is having trouble resolving. The EV maker estimates that 1% of the 46,000 pickup trucks have a defect, with Tesla saying it will foot the bill for replacing the panels. We're also looking at Accenture. Shares are edging slightly lower. We had the company posting weak margins for the second quarter, though analysts say that it was better than feared. We have Bloomberg Intelligence also saying that the report suggests that the company is performing better in the downturn, less than its peers. And last, we have Darden. So this is quite an opposite picture because shares are popping around 6%. The company said its implied fourth quarter guidance includes comparable sales growth above 3%. That's ahead of the 2.3 consensus. The annual forecast also imply that fourth quarter total sales are higher than estimates. Sudardan also discussed manageable inflation levels and the ways it can mitigate its relatively limited tariff exposure. Back to you, Vonnie.
Isabel, thank you so much. That's Bloomberg's Isabel Lee there. Turning back to the macro picture now. Fed Chair Jay Powell bringing back the term transitory when discussing the potential inflationary bump from President Trump's tariffs policies. Earlier today on Bloomberg, former Kansas City Fed President Tom Hoenig said he thinks inflation could actually have more staying power.
We have huge debts coming forward. If we get through the transitory tariffs, that would be fine, but we're going to spend a lot more money again as a nation. The Fed's going to have a lot of pressure from this administration and from the economy more broadly to monetize some of that and to help the banking industry monetize that debt that's going to be coming on board. That should put inflationary pressures up higher. And number two, remember that they keep saying that policy is restrictive, but real interest rates are in the 1.5% range. That's not particularly restrictive in historical context. So I don't think we should be all that sanguine if we get through this tariff that we're home free.
Let's digest all that we've learned now with Ira Jersey. He's the chief U.S. interest rate strategist with Bloomberg Intelligence. So Ira, the administration would have us believe that the inflationary impact, if there even is one, will be temporary. The Fed seems to be saying the same thing. What are the academic studies saying? What does the market typically say in a tariff scenario?
Yeah, well, certainly the market, when you look at the tips market and what's implied for inflation, it basically says that, hey, we are going to have a blip up in inflation over the next year to 18 months, and then inflation will trend lower and be closer to 2% kind of in the medium term. So the market does seem to think that it's transitory. Now, I think the risk, however, is that if we do get increases in prices and things that are observable easily by the household sector, that you can wind up having inflation expectations for a vast majority of Americans move higher, and that could change spending patterns, and that could actually slow down the real economy pretty significantly. And that's kind of my fear in all of the tariff talk.
Did you detect anything in what the Fed chair said yesterday about inflation expectations that perhaps he's maybe more concerned than he's letting on? He typically swatted away all those concerns about the surveys and, University of Michigan 5 to 10 year expectations going higher and so on.
Yeah, something about the survey data that we've seen is the survey data has been much weaker than the real data. And that's actually been something that's occurred over the last 15 to 18 months. And we've noted that many times in our research that, the market is relying more on the hard data than it is on the survey data. And when you dig into the survey data, a lot of that does have to do with political party, right? So if you look at even that 5 to 10 year inflation data and you sort it by political party, Republicans, Independents, and Democrats all think there's going to be runaway inflation. Republicans think that inflation is going to be fine. It's those independents that are thinking that maybe there will be some inflationary impulse that are kind of a little bit more troubling. So I do think that the survey data is really tied to the more political angst and things there. And people, look, we've had poor consumer sentiment numbers before, and people are still spending money. So I do think that the hard data has to be more important, and I suspect that the markets will continue to focus more on the hard data than the surveys for now.
But it's interesting, Ian Lingen pointing this out, that only 2 dots, in fact, made up the difference between the median dot implying a 50 basis points of cuts this year and 25 basis points of cuts this year, yet the market is pricing in perhaps even 3 at this point, some parts of the market at least, Ira. When does that come into synchronicity?
Yeah, so that was an interesting move yesterday. So if you go back and you look at the last 2 years of the Fed dots versus what the market was pricing, the Fed had generally followed what the market was pricing. And yesterday it did diverge from that just a little bit, not having a somewhat more dovish dot plot. So I do think maybe there's an acknowledgement from some members of the Fed, and we'll obviously have a lot of Fed speak over the next 2 weeks that will kind of confirm this, but that there's a lot of Fed members who are thinking, hey, maybe we really really aren't very restrictive right now, which we agree with. We actually think that neutral on a nominal basis is only about 4%. So you're only talking about one more rate cut to get to neutral. But I think a lot of members of the Fed are saying, well, we are uncertain. And if we're uncertain, we're better off sitting on our hands, fighting inflation first, and then worrying about growth. And they can especially do that because you still have an okay labor market. Labor market's not great by any stretch of the imagination, but it's also not deteriorating. You don't have sub 100,000 payrolls. You don't have unemployment rising significantly. So all of those things point to hey, let's just stay the course for now until we get data that's significantly worse one way or the other, either higher inflation or much slower growth slowdown and poor jobs.
So I hear what you're saying, Ira, but the Fed chair really did paint a picture of a kind of stagflationary environment yesterday, downgrading growth expectations and, definitely looking for a small tick up in unemployment. It's not a great scenario. Can we avoid that with monetary policy?
I don't think so, because the Fed's fighting two things, right? They have to figure out in a stagflationary type of environment which way they want to go. That being said, when you look at the SEP, yes, they downgraded their growth expectations. They still don't see a recession or even zero GDP growth, right? So they still see positive growth. It's just much slower than it has been the last few years. But they do see that uptick in inflation, right? So nominal GDP, so if you add inflation to real growth, you wind up with around a 4% handle based on what the Fed said. 4% nominal growth is fine, and that's so I think that's one reason why the Fed is thinking that it can stay there. And keep in mind, Vonnie, how many times did he say uncertain, that the outlook is uncertain? He hounded on that again and again and again. And I think that that's why if things are uncertain, why change policy, right? And I think that's one of the things. I know risk assets, so credit spreads and equities, they might not want to hear that because they abhor uncertainty. But when it comes to the Fed and Fed policy, I think that the stay the course has to be the base case scenario for now, unless we see changes in the real economy. And they are so data dependent right now that that unless you see any major shifts, that the base case is, hey, we do nothing.
Sure, and he also made sure that it wasn't just trade. We were focused on that the net effect of fiscal policy, immigration and regulation, and along with all of the trade policies, is what we need to be focused on. Ira, thank you so much. We'll continue to observe the markets and what they say. That is Ira Jersey with Bloomberg Intelligence. Coming up, the European Union possibly avoiding a tariff hangover by delaying. Next, this is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
This is Bloomberg Markets. I'm Vonnie Quinn. The European Union is delaying its proposed 50% tariff on American whiskey until mid-April, aligning it with broader countermeasures against U.S. steel and aluminum duties. This comes after President Trump threatened to impose a 200% tariff on the European Union's wine and liquors last week. We're now joined by Bloomberg's Fiona Rutherford, who covers these American Welcome to Bloomberg Markets. I'm Vonnie Quinn. Solid economic data on housing and jobs helping to keep stocks in the green as we hit noon in New York. Let's get a quick check now on the markets. So again, this rally continuing into today, albeit with a little less ebullience, let's say. We have the S&P 500 up 0.2% now, about half of its components higher, half lower. Same for the Philly Sox index. And as you can see, the Nasdaq 100 also extending its gains into today by about 0.2%. We are still in correction territory for the Nasdaq, though, down more than 10%. 4% since its peak in February. The two-year yield, 396.15. We are well below that 4%. And gold, just off its highs. That tells us a lot about yesterday's Fed and about today's economic data and where the economy is headed. But let's highlight a couple of individual equity movers now. For that, we go to Bloomberg's Isabel Lee.
Hey, Vonnie, first up, we have Tesla. Shares are edging lower by around 1.5%. Tesla recalled all the Cybertrucks it produced and sold in its first 15 months it's been on the U.S. market. So that's over a safety.
Guys, ये क्रूड ऑयल में यहाँ पर थोड़ा बहुत अपना एसएल कॉस्ट पर डाल देना हाफ प्रॉफिट बुक करके लगभग 45 to 50 पॉइंट का मोमेंटम है. ठीक है, फिर देखते हैं यहाँ पर थोड़ा बहुत रुक सकता है प्राइस. अगर कैंडल ओपन इक्वल टू लो बन जाए तो बहुत अच्छी बात है, अदरवाइज वापस रिजेक्शन मिलने के चांसेस हैं थोड़ा बहुत. तो जो लोग बाइंग में है, पुट योर एसएल ऑन कॉस्ट हाफ प्रॉफिट बुक करके एंड देन ट्रेल. एक्सपेक्ट करते हैं कि थोड़ा बहुत यहाँ से रिजेक्शन ले और इस रेंज को फिर कहीं ब्रेक करता है. अगर ये किसी भी साइड, मुझे भी नहीं पता किस साइड करेगा, हो सकता है नीचे ब्रेक करे, हो सकता है अप साइड ब्रेक करे. वी डोंट नो एग्जैक्टली टिल नाउ. डिपेंड ऑन द कैंडल ओपन इक्वल टू लो, ओपन इक्वल टू हाई कहाँ बनेगी, तो फिर उसके बेसिस पे देखेंगे. बाकी यहाँ पर भी एक सेलिंग का प्लान रखेंगे क्रूड ऑयल में. कैंडल ध्यान रखेंगे ओपन इक्वल टू लो पे नहीं, ठीक है, नॉर्मल कैंडल. बाकी नेचुरल गैस भी साइडवेज ही है, कंसोलिडेशन बहुत कर चुका है. लेट्स सी थोड़ा ये भी मूव करे ऊपर एफईजी तक एटलीस्ट चला जाए, फिर इस एफईजी से देखते हैं सेलिंग थोड़ी बहुत अगर आती है तो. बाकी मेजर रेजिस्टेंस काफ़ी दूर है, अब नहीं मूव हुआ तो फिर कुछ कर भी नहीं सकते. लास्ट ट्रेडिंग सेशन है वीक का, ज़्यादा रिस्क मत उठाना, ठीक है, डोंट टेक हैवी रिस्क. बाकी एक्सपेक्ट करेंगे थोड़ा बहुत मोमेंटम अब हो जाए. कम ऑन लाइक करते रहो गाइस, रुकना नहीं है. 38-40 पीपल आर वाचिंग, 25 लाइक्स ओनली. जिन लोगों ने लाइक नहीं किया फटाफट से लाइक कर दो. कोई क्वेश्चन है तो कमेंट बॉक्स बाकी आज कोई डेटा भी नहीं है इंपॉर्टेंट, कोई न्यूज़ वगैरह आएगी तो देखा जाएगा. डेटा शेड्यूल नहीं है कोई भी. बाकी नेचुरल गैस भी देखते हैं यहाँ तक जाता है तो देखो ऊपर नेचुरल गैस पे ना रेजिस्टेंस अपर लेवल पे है, मेजर रेजिस्टेंस। बट क्योंकि कल थोड़ी हैवी सेलिंग आ गई थी, मार्केट का ट्रेंड थोड़ा सा बेरिश साइड पे है अभी, तो सेलर्स ट्राई करेंगे कि मार्केट को लोअर लो फॉर्मेशन पर ही रहने दें इस तरह से, क्योंकि अगर ये थोड़ा सा हायर साइड पर निकला तो फिर मार्केट के लिए वो एक हायर हाई फॉर्मेशन के लिए काम कर जाएगा। तो थोड़ा बहुत यहाँ रुक सकता है इस एरिया के अराउंड, एंड हम ट्राई करेंगे यहाँ से थोड़ा बहुत रुकता है तो फिर देखा जाएगा कि ऊपर जा रहा है या फिर नहीं। अगर ऊपर चला जाता है तो वेल एंड गुड, वो मेजर रेजिस्टेंस ही रहेगा। बट अगर मार्केट को डाउन ट्रेंड में ही कंटिन्यू रहना है, सेलर्स अगर ये सोच रहे हैं कि डाउन ट्रेंड में ही कंटिन्यू रखना है, तो उस केस में ये जो एफ बना हुआ है ये होल्ड हो जाना चाहिए। इट मीन्स कंटिन्यू सेल ऑफ चालू रहेगा। सेक्शन में बताओ क्या लगता है, जाएगा नेचुरल गैस ऊपर या फिर यहीं से रिटर्न? व्हाट डू यू थिंक? क्रूड ऑयल, सॉरी, नेचुरल गैस सिनेरियो, would it break this FEG or gap right now, or we need to see some pushback again? देखो नेचुरल गैस पहुंच गया रेजिस्टेंस पे, सॉरी एफयूजी पर। यहाँ पर देखो बुक कर सकते हो नेचुरल गैस में प्रॉफिट। जो लोग ट्रेल करना चाह रहे हैं वो लोग, अगर ट्रेल करना है हाफ प्रॉफिट बुक करके ट्रेल करना। कैंडल ओपन इक्वल टू लो है तो थोड़ा सा वेट करेंगे। इंपॉर्टेंट लेवल है ये, अगर मार्केट को डाउन ट्रेंड में रहना है तो ये होल्ड होना चाहिए। अगर ये नहीं होल्ड होता है तो फिर देयर वेरी हाई चांसेस कि फिर प्राइस थोड़ा सा जो डाउन ट्रेंड कल बना हुआ था 15 मिनट टाइम फ्रेम पे उसको चेंज करने की कोशिश कर सकता है इस तरीके से। जो लोग बाइंग में है चाहो तो प्रॉफिट बुक कर सकते हो, 10 पॉइंट लगभग मिल चुके हैं। काफ़ी देर रुकने के बाद ऑप्शन वालों का मुझे नहीं पता कुछ मोमेंटम आया नहीं आया, फ्यूचर वालों को तो अच्छा मूव आ गया, या फिर किसी ने कॉल सेल किया, पुट शॉर्ट करी है अगर। काफ़ी देर रुका दिया मार्केट ने। ठीक है, बुक कर लेना यहाँ पर हाफ प्रॉफिट अगर ट्रेल कर रहे हो। ब्रेकआउट हुआ तभी लाइक सस्टेन करेगा तभी और ऊपर जाएगा, नहीं तो यहीं से नीचे आया तो फिर ये रेंज मानो और नीचे फिर होल्ड होने के चांसेस भी थोड़े से कम हो जाते हैं। बाकी जिनको हो गया प्रॉफिट अवॉइड करना कोई भी नेक्स्ट ट्रेड। जी 12 के बुक कर लिया नेचुरल गैस में, चलो बढ़िया है। बीच में एंट्री मत करना, ठीक है। बाकी क्रूड ऑयल वाले भी ध्यान रखना, जो लोग क्रूड ऑयल में हैं। ऊपर भी रेजिस्टेंस है, रेंज बना दी है मार्केट ने, यहाँ से वापस सेलिंग का प्लान है। ये एक छोटी सी रेंज है लगभग 40 टू 50 पॉइंट की। किसी एक साइड पे निकलना जरूरी है, या तो 5915 के ऊपर या फिर 5843 के नीचे, तभी कुछ बड़ा मूव आ सकता है, नहीं तो ये रेंज के अंदर फंस जाएगा। इसको कर सकते हैं बुक, लेट इट गो। Guys, 50 people are watching. No new trade now. बढ़िया है, ग्रेट। हो गया प्रॉफिट तो अब अवॉइड ही करना, नया ट्रेड लेने की जरूरत भी नहीं है। 53 people are watching, only 28 likes अभी भी रुके हुए हैं. रुकना नहीं है लाइक करने में. बाकी गोल्ड को भी देखोगे, थोड़ी देर पहले लेवल बताए थे, वो रेजिस्टेंस लग रहा है मनी नहीं है इसका नीचे आने का. रेजिस्टेंस पे रुक गया प्राइस. वाह, सुबह बताया था लेवल वो 3033 वाला. थोड़ी बहुत सेलिंग आई 2 बार, बट उसके ऊपर ही रुका हुआ. मुझे लग रहा है लिक्विडिटी और ऊपर है जो उसको लेने जाने की कोशिश कर रहा है ये गोल्ड में. ठीक है, मॉर्निंग पे बताया था ये लेवल, यहाँ पर था प्राइस उस समय, मुझे याद आ रहा है, इस कैंडल पे 12 बजे के आसपास. थोड़ी बहुत सेलिंग एक बार यहाँ से आई, दूसरी बार फिर ये आई, थर्ड टाइम ये आई. अभी वहीं रुका हुआ है. यहाँ पर नहीं रुकता है तो फिर ये वापस चला जाएगा कल के रेजिस्टेंस जोन पे. ज़्यादा लिक्विडिटी है नहीं यहाँ पर लगता है. फिर नीचे हमारे पास सपोर्ट यहाँ पर, ये नीचे अराउंड 3015. ये गोल्ड 15 मिनट फॉरेक्स का चार्ट है. जो लोग गोल्ड में ट्रेड करते हैं. थोड़ी देर साइडवेज अगर चला जाए ना नेचुरल गैस, वेरी हाई चांसेस कि निकल जाएगा ऊपर. नहीं तो वापस ये रेंज बना दी है, मान के चलो यही रेंज है. अगर यहाँ से रिजेक्शन मिलता है तो इट मीन्स मार्केट अभी भी डाउन ट्रेंड में ही है एक तरह से. बाकी बिटकॉइन को देखोगे 15 मिनट में परसों वाले जो रेजिस्टेंस थे अभी भी इंटैक्ट हैं. 15 मिनट टाइम फ्रेम पे ऊपर परसों वैसे रेजिस्टेंस मिल गया था कल, परसों ही मिला था, कल भी मिल गया था 6200 से 300 के बीच में. और फिर नीचे एक सपोर्ट था, कल ही रात को सपोर्ट लिया था वहाँ पर 83,800 टू 83,700 के बीच में. मॉर्निंग से वहीं रुका हुआ है. लॉजिकली तो ब्रेक हो जाना चाहिए था या फिर ऊपर चला जाना चाहिए था. हाफ ही लेवल तक गया है बिटकॉइन में भी. ये भी परसों वाली लेवल है, कुछ चेंज इसमें भी नहीं हुआ है अभी भी. ये हाफ ही लेवल तक गया, फिर वहीं पर रुक गया प्राइस. लिक्विडिटी बची नहीं है ज़्यादा यहाँ पर भी. यूएस मार्केट ओपन होगा आधे घंटे के बाद, मोस्ट प्रॉब्ली मार्केट विल मूव आफ्टर दैट बिटकॉइन में. Come on guys, 70 people are watching. 40 लाइक्स पे रुक गए हैं. लाइक करते रहो, रुकना नहीं है लाइक करने में. नेक्स्ट वीक एक्सपायरी भी है, ध्यान रखना नेचुरल गैस की. 40 likes are done. हंड्रेड का टारगेट रखें, फटाफट से कर दो. नहीं तो कमेंट बॉक्स में पूछ सकते हो. वो यूएस का नहीं है. रिटेल सेल्स का डेटा जो अभी आया था वो यूएस का नहीं है, कनाडा का है वो. ये 6 PM पे जो डेटा आया था वो कनाडा का था, रिटेल सेल्स और को रिटेल सेल्स का डेटा. वीक डेटा है. टैक्स ब्रेक और जो ट्रेड डिस्प्यूट, एक तरह से कह सकते हो ट्रेड वॉर चल रही है यूएस और कनाडा के बीच में. सो दिस रिटेल सेल्स डेटा ऑफ कनाडा इज वीकन. %50 का डंप है क्या? टेस्ला का स्टॉक देखो ये गिरता ही जा रहा है. वाह. नवंबर में इलेक्शन हुए थे, उस समय हाई बनाया था, रिजल्ट आया था जब नवंबर दिसंबर तक. अपने ऑल टाइम हाई से 50% डाउन जा चुका है यार. 50% डाउन. सपोर्ट पर ही है वीकली टाइम फ्रेम पे देखोगे वैसे तो. क्या लगता है सपोर्ट लेगा या फिर सेल ऑफ कंटिन्यू रहेगा? वीकली में सपोर्ट है यहाँ पर वैसे. यहाँ से अगर थोड़ा भी ऊपर चला गया तो 50% अप हो जाएगा. मेरी वॉइस स्लो आ रही है? नहीं नहीं, ऐसा तो नहीं है। अब कैसी आ रही है वॉइस? आपको अच्छी है? नाउ इट इज़ गुड या फिर नॉर्मली अभी भी? वॉइस सही नहीं आ रही है तो बता देना गाइस। इससे तो नॉर्मली वॉइस है। अब कैसी है? नाउ इट इज़ नॉर्मल या अभी भी कम आ रही है? लाइक करते रहो, आवाज़ ही बढ़ जाएगी। 50 लाइक्स हो गए हैं, 100 लाइक्स का टारगेट है। जिन लोगों ने लाइक नहीं किया करो। स्टेबल आर वॉचिंग, सभी लोग लाइक कर दो, अभी पूरे हो जाएंगे। अभी भी कम है? फिर तो मैं बोल ही कम धीरे रहा हूँ। अभी भी कम आ रही है तो इट मीन्स मैं स्लो ही बोल रहा हूँ फिर तो। नेक्स्ट वीक का देख लेते हैं। नेक्स्ट वीक क्या डेटा है? वैसे वीकली एनालिसिस कल करेंगे, सो डोंट फॉरगेट टू जॉइन टुमारो वीकली एनालिसिस अराउंड 12 to 2 PM के अराउंड। कोई क्वेश्चन होगा तो वहाँ पर पूछ सकते हो। नेक्स्ट वीक देखोगे कमोडिटी सेक्टर में तो 23rd संडे है, मंडे को मार्केट ओपन होगा, 24 को अब सीधा। बाकी इस मार्च में अपना फाइनेंशियल ईयर भी कंप्लीट हो जाएगा, तो मंडे को इम्पोर्टेंट डेटा ही देखेंगे। वैसे सारे डेटा ही आ गए इसमें। यूरोप और इंग्लैंड को रिमूव कर देते हैं, यूएसडी का डेटा देख लेते हैं। मंडे को मैन्युफैक्चरिंग पीएमआई, सर्विस पीएमआई का डेटा है, गोल्ड और सिल्वर के लिए इम्पोर्टेंट है। ट्यूसडे को भी आपका कंज्यूमर कॉन्फिडेंस, न्यू होम सेल्स, रिचमंड मैन्युफैक्चरिंग इंडेक्स का डेटा, ये भी गोल्ड और सिल्वर को इम्पैक्ट करता है। वेनेसडे को ड्यूरेबल गुड्स, क्रूड ऑयल इन्वेंट्री, गोल्ड सिल्वर क्रूड ऑयल के लिए ये इम्पोर्टेंट है। और थर्सडे को देखोगे उस दिन यूएस का फाइनल जीडीपी का डेटा आएगा क्वार्टर ऑन क्वार्टर बेसिस पे। इंडिया का भी आएगा शायद उस दिन, मुझे गलत नहीं हो तो। एक दिन पहले आता है, उस दिन आता है। अनएम्प्लॉयमेंट क्लेम्स का डेटा भी है और पेंडिंग होम सेल्स का। ये भी गोल्ड सिल्वर क्रूड ऑयल नेचुरल गैस सभी को इम्पैक्ट करता है। एंड देन फ्राइडे को, इसमें कनाडा भी इंक्लूड है क्या? फिर फ्राइडे को आपका ये बहुत इंपॉर्टेंट डेटा है, पीसी प्राइस इंडेक्स का डेटा और कंज्यूमर सेंटिमेंट, दोनों ही बहुत इंपॉर्टेंट डेटा हैं गोल्ड और सिल्वर के लिए। ये मेजरली इम्पैक्ट डालते हैं, कंज्यूमर सेंटिमेंट और प्राइस इंडेक्स का जो डेटा है। तो कह सकते हो ऑलमोस्ट मंडे टू फ्राइडे हर दिन डेटा ही है कोई ना कोई। इसके अलावा फिर 28 29 30 को मार्केट बंद है, सैटरडे संडे हो गया। 2 अप्रैल होगा मेजर डे मार्केट के लिए, बिकॉज देन रेसिप्रोकल टैरिफ अनाउंस हो सकते हैं कंट्रीज पर। और है, याद रखियो, यूएस मार्केट ओपन होने वाला है, प्री मार्केट ऑलरेडी ओपन हो चुका है वहाँ पे। कम ऑन गाइस, लाइक करते रहो, लाइक में रुकना नहीं है। बाकी क्रूड ऑयल को भी देखते हैं, ये रेंज ब्रेक करता है किसी एक साइड पे अब निकल के, या तो ऊपर 5912 के ऊपर कहीं, या फिर इसके नीचे 5845 के नीचे कहीं ब्रेक। दिस इज अ रेंज। नीचे सपोर्ट, ऊपर रेजिस्टेंस। सपोर्ट इन द सेंस अभी रीटेस्ट का सपोर्ट है, ऊपर रेजिस्टेंस है। दोनों में से कहीं ना कहीं तो जरूर ब्रेक करेगा अभी। कर दे तो बेटर है, बिकॉज फिर रेंज थोड़ी सी बड़ी बन जाएगी, किसी एक साइड का लेवल रिमूव करना पड़ेगा हमें। कर सकते हैं नेचुरल गैस में भी, यहाँ पर थोड़ा बहुत ट्राई, ये एफईजी है। थोड़ा बहुत तो रिजेक्शन जरूर मिलेगा, कितना मिलेगा वो कोई नहीं कह सकता, थोड़ा बहुत मिल सकता है, बिकॉज कल जो सेल ऑफ आया था, ट्राई करेंगे सेलर की लोअर लो में बने। मेजर रेजिस्टेंस तो ऊपर है, खैर एक्चुअली सेलिंग तो वहीं से आएगी या फिर इसके ब्रेकडाउन पे ही आएगी। बाकी क्रूड ऑयल में भी ध्यान रखना ऊपर से, दिस इज अ रेंज, बार बार रिपीट कर रहा हूँ। किसी एक साइड ब्रेक हो जाता है तो बहुत अच्छा रहेगा, या तो ऊपर से सेल ऑफ बड़ा कर दे ये, या फिर अब यहाँ से बाइंग आती है तो फिर वो थोड़ी बड़ी हो। नहीं वो भी ठीक है। यहाँ से सेल जरूर कर सकते हैं, ध्यान रखना क्रूड ऑयल में, ठीक है। ये तो रीटेस्ट लेवल है। रीटेस्ट भी इस तरह से है कि ये पहले सपोर्ट हुआ करता था, बाइंग आ चुकी थी, ब्रेकडाउन हुआ तो रेजिस्टेंस बना, कल देख रहे होगे, फिर से ब्रेकआउट हो गया था तो फिर से थोड़ा बहुत सपोर्ट की तरह काम कर रहा है। तो दिस लेवल एक्ट लाइक एज अ सपोर्ट एंड रेजिस्टेंस मल्टीपल टाइम। ऐसा नहीं है कि वो कोई सिर्फ रेजिस्टेंस था, ब्रेकआउट हुआ है तो रेजिस्टेंस बन रहा है, मल्टीपल रोल प्ले कर चुका है सेम लेवल पे। जहाँ तक मुझे लग रहा है 7 PM की कैंडल कहीं ना कहीं तो जरूर कराएगी ब्रेकआउट या फिर ब्रेकडाउन, ज़्यादा देर रुकेगा नहीं इस रेंज के अंदर। रिटेल से बाई नहीं किया पहले क्या? यहाँ पर बाई नहीं किया था क्या? क्वांटिटी थोड़ी कम रख के कर लो, क्योंकि कोई बहुत बड़ा टारगेट किसी भी साइड पे नहीं है, चाहे सेल करो बाई करो, एक ना एक साइड के ऐसे उड़ेंगे तभी बड़ा मूव आएगा। बड़ा मूव इन द सेंस ऑफ एटलीस्ट 100 पॉइंट बोल रहा हूँ फ्यूचर के अकॉर्डिंग। बुक कर लिया, करके बुक कर लिया तो फिर तो बेटर है कि रेंज ब्रेक हो जाने दो किसी साइड पे फिर ट्रेड करना, या फिर अगर ले रहे हो तो क्वांटिटी थोड़ी कम रख लेना, क्योंकि 7 PM पे यूएस मार्केट भी ओपन होगा तो उसका भी एक इम्पैक्ट पड़ेगा ओवरऑल। करंट कैंडल के बाद सिर्फ एक कैंडल और बनेगी, देन डायरेक्टली यूएस मार्केट की कैंडल ओपनिंग है। गाइस 70 लाइक्स हो चुके हैं, 30 लाइक्स आर रिमेनिंग, 30 लाइक और रह गए, लाइक करते रहो सभी लोग, 100 का टारगेट है। $22 only, 28, 27, 26,
news when you want it with Bloomberg News Now. I'm Karen Moscow. It could be a few days before travel returns to normal at Europe's busiest airport. This after a substation fire forced London's Heathrow to close. We get more with Bloomberg's Benedict Camel.
Hopefully by tomorrow things will be back to normal, but usually a disruption on this scale leads to several days, if not into next week, of disruptions, because you'll have aircraft out of position, you'll have crew out of position. So this is not just today. This is something that will stay with the airport for the next couple of days.
Bloomberg's Benedict Camel reports the cause of the fire remains under investigation. The UK Metropolitan Police said its counter-terrorism command is now leading the probe, given the location of the substation that caught fire and the impact this incident has had on critical national infrastructure. Germany's move to unlock hundreds of billions of euros in debt-financed defense and infrastructure spending passed its final legislative hurdle today. Lawmakers in the upper house of parliament in Berlin approved the measures. Back home, President Trump denying reports that Elon Musk will see China war planning at the Pentagon today, and Bloomberg government's Maeve Sheehy has more.
We're getting a ton of mixed signals here, but there was a report by the New York Times that Elon Musk would be briefed on the American military's contingency plan for any war with China. And that could possibly set up these conflicts of interest because of Elon Musk's business interests in China. So that was a huge bombshell, although immediately kind of Trump went to Truth Social to say that this was a false report, that he's just visiting the Pentagon. And that's also what we've heard from people like Pete Hegseth.
And that's Bloomberg government's Maeve Sheehy. And Trump posted again on Truth Social this morning, blasting one of the New York Times reporters who broke the story and CNN for carrying it. He said, quote, Elon is not being briefed on anything China by the Department of War. President Trump has signed an executive order to dismantle the Education Department, but he's promising its core functions will be preserved. Bloomberg's Bill Ferries has more.
Last year, they put out $121 billion in grants, loans, and work-study payments to about 10 million students. Much of that will continue, perhaps at some other department, but we don't really know who's going to be able to administer that. And there's certainly going to be some kind of disruption as this likely goes to the courts, and Congress has to decide whether to support him and officially vote to close down DOE.
And that's Bloomberg's Bill Ferries, who reports Trump has already fired nearly half the department's more than 4,000 employees. President Trump also signed an executive order aimed at boosting critical mineral production, and that could include coal. The president is using the Defense Production Act to provide financing, loans, and other investment support to process rare earth elements and other minerals in the U.S. The move addresses long-held concerns that China controls the vast majority of rare mineral processing. In the Middle East, Israel will permanently annex land in Gaza if Hamas continues to refuse to free hostages. The comments from Defense Minister Israel Katz today comes days after renewed Israeli airstrikes on Gaza, as well as the country moving more troops into the Palestinian territory. Those signal the breakdown of a ceasefire that's been in place since mid-January. Also today, Israel's High Court temporarily suspended the cabinet's decision a day earlier to oust the head of the Shin Bet intelligence agency. Turning to the markets now, futures are lower as we close out another volatile trading week. The S&P 500 has fallen for 4 straight weeks. FedEx cut its profit outlook on weakening demand, and Nike said tariffs and geopolitical tensions will affect its sales. And the warning signs are also weighing on markets this morning. Johnson & Johnson said it's going to invest more than $5 billion within the U.S. over the next 4 years. That includes 4 new manufacturing plants. And one of the hardest hit stocks in the recent sell-off has been Tesla. That stock down more than 40% this year. Elon Musk held an all-hands-on meeting with employees in Austin, Texas yesterday. He said despite rocky moments, they should, quote, hang on to their stock. There's been backlash against Musk's role in the Trump administration. The FBI is investigating a number of incidents where Tesla charging stations and dealerships have been damaged. Taking a look at futures this morning again, S&P futures down 0.33%, so are Dow futures. NASDAQ futures down 0.4%, and the 10-year Treasury yield at 4.20%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
London's Heathrow airports will be shut all day Friday after a fire caused a significant power outage, throwing one of the world's busiest airports and the travel plans of hundreds of thousands of people into chaos. Let's go to Bloomberg's Guy Johnson in London. Guy, so just tell us what we know. What is the latest from the airport? How are these authorities actually responding to the fire?
So there's a fire nearby. It's not actually at Heathrow, Jemana. It is at a substation close by, but it's taken out power to the entire region, and as a result of which Heathrow is caught up within that. So we are now expecting Heathrow to be closed all day. It will, according to the latest reports from Heathrow, open at midnight tonight, but that at the moment is unconfirmed in terms of that being a final moment for Heathrow to be able to reopen. But it is going to be closed all day. The latest from the power company seems to indicate the power will be restored by around 3 p.m. This afternoon. This is, as you say, one of the world's busiest airports. It is potentially the second busiest airport on the planet. 1,351 flights are due in and out of Heathrow today. 700 of those are for IAG, the owner of British Airways. It will be severely affected, but other flights around the world are going to be affected as well. Air India indicating that it's turned aircraft around. A number of aircraft coming out of the United States have been turned around. Qatar is indicating that it has 6 flights currently being impacted by this. We'll see what Emirates has to say a little bit later on. So big airlines are being affected. Obviously, this is kind of the first wave of aircraft that would be arriving kind of around now into Heathrow. It's a huge moment. We have seen similar incidents in the past, but this is the last I can remember where Heathrow has been shut as a result of a fire, as a result of an electrical shutdown. We haven't seen this, and clearly questions will be asked about just how much redundancy there is at Heathrow and the ability of a major airport to keep functioning with a power outage, I think is a key question.
Yeah. And Guy, you just ran through some of the responses from key airlines from around the world, Emirates, Qatar, of course, British Airways too. But just put it into context for us, given how busy an airport Heathrow actually is, how much of a global impact this could have on travel? How much disruption could it cause worldwide?
So it's going to cause enormous disruption worldwide, Jemana. So you think about... I was just running through what's happening right now. The ripple effect of that is enormous around the world. It's going to not just affect Heathrow, it's going to affect every major airport around the world, simply because aircraft will not be where they are supposed to be. They were meant to come into London, they were meant to go back out of London, they're meant to be somewhere else. These aircraft are constantly in motion and being used. So the fact that you've got 1,351 flights not taking place today means that lots of aircraft are going to be in the wrong place. So this isn't going to be isolated to just Heathrow. It isn't going to be isolated to just the UK. It is going to have a ripple effect around the planet.
A little since the Fed decision, but my question to you is, why isn't it steepening more?
I think it should be steepening much more. Good morning, Lizzie. I think the clear message out of the Fed was that tariffs are both going to be negative for growth and inflationary, the stagflationary impulse. But what they said is they care about the growth part. That's the bit they're really worried about. So, i.e., they're going to ease policy if they need to. They're still talking about 2 rate cuts this year. So that should put pressure on the front end. Meanwhile, they're saying that even though tariffs are inflationary, they're going to cut rates. So therefore, that should see people get concerned about the long-term inflationary consequence. Does the Fed risk making the same mistake that it made only a few years ago of saying that the inflationary impulse is transitory when it wasn't and have to react really, really aggressive about it? So therefore, that should be a big steepening impulse. And then only whatever it was, less than 12 hours later, we had Donald Trump come out and put pressure on the Fed to ease rates, even though we do have this ongoing kind of inflation pressures, not just from his tariffs, but from non-oil commodity prices as well. So therefore, I thought these two dynamics should have seen a real steepening of the curve. We've seen a slight steepening of the curve since the Fed. It has worked, but to me, the 2s10s curve should be much higher. 44 basis points is the 3-year high in 2 years, 2s10 spread. I think that should break in the next couple of weeks. I think it'll happen but into the next 2 weeks. I'm wondering what I'm missing.
Let's talk about the equity market, Mark. S&P's up by, what, 0.4% at the moment on the week. That feels very unconvincing as a bounce. Let's say we kind of remain at these sorts of levels. What is the signal that I can take away from the fact that equities are not, as they have done over the last few years, bouncing back sharply?
Yeah, the price action is just terrible. And I think the takeaway is that, you know, all those people who buy the dip are starting to run into people who just long-term structural outflows that are starting to come out. Now, those long-term structural outflows are very slow, very gradual. They'll happen over several years, but that dynamic we expect to sustain. But they're already sufficient to be counteracting those dip buyers. And I think that reflects the fact that the price action is absolutely terrible. And I think that ultimately we're going to see stocks go much lower over the long term.
Mark, it's a miserable morning for Hang Seng and China stocks today. Really miserable session. The Hang Seng down more than 2%, as is the MSCI China. Is there more room for a bigger correction here?
I think so. I think we've just seen such extraordinary gains in China, Hong Kong. As you know, I'm very bullish in this dynamic. I think that last September heralded the start of a longer-term bull market in Chinese and Greater China assets. I think that Hong Kong is the discounted way to play that. We've seen stock markets up a large amount since then. It's been a volatile fashion, but ultimately they're up a long way in a market that, in a world that's going to much more uncertainty, where other markets are struggling. They've come off a few percent from the peak. They could fall another 8 or 9% here and still be in the longer-term bull market, and that's what I expect to happen.
Upskilling is becoming more important, so the world has to be prepared for it. So there has to
I mean, it's perfect timing because you've just launched an enterprise large language model that's also going to be deploying DeepSeek more broadly. But talk us through exactly what it entails.
Yeah, well, I think China had its ChatGPT moment when DeepSeek came out. We can call it DeepSeek moment. Everyone's aware of it over the Chinese holidays. Everyone's talking about it. And the CEOs came back to work saying, put DeepSeek to work at my company. And what they found out was DeepSeek is a fantastic model, amazing AI, but it doesn't have the middleware and the user interface that it takes to connect to corporate databases, to build applications, to make it useful for HR, finance, and customer service. So what 01.AI did was we saw DeepSeek has been making great momentum, and we decided to really bet on DeepSeek and build that missing middleware and UI so that DeepSeek can be made useful in corporations. That's the product we announced this Monday, and we're getting fantastic reception in China and also in Hong Kong.
Tell us more about that launch.
Yeah, so we launched on Monday, and what we talked about was many of you have DeepSeek now. You love to use it. In fact, one CEO friend of mine asked his employees, what do you use it for? And
good question.
And the answer was fortune telling. By the way, that's a great thing to try for you. But it's not very deep into the industry, the company. You know, every company has ERP and the CRM databases. They have employee records. They have their internal information. And they want the model to be more a generalist. They want it to be knowledgeable. Bloomberg would want a finance knowledgeable model, right? Ping An would want an insurance knowledgeable model. So our job is to really build that layer for that purpose. It's sort of like if I gave you a Windows kernel that is the core operating system, you wouldn't know what to do with it. You need all the Windows layer, the application interfaces, so that the Windows kernel can be useful. And we like to think that 01.AI is providing that layer for DeepSeek, which is the underlying model and technology.
And using DeepSeek as the underlying model, I mean, obviously you could have chosen other models instead, including from the US. What does that tell you about where the competition or the I guess the race for supremacy stands between China and the United States right now?
Well, clearly in both U.S. and China, the pre-training of a giant model has consolidated and is consolidating, and it's become clear that open source will be the winner. There's still many that will not concede, right? OpenAI, Anthropic, who build their businesses believing they can build a better closed model than everyone else. I think they got shocked when they saw a model as good. They would argue nearly as good, but either way, they're getting it for much, much lower cost. If you think about OpenAI's cost of $7 billion of operating costs in 2024, DeepSeek probably operated with 2% the operating expense. So the issue really isn't whose model is 1% better. I think they're...
Okay guys, US market हो गया है open. 7 p.m. is there. US market is open now. क्रूड ऑयल देखोगे वही रेंज के अंदर ही है. मैं पहले ही बता चुका हूँ किसी एक साइड पे ब्रेकआउट या फिर ब्रेकडाउन होना ज़रूरी है. ऊपर 5912.13 के ऊपर या फिर नीचे 5845 के नीचे. तभी कुछ बड़ा मूव आएगा, नहीं तो बस ये फंसा रहेगा इसी रेंज के अंदर. ऊपर रेजिस्टेंस, नीचे ये रिटेस्ट वाला सपोर्ट, वेल साइडवेज. नेचुरल गैस देखोगे एफईजी के ऊपर निकल तो गया है. लेट्स सी थोड़ा ऊपर आ जाता है तो एक सेलिंग का प्लान है. यहाँ से अच्छा लेवल है सेलिंग के लिए. सेलिंग करी जा सकती है अराउंड दिस जोन एंड प्राइस अगर नीचे भी आता है तो वापस बाइंग हो जाएगी इस एरिया के अराउंड. इस एफईजी को रिमूव कर सकते हैं, ज़रूरत नहीं है अब. ऊपर कैंडल क्लोज हो गई है तो अब काम का नहीं है एफईजी हमारे. यूएस मार्केट वाली कैंडल है 7 पीएम की, तो थोड़ी वॉलेटिलिटी इस रेंज में ज़रूर रहेगी. मैं एक्सपेक्ट करूँगा कि क्रूड ऑयल में रेंज ब्रेक कर दे, बढ़िया रहेगा हमारे लिए. नेचुरल गैस में ना एक यहाँ पे थोड़ा सा पुल बैक के लिए प्लान बनाते हैं, बिकॉज डायरेक्टली तो ऊपर शायद ना जाए. ये एग्जैक्ट रेजिस्टेंस पे दूर है काफ़ी अभी भी. 254 के अराउंड ही बना हुआ है वो. चला जाता तो बेटर ही रहता. बट अगर यहाँ से एक पुल बैक आ जाता है मेरे अकॉर्डिंग, थोड़ा सा अगर रिस्क उठा सकते हैं इस ट्रेड के लिए. एग्जैक्ट रेजिस्टेंस ऊपर है, एफईजी ब्रेक कर चुका है, बट ये थोड़ा सा एक रिस्की ट्रेड ट्राई कर सकते हैं. एसएल बता दे रहा हूँ कितने पॉइंट का बन रहा है. हाई मान लो, ये जो भी हाई बना हुआ है दैट इज एसएल. कितने पॉइंट का है? 2.5 पॉइंट का समथिंग एसएल है ये. ठीक है, अगर थोड़ा सा रिस्क उठा सकता है यहाँ पर कोई 15 मिनट टाइम फ्रेम के अकॉर्डिंग ले सकते हो. 2.5 पॉइंट का एसएल मिडल ऑफ द लेवल है, एग्जैक्ट लेवल पे नहीं आया है. एग्जैक्ट लेवल देख पा रहे होगे थोड़ा सा अपर लेवल पे. तो मिनी वगैरह अगर कोई ट्राई करना चाह रहा है तो कर सकता है यहाँ पे. ऑप्शन मत जाना, ऑप्शन में मत ट्राई करना, ऑप्शन में रिस्क ज़्यादा हो जाएगा. ठीक है, थोड़ा सा रिस्की साइड पे, इसलिए मिनी बोल रहा हूँ, उसमें रिस्क कम है। बाकी अगर ऐसा उड़ा देता है ये तो फिर ऊपर रेजिस्टेंस ही सेल करेंगे। टारगेट दोनों ही केस में सेम ही रहेगा, चाहे यहाँ से सेलिंग आए या फिर ऊपर से नीचे आता है तो वापस बाइंग हो जाएगी। रीटेस्ट लेवल नहीं, क्रूड में रीटेस्ट लेवल ब्रेक करने पे सेल नहीं करना है। ये इसके ब्रेकडाउन पे सेल मत कर देना, सेल यहाँ से कर सकते हो इस एरिया से। जैसा मैंने बताया ये क्रूड ऑयल फिलहाल रेंज के अंदर है, दिस इज अ रेंज 50 to 60 पॉइंट की रेंज है। किसी एक साइड पे ब्रेकआउट या ब्रेकडाउन हो जाए, या तो नीचे यहाँ पर या फिर ऊपर यहाँ, तभी बेटर है ये ट्रेड करने के लिए, बिकॉज उसी केस में थोड़ा सा रेंज ब्रेक हो पाएगी। सेल यहाँ से कर सकते हो इस एरिया से, वैसे ब्रेक हो जाए तो बढ़िया है, फिर ये रेंज को हम रिमूव ही कर देंगे, फिर ऊपर लेवल एक पूरा इंडिपेंडेंट लेवल बन जाएगा। नहीं तो अगर ये नहीं ब्रेक होता है प्रॉपरली तो फिर ये साइडवेज ही है इस रेंज में। ये नेचुरल गैस का ध्यान रखना, ठीक है, नेचुरल गैस का जो सेलिंग का ट्रेड बनाया है, इट इज़ नॉट एग्जैक्टली ऑन रेजिस्टेंस से थोड़ा सा नीचे ही बनाया है, इसलिए थोड़ा सा रिस्की है। चाहो तो रेजिस्टेंस एग्जैक्ट आने का वेट कर सकते हो, थोड़ा दूर है वो। अगर यहाँ पर लोगे तो क्वांटिटी कम रखना, या फिर जैसा मैंने बताया मिनी ही ट्राई करना, उसमें रिस्क बहुत कम होगा नेचुरल गैस में नहीं। बाकी नहीं ले रहे हो रिस्क तो फिर अवॉइड, फिर लेवल पर ही ट्रेड हुआ।
Shaping up over the coming year?
Well, we all respect and thank Baidu for really starting the transformer revolution in China. They tried to hire Jeff Hinton and ended up hiring.
I mean, it's perfect timing because you've just launched an enterprise large language model that's also going to be deploying DeepSeek more broadly. But talk us through exactly what it entails.
Yeah, well, I think China had its ChatGPT moment when DeepSeek came out. We can call it DeepSeek moment. Everyone's aware of it over the Chinese holidays. Everyone's talking about it. And the CEOs came back to work saying, put DeepSeek to work at my company. And what they found out was DeepSeek is a fantastic model, amazing AI, but it doesn't have the middleware and the user interface that it takes to connect to corporate databases, to build applications, to make it useful for HR, finance, and customer service. So what 01.ai did was we saw DeepSeek has been making great momentum, and we decided to really bet on DeepSeek and build that missing middleware and UI so that DeepSeek can be made useful in corporations. That's the product we announced this Monday, and we're getting fantastic reception in China and also in Hong Kong.
Tell us more about that launch.
Yeah, so we launched on Monday, and what we talked about was many of you have DeepSeek now. You love to use it. In fact, one CEO friend of mine asked his employees, what do you use it for? And
good question.
And the answer was fortune telling. By the way, that's a great thing to try for you. But it's not very deep into the industry, the company. You know, every company has ERP and the CRM databases. They have employee records. They have their internal information. And they want the model to be more a generalist. They want it to be knowledgeable. Bloomberg would want a finance knowledgeable model, right? Ping An would want an insurance knowledgeable model. So our job is to really build that layer for that purpose. It's sort of like if I gave you a Windows kernel that is the core operating system, you wouldn't know what to do with it. You need all the Windows layer, the application interfaces, so that the Windows kernel can be useful. And we like to think that 01.ai is providing that layer for DeepSeek, which is the underlying model and technology.
And using DeepSeek as the underlying model, I mean, obviously you could have chosen other models instead, including from the US. What does that tell you about where the competition or I guess the race for supremacy stands between China and the United States right now?
Well, clearly in both US and China, the pre-training of a giant model has consolidated and is consolidating. And it's become clear that open source will be the winner. There's still many that will not concede, right? OpenAI, Anthropic, who build their businesses believing they can build a better closed model than everyone else. I think they got shocked when they saw a model as good. They would argue nearly as good, but either way, they're getting it for much, much lower cost. If you think about OpenAI's cost of $7 billion of operating costs in 2024, DeepSeek probably operated with 2% the operating expense. So the issue really isn't whose model is 1% better. I think they're all very good. But the issue is OpenAI's model even sustainable, right? I mean, you're spending $7 billion a year, making a massive loss, and here you have a competitor coming in with an open source model that's for free. And that company also is infinitely lasting because this founder has enough money to fund it at the current level and has reduced the cost of computing by a factor of 5 to 10. So with that kind of formidable competitor, I think Sam Altman is probably not sleeping well.
Yeah, well, you do think, I mean, obviously, that DeepSeek would have really challenged some of the monetization strategies around AI. But at the same time, given that AI is so commoditized now, and in China as well, that open source approach, how many AI models do you think that the Chinese market can actually sustain?
Well, I think probably, I'm guessing 3. DeepSeek, Alibaba, and ByteDance. And they'll evolve over time, right?
Okay, there's a few names missing on that list.
Yeah.
Only 3.
Well, there will be many other who aspire to build one,
right.
And we'll see if there's a 4th player. But even within these 3, I think DeepSeek currently has the momentum, and that's why we're embracing that. But I also want to point out that I wouldn't say AI is commoditized. I would say the underlying pioneer model, foundation model, that is trained with a huge amount of money is commoditized. It costs a lot, and it's hard to really compete with open source. But AI is not commoditized, right? It's like, Windows kernel, Linux kernel, that's kind of commoditized. But Windows is not commoditized. Microsoft makes a ton of money. And what 01.AI wants to do is build Windows and use DeepSeek as our Windows kernel.
And is that where you think the value added comes now? In other words, for VCs thinking about where the value added is in this industry, it's no longer, for example, AI, for example, still presents that value. And I want to understand, for example, the economics and why you think, say, there's only room for 3 as well.
Well, there may be room for 4, but in most markets, you end up with room only for 2, right? The winner who makes a ton of money, the runner-up who breaks even, and everyone else who dies. And this one is exacerbated because it's hard to monetize the underlying pioneer model. But once you're the winner, there are many ways to monetize it.
Right.
So that's the trick. For the VCs in both US and China are moving away from wanting to fund more pioneer models. They're happy to fund AI infrastructure, AI applications, consumer apps, because every app will be remade, right? And also enterprise apps that can provide real value add to enterprises. So AI funding is going gangbusters. It's just that nobody wants to fund pioneer models.
Does China's innovation, though, come up against the headwind this year of greater restrictions on China's access to advanced semiconductor technology? Is that going to end up presenting a problem?
So we can look at historically, right? China is able to catch up and build great engineering products while U.S. is better at making breakthroughs. That was what I argued in AI Superpowers, and that continued to be the case. The GPU sanctions came 2 years ago. And today, we actually see DeepSeek not only resilient, competitive, but also basically made true the statement that necessity is the mother of innovation. That because they had so few GPUs, they had to make it 10 times more effective. So I think I would argue that the sanctions so far hasn't worked. It's hard to project the future, but I would say that DeepSeek actually benefited from having less resources and able to make training and inference at 5 to 10 times lower the expense incurred by OpenAI and others.
I remember, so DeepSeek was, what date is it? March 20, so let's call it 2 months ago. I remember we had the chat on the show, I think it was back in October, where you guys actually launched something similar months before DeepSeek. And so you guys came out, DeepSeek came out, and then since DeepSeek came out that moment, just the cadence and the frequency of all these ones coming out with their own iterations of it. I guess my question is, what do you make of the frequency? What is behind, you think, the frequency of these releases? And is DeepSeek the symptom or is it the cause of what's going on? In other words, what can we expect from the industry this year?
I think it's still ultra competitive. The fact that I think China will have 3 winners, US might have 4 winners at the end, doesn't mean dozens of others will not want to compete. So I do expect frequent releases to continue especially from the fast-moving companies. And I think the fastest moving companies probably are XAI Grok and DeepSeek. I'd say these are the fastest. And then I think OpenAI, Alibaba, Google, and Anthropic are, of course, all making respectable moves. I listed ByteDance because they're not on the list by people, but we know how much they're spending. And I think one way you can justify spending a ton of money on pioneer models is because you have so many customers that when amortized over many, many customers, you can make the business case. And ByteDance has more customers and more ways to monetize than anybody, so I would make that speculation.
Yeah, I think Baidu is one of the names that sort of stands out to me, not on that list, and maybe you can share some reaction on that. But also government support from Beijing. Exactly how do you see that also shaping up over the coming year?
Well, we all respect and thank Baidu for really starting the transformer revolution in China. They tried to hire Jeff Hinton and ended up hiring Andrew Ng. And I think that shows that Robin has that kind of vision. The execution is currently lagging, and we'll see what happens. Yeah. And your other question was? Yeah.
Government support.
Government support, right. So the Chinese government's new big direction is called new quality productivity. What that means is using high tech to create productivity, efficiency, and really turn all the traditional industries into more profitable, more competitive by the use of high tech, and AI is at the very core of that.
Actually, so our final question for you, because you mentioned the word consumption in AI was actually mentioned in Premier Li Chang's work report from the MPC, and to the point that Mel was making on, government support, it was rare that we saw just, the CEOs of China's big tech companies in the same room as the president, for example, weeks before that. And I'm wondering tangibly, what measures do you think we could see from the government to be able to back up, what really seemed as very, very good optics?
Yeah, I think right now the local governments probably are the most active in trying to see, I'm City X, I'm the party secretary and mayor of City X, and this city is very strong in the following industries. How would I apply AI to create this new quality productivity in these industries that will end up helping the growth, the GDP of the city? And I think, having a single direction from the top, new quality productivity, is very, very effective and invigorating to the cities. And we're seeing a lot of interest for our company and our peer companies to work more closely with these local cities.
Today, a huge fire near London's Heathrow Airport disrupts global air traffic.
What's in store for students as Trump dismantles the Department of Education?
And Disney's Snow White and the many controversies. It's Friday, March 21st. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Tara Oakes in Liverpool.
And I'm Sharon Reich-Garson in New York.
First to some breaking news this side of the pond. London's Heathrow Airport is set to be closed all day after a huge fire at a nearby electrical substation wiped out power. It's one of the world's busiest airports, and global flight schedules have been disrupted as the cancellations have a knock-on effect on travel around the world. 75-year-old John Moriarty was due to fly back home to Boston.
I've called Delta and all the lines are busy, so they're not answering. I just called American Express Travel to see if they can help. I'm waiting. All the lines are busy, so I don't know. I might be here another day, actually.
Some flights from the US were turning around mid-air and returning to their point of departure. Hundreds have been evacuated and nearby buildings have been left without power. The cause of the blaze is currently unknown.
U.S. President Donald Trump has signed an executive order to begin dismantling the Federal Department of Education.
We're going to shut it down and shut it down as quickly as possible. It's doing us no good.
The order follows an announcement last week that the DOE would lay off nearly half of its staff, but shuttering it completely would require congressional approval. And Republicans don't have enough votes. Race and Justice editor Kat Stafford has been looking at what this means for public schools and students.
There is a lot of confusion right now. The Department of Education provides federal grants for schools and programs and sends a lot of money toward helping children with special needs and disabilities, and it also oversees student loans. And for a very long time, one of the main functions of the Department of Education has been to ensure equal access, to enforce civil rights laws. And so there's a lot of concern that children and students who live in some of the poorest areas of our country could be impacted, right? Because they really rely on these funds. There's questions of how this is going to impact the higher education system, particularly when you think about the disproportionate amount of students of color and low-income students that rely on the Pell Grant.
And it's college application season right now. So how will this affect those students that are applying for financial aid?
The Department of Education, I believe they oversee almost $1.6 trillion in student loans. So we're talking about a significant amount of Americans who cannot afford to pay for their college education outright. They rely on the student loan system. And now there are a lot of parents and high school students who are grappling with not only where they're going to start their college education career, but how are they going to pay for it? How is this going to work? Who's going to house the student loan process, right? So I think that these are all questions and answers that the administration is really going to have to grapple with.
A judge says the Trump administration's response to a request for more details on the timing of deportation flights carrying hundreds of Venezuelan migrants is woefully insufficient. Judge James Boasberg, who Trump suggested should be impeached, says officials are evading their responsibilities. A deadline is looming for Columbia University to respond to 9 demands on tightening restrictions on campus protests. Among other things, the demands include banning face masks on campus and seeking power for security employees to make arrests. Trump says these are preconditions for opening talks on restoring $400 million in suspended federal funding.
Trump has denied a report that Elon Musk will be briefed on the US plan for any potential war with China. According to the New York Times, Musk is due at a Pentagon briefing today that will feature 20 to 30 slides on how the US would fight in conflict with China. Trump took to Truth Social to say China will not even be mentioned or discussed.
it is significant. I think it will take a little bit of time to truly set in.
Zimbabwean swimmer Kirsty Coventry smashes through the International Olympic Committee's glass ceiling to become the organization's first female president.
Uncertainty over the impact of President Trump's trade policies had major central banks scratching their heads this week. Carmel Crimmins is here with more.
So this was a busy week for the world's major central banks. Many of them held meetings to decide interest rate policy, but with the exception of the Swiss National Bank, they all stood pat. Trump's tariffs are clouding the picture for them. They're expecting import taxes to hurt growth, so that would, in theory, be a reason to cut rates. But they're also expecting a boost to inflation, which would be a reason to hike. One thing is clear. The US is at risk of moving from being the world's growth engine to a drag on its trading partners. European Central Bank President Christine Lagarde spelled that out this week when she said a trade war with the US would dent growth in the Eurozone and tack perhaps 0.5 percentage point onto inflation in the short run at least.
Magic mirror on the wall. Who is the fairest of them all?
Disney's Snow White rolls into theaters today, and the studio, no doubt, hopes that its baggage stays behind. The $270 million film has been dogged by controversies, from race to politics, and how it portrays Snow White's friends, the Seven Dwarfs. Our entertainment business reporter Dawn Shimoleski is looking at what's at stake if the studio's big bet doesn't pay off.
From a business perspective, this is a way for Disney to ring the cash register, if you will, in multiple ways. So it's released in theaters, and then it will be distributed on Disney Plus. It will translate to consumer products if the film is successful. So imagine more princess gowns, coming to retail stores near you. So basically, a successful film will reanimate characters that are known and beloved and give them fresh legs and a new opportunity for Disney to monetize.
It's time to restore our kingdom.
But the film's been caught up in a culture war.
Disney cast Rachel Zegler, who's an actor of Colombian descent, in the title role as Snow White. It began with Rachel Zegler sort of talking to her online fans about how this Snow White isn't waiting for a prince to rescue her at the end of the film, and she actually described the prince as kind of a stalker in some of her online posts. You can imagine that might have been offensive, but she didn't limit herself to that sort of commentary. She posted, may Trump supporters and Trump voters and Trump himself never know peace. She deleted the posts on Instagram. She apologized, but it really did create a firestorm. And it's not the only instance of trouble. The Israeli-born actress, Gal Gadot, who plays the film's evil queen, voiced support for her home country in the aftermath of the October 7th terror attacks. Her co-star was very vocally pro-Palestinian, which one might imagine that created some tensions. And there have been calls to boycott the film. And there's a further conflict about how the Seven Dwarfs were represented in the film. In the end, families will probably set aside all of these controversies if it's a good movie. So I guess we'll see at the box office.
Rounding off the week with a recommended listen, we've got a special episode of the podcast out tomorrow on the tensions between the US executive and judiciary. Catch it wherever you get your podcasts.
For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. We'll be back on Monday with our daily headline show.
London's Heathrow airports will be shut all day.
Upskilling is becoming more important, so the world has to be prepared for it. So there has.
So front and center, that 2nd of April tariffs, how might this play out? Are traders, investors repositioning in anticipation of that?
So April the 2nd seems to be getting a lot of attention, but I think if we look at the last month or so, we found that there's been a lot of announcements that sort of get reversed, get changed. So I think everybody in the market would like more certainty. So they're pinning a lot of hopes that April the 2nd is going to answer some of their questions. I think it will answer some questions, but I suspect there'll be still a lot of uncertainty left around. Is the market repricing the risks? I think when we last spoke, we were talking about the very early stages of the tariff announcements, and we were also at sort of peak American exceptionalism sort of narrative at that time. And it feels like that narrative has changed a little bit. I think I said to you last time we spoke that even though I could see everybody was very optimistic about markets as a result of the new administration, that it was slightly puzzling to me that they weren't taking into account the fact that markets were very, very highly valued.
क्रूड ऑयल डब्ल्यू बना रहा है क्या? डब्ल्यू तो तब बनेगा जब यहाँ ब्रेकआउट होगा. फिलहाल तो रेंज के अंदर है प्राइस. जैसा कि बताया मैंने, अभी भी किसी एक साइड पे नहीं निकला है. नीचे रीटेस्ट का सपोर्ट, ऊपर एक रेजिस्टेंस. किसी एक साइड के एसएल जब जाएंगे तभी कुछ बड़ा मूव आएगा. 5845 के नीचे या फिर 5915 के ऊपर. टिल देन रेंज है कंप्लीटली. अब तो यूएस मार्केट भी ओपन हो गया, पता नहीं किसका वेट कर रहा है. बाकी फिर से रिपीट कर दूं, नेचुरल गैस का ध्यान रखना. ये सेलिंग का ट्रेड थोड़ा सा रिस्की साइड पे, एग्जैक्ट लेवल पे नहीं है ये ट्रेड. एग्जैक्ट रेजिस्टेंस थोड़ा सा अपर लेवल पर है, उससे पहले ही बनाया है. तो ऑप्शन में मत जाना, ठीक है. ओनली थोड़ा सा जो रिस्क ले सकते हैं वही लेना. मेरे अकॉर्डिंग तो रिस्क फ्री जा रहे हो तो मिनी ही सबसे बेस्ट है rather देन ऑप्शन ट्राई करने से. बाकी ऊपर आ जाता है एग्जैक्ट रेजिस्टेंस पे तो और बढ़िया, सबसे बेस्ट वही है. फिर लेट्स सी मिनी में नीचे आता है या फिर थोड़ा सा ऊपर और जाएगा. बाकी कोई डेटा नहीं है, ध्यान रखना. आज लास्ट ट्रेडिंग सेशन है वीक का. गोल्ड के सपोर्ट लेवल वही मॉर्निंग में बताए थे, सेम ही चल रहे हैं, कुछ चेंज नहीं हुआ है गोल्ड में. यूएस मार्केट हो गया ओपन. यूएस मार्केट इज ऑलरेडी ओपन. 7 PM पे हो जाता है ना यूएस मार्केट ओपन. अच्छी आ गई है गोल्ड में. काफ़ी देर रुकने के बाद यूएस मार्केट के बाद रेजिस्टेंस से सेलिंग अच्छी आ गई है. यूएस मार्केट ओपन हुआ 7 PM पे, कंटिन्यूसली फॉल किया जा रहा है गोल्ड. सपोर्ट पर ही है नीचे $3000 सपोर्ट. बाइंग का प्लान कर सकते हो. मॉर्निंग पे से वही सेम ही रेजिस्टेंस बने हुए हैं, कुछ चेंज नहीं हुआ है. बाकी किसी न्यूज़ की वजह से गिर रहा है तो मैं कह नहीं सकता. बाकी यूएस मार्केट के बाद कंटिन्यूसली सेलिंग है, था रेजिस्टेंस पर ही एग्जैक्टली, बट इतनी बड़ी सेलिंग तो मैं भी एक्सपेक्ट नहीं करता कि एक साथ आ जाएगी. नीचे रेजिस्टेंस सपोर्ट काफ़ी दूर था बट आ गया एग्जैक्टली सपोर्ट पे। 15 मिनट टाइम फ्रेम पे सपोर्ट पर ही है 3000 से 2099 98। कोई न्यूज़ ना हो, अगर न्यूज़ हुई तो हो सकता है कंटिन्यूसली फॉल करता जाए, बट दिस इज द सपोर्ट इन 15 मिनट फॉरेक्स चार्ट की मैं बात कर रहा हूँ। यहाँ से बाइंग का प्लान कर सकते हो गोल्ड में। इस टाइम भी यहीं से बाइंग आई थी 18 मार्च को। लेट्स एक्सपेक्ट करते हैं फिर से आए। बाकी कोई न्यूज़ हुई तो मैं कह नहीं सकता, इसलिए एसएल थोड़ा सा स्ट्रिक्ट रखना। क्या फॉल किया है, वाह। 35 पॉइंट गिर गया, $35 सडनली। कुछ तो हुआ है डेफिनेटली। थोड़ी देर पहले एक न्यूज़ थी बट वो रिगार्डिंग द ऐसा कोई स्पेसिफिकली गोल्ड के रिगार्डिंग तो नहीं थी। दैट इज़ कमिंग फ्रॉम यूएई, जहां पर उन्होंने 1.4 ट्रिलियन डॉलर, 1.4 ट्रिलियन, बिलियन भी नहीं, 1.4 ट्रिलियन डॉलर का इन्वेस्टमेंट करने का सोचा है यूएस में अगले 10 सालों में। वाह, 1.4 ट्रिलियन डॉलर। मेटल्स के रिगार्डिंग कुछ न्यूज़ तो नहीं आई है, एक बार देखें, क्योंकि सिल्वर भी फॉल किया है। ऑन द अदर हैंड अगर देखोगे नैस्डैक को, ओवरऑल यूएस मार्केट को, तो इतना कुछ खास ऊपर इंक्रीज नहीं हुआ जितना गोल्ड सडनली गिर गया। डॉलर इंडेक्स जरूर मूव किया है। कॉपर भी गिरा है, वाह, कॉपर भी गिर गया, एल्यूमिनियम भी गया, एल्यूमिनियम भी गिरता ही जा रहा है। जिंक में उतनी सेलिंग नहीं है, एल्यूमिनियम, कॉपर, गोल्ड। या तो आपका ये यूएस डॉलर इंडेक्स ये भी नहीं मूव किया जितना गोल्ड गिरा है। सिल्वर भी गिरा है, सिल्वर से ज़्यादा गोल्ड गिर गया है। सपोर्ट पे है, सपोर्ट ले लिया एग्जैक्टली, देख पा रहे होगे $3000 से। देखते हैं कितना मूव करता है अपसाइड की ओर। गोल्ड ऑन सपोर्ट। हाँ, मोक्सा जी, थैंक यू सो मच फॉर दिस सुपर चैट। कोई क्वेश्चन है तो पूछ सकते हैं। गोल्ड में जो लोग बाइंग कर रहे हैं ध्यान रखना थोड़ा सा, सारे मेटल गिरे एक्सेप्ट जिंक। जिंक नहीं गिरा। बाकी गोल्ड सपोर्ट पे है, रुका है थोड़ा बहुत ऊपर। जहाँ तक टारगेट देखोगे तो टारगेट ऊपर वैसे रेजिस्टेंस ही है मेजर। लास्ट स्विंग जो बना था वही आपका एक मेजर रेजिस्टेंस है, मतलब वो रेजिस्टेंस की तरह काम करेगा। बीच में और कोई लेवल नहीं है ना। लाइक भी करते रहो गाइस, जिन लोगों ने नहीं किया लाइक। क्रूड ऑयल साइडवेज ही चला गया है बिल्कुल, रेंज ही ब्रेक नहीं कर रहा है। गैस भी स्टक हो गया सेम ही लेवल पे, नो मोमेंटम। गोल्ड सपोर्ट लिया है, लेट्स सी थोड़ा और मूव कर जाए एटलीस्ट 3022 के अराउंड, वहीं पर एक थोड़ा बहुत रेजिस्टेंस है एंड देन जो स्विंग हाई बना हुआ है लास्ट। कि क्रूड ऑयल देखोगे थोड़ा बहुत स्लोली स्टडी मूव किया है अपसाइड की ओर, ठीक है, ऊपर भी रेजिस्टेंस है, सो एक्सपेक्ट करेंगे थोड़ा बहुत रिजेक्शन यहाँ से भी मिले क्योंकि अभी भी रेंज है मार्केट के अंदर। किसी एक साइड पे तो एसएल जरूर जाने वाले हैं, तभी कुछ बड़ा मूव कर पाएगा प्राइस। यहाँ से एक सेलिंग का प्लान देखते हैं, कैंडल अगर नॉर्मल बनती है तो ओपन इक्वल टू लो ना बने, ओपन इक्वल टू लो पे बाय नहीं कर सकते बिकॉज। बाकी गोल्ड में ध्यान रखना, वो थोड़ा पुल बैक आया जरूर है, थोड़ा और ऊपर तक आ जाए तो बेस्ट रहेगा। ठीक है, इस एरिया के आसपास तक भी आ जाए 3021 तो बेस्ट है। काफ़ी देर तक रुका था रेजिस्टेंस पे, फाइनली फॉल कर गया 7 PM पे, तो कुछ ज़्यादा ही फॉल कर गया। ये जो करंट कैंडल है ये 5000 इसी लेवल के आसपास कहीं क्लोज करती है ना, तो ये बहुत ही स्ट्रॉन्ग रेंज हो जाएगी, क्योंकि ऐसा नहीं है कि यहाँ से फिर सेलिंग आती है तो कि पूरा ही गिर ही जाएगा ये, क्योंकि ये ऐसा अभी भी नहीं गए हैं नीचे के। अगर ये वापस ऊपर जाता है तो इस और स्ट्रॉन्ग होना शुरू हो जाएंगे लेवल। इवन दो ऊपर रेजिस्टेंस है, बट सेलिंग के भाई कोई बहुत बड़े टारगेट नहीं होंगे। एक सेलिंग का प्लान जरूर रहेगा, बट विथ लो क्वांटिटी, बिकॉज काफ़ी देर से रुकी है इस रेंज पे, इतना देर रुकना नहीं चाहिए। ध्यान से देखोगे तो अप्रॉक्सीमेटली 2 बजे से ऑलमोस्ट 8 बज गया, 6 घंटे से रेंज के अंदर ही है। सही नहीं रहता इतनी देर रेंज पर रहना प्राइस के लिए। तो अगर ऊपर से सेलिंग आती है तो थोड़ा सा टारगेट बड़ा नहीं है। अभी 4 मिनट हैं कैंडल क्लोज होने में, बट मोस्ट प्रोबेबली 5870 880 के ऊपर क्लोज हो गई कैंडल, तो फिर थोड़ा सा सेलर भी ट्रैप्ड हो जाएंगे रेंज के अंदर। बायर तो है ही है, सेलर भी हो जाएंगे ऊपर से, बट या थोड़ी बहुत सेलिंग प्लान करेंगे, कैंडल ओपन इक्वल टू लो ना हो, ध्यान रखना। फॉरेक्स में यहाँ एफईजी है, कहाँ पर एफईजी है फॉरेक्स में? अभी फिलहाल एमसीएक्स ही चल रहे हैं, फॉरेक्स ही नहीं चल रहे हैं। क्रूड की बात कर रहे हो? क्रूड ऑयल में 245 की कैंडल पे उस तो एफईजी के तो ऊपर कैंडल क्लोज हो गई है शायद ऑलरेडी लास्ट टाइम। इस एफईजी की बात कर रहे हो शायद? इसके तो ऊपर कैंडल क्लोज हो चुकी है ऑलरेडी लास्ट टाइम। ये लास्ट जो कैंडल बनी थी उसके ऊपर ऑलरेडी क्लोज हो गई है एक बार। फ्लैग जैसा बनता हुआ लग रहा है मुझे तो ये क्रूड में। सिमेट्रिकल भी नहीं है, फ्लैग है बिल्कुल ही। और ये करंट कैंडल अभी 1 मिनट और है, देखते हैं क्लोजिंग कहाँ आती है इसकी। 5870 के ऊपर ही आएगी या फिर 5870 के नीचे। लाइक करते रहो गाइस। वाओ, जिन लोगों ने लाइक नहीं किया, डोंट फॉरगेट टू लाइक द स्ट्रीम। फॉरेक्स में नहीं हुई है। M6 में हो गई है। क्रूड ऑयल को यहाँ पर एक सेलिंग का प्लान रख सकते हैं, ठीक है। थोड़ा सा ध्यान रखना, अभी भी रेंज के अंदर ही है क्रूड ऑयल। यस वर्जन जी, क्रूड ऑयल में वो हो गई है, यहाँ भी हो गई है, फिर से हो गई है, दो बार हो गई है। कंसिडर मत करो उसको, एफईजी को। यहाँ से एक सेलिंग का प्लान रखते हैं। देखो रेंज में किसी ना किसी साइड तो असल जाना ही है, अब किस साइड जाएगा कह नहीं सकते, क्योंकि रेंज बनी हुई है मार्केट में, ऊपर रेजिस्टेंस, नीचे सपोर्ट रीटेस्ट वाला। ना ये सपोर्ट रीटेस्ट वाला ब्रेक हो रहा है, ना ऊपर रेजिस्टेंस ब्रेक हो रहा है, तो एक्सपेक्ट करना तो चाहिए एक साइड पे निकले एटलीस्ट, सो दैट रेंज कोई बड़ी बना दे हम। बट फिलहाल के लिए तो वेट ही करना पड़ेगा, ठीक है। ये एक छोटा सा सेलिंग का ट्रेड, और कुछ कर नहीं सकते इसमें फिलहाल के लिए अभी। लगता है सपोर्ट ब्रेक होगा या फिर रेजिस्टेंस क्रूड में पहले होना तो एक है, कंफर्म कंफर्म है बिल्कुल। 5 मिनट और है, नेक्स्ट कैंडल ओपन इक्वल टू लो नहीं बनती है तो वेल एंड गुड है। नेक्स्ट कैंडल भी ओपन इक्वल टू लो बन गई, तब ब्रेकआउट के चांसेस ज़्यादा रहेंगे। आठ बज चुका है, थोड़ा बहुत वॉल्यूम और इंक्रीज हुआ है, 1-1.5 घंटा और रहेगा वॉल्यूम ठीक ठाक। गोल्ड को देखोगे सपोर्ट लेके रुक गया है, नो मोमेंटम।
News when you want it with Bloomberg News Now. I'm Nathan Hager. It is a traveler's nightmare at Europe's busiest airport.
We're taking lots more calls than usual and won't be able to put you through to the team right now.
That's what you get calling British Airways today. The airline's main hub, London's Heathrow Airport, is shut down due to a power outage. The fire that caused it at a nearby substation is out now, but Heathrow says it doesn't know when power will be fully restored. Bloomberg's Guy Johnson is at the airport with lots of unanswered questions.
Even when the airport reopens again, how long is it going to take to get everything back on track? There were plenty of flights coming out of JFK overnight that had to be turned back. What's going to happen to those passengers? Those aircraft are going to be in the wrong place. What's going to happen to all the cargo and everything else that's trying to be moved around the world at this point in time? There's going to be a huge infrastructure and logistics snarl-up that will take a while to unravel, potentially 2 or 3 days.
It's Bloomberg's Guy Johnson at Heathrow. The London Fire Brigade says it doesn't know what caused the fire, but counter-terror police are going to lead the investigation just because it's so near the airport. Back here in the U.S., another sell-off on Wall Street has stocks headed for their 5th straight week of declines. Right now, the S&P 500 is down 0.7%. The Dow Jones Industrial Average is 0.9% lower. The NASDAQ Composite is down about 0.6%. Disappointing earnings forecasts from FedEx, Nike, and Micron Technology are all adding to worries about tariffs. President Trump went on Truth Social again today to say April 2nd, the day for reciprocal tariffs, will be, quote, Liberation Day for America. Amanda Agati with PNC says investors just want clarity.
This is really just very much a function of trying to set the bar lower in anticipation of what ultimately may or may not stick. So I don't think we've done permanent damage yet here, but there's certainly real signs of caution going into a, what everybody sort of thinks is a growth scare kind of slowdown.
Amanda Agati with PNC Investment Bank was a guest on Bloomberg Daybreak. This morning, New York Fed President John Williams warned of a high level of uncertainty around immigration, trade, and fiscal policy, but he said the Fed's moderately restrictive rate stance is appropriate. President Trump is denying multiple reports that Elon Musk will be briefed today on contingency plans for war with China. Bloomberg's Bill Ferry says the New York Times was first to report that the world's richest man would be in the room for a top secret presentation.
It highlighted, I think, some of the concern that people have about
Elon Musk perhaps conflicts of interest. He's obviously a major investor in China, and half of his company's Teslas are produced there. But the White House quickly pushing back, saying that it's all untrue and ridiculous.
Bloomberg's Bill Ferries reports that the president saying China won't even be discussed at the meeting. Defense Secretary Pete Hegseth says it'll be an informal discussion on innovation and efficiencies. This morning, Secretary Hegseth is at the White House for a possible contract announcement. We get more on that from Bloomberg's Valerie Teitel.
Bloomberg has reported the White House is poised to announce the winner of its contest to build the next generation fighter jet could be Boeing. It looked like they chose Lockheed over its partner Boeing, and maybe we get an announcement from the White House later today.
That's Bloomberg's Valerie Teitel, and ahead of the announcement, Lockheed shares are higher by more than 2%. Boeing is up almost 1%. The Wall Street Journal is reporting that the Small Business Administration is going to cut more than 40% of its workforce. The report says that announcement's expected today. It would be the latest move from the Trump administration to shrink the federal government a day after the president ordered the dismantlement of the Department of Education, which is led by former Small Business Administrator Linda McMahon. Bloomberg government's Maeve Sheehy reports getting rid of DOE would take an act of Congress.
There's definitely an interest from some Republicans, but it just would be a massive lift and stands honestly probably no chance in the Senate, because unless it's part of reconciliation, which is, a whole thing where it would have to get approved, but it would need 60 votes in the Senate, and there are only 53 Republican senators. So there's really no chance that any Democrats would come across the aisle to vote to abolish the education department.
Bloomberg government's Maeve Sheehy. As for the SBA, the Journal reports the planned restructuring there would bring the agency back to pre-pandemic staffing levels. The Centers for Disease Control has rescheduled a meeting on COVID, flu, and vaccine planning after it was postponed last month. Bloomberg Law is reporting that the CDC's advisory panel will meet April 15th to review the latest shots and get an update on the measles outbreak. U.S. Trade Representative Jamieson Greer is expected to hold his first phone call with his Chinese counterpart next week. Sources tell Bloomberg News it's not clear who he'll speak with, but it's possible that it could be one of China's vice premiers. That would be a step up for a USTR. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
Friday morning, good morning. I'm Guy Johnson alongside Lizzie Burton. We're an hour away from the opening trade here in Europe. So what do you need to know? An unprecedented closure at London's Heathrow after a fire cut electrical power to Europe's busiest airports. Flights are being cancelled, diverted. Disruption is expected to last for days. EU leaders failed to pass a €5 billion ammunitions package for Ukraine. We will have the latest on that story from Brussels. Plus, European equity futures are a little lower. Tariff concerns continue to mount. Nike and FedEx have been hit hard overnight. They're becoming the latest companies, just the latest companies, to warn of significant tariff and economic effects. Lizzie.
Well, happy Friday, everybody. Happy Triple Witching Day. And it's been a busy week. It's still not over. It's been a busy week for the central banks. They were meant to give us some direction, but as you can see from the futures picture, futures pointing in opposite directions on the two sides of the Atlantic. European futures here down 0.1%. S&P futures pretty flat. But in the Asian session, you're already seeing those Nike and FedEx earnings weighing on sentiment, kind of barometers of the US economy. Brent trading up a bit, the disruption from the US sanctions on Iran-China flows. It all points back, whether it's central banks or earnings or oil, to the disruption from tariffs from Donald Trump. The countdown to the opening trade starts right now.
Friday the 21st, good morning. It is going to be a busy day. You've got a lot on your agenda. We start with what is happening in West London at Heathrow Airport, Europe's busiest airport, one of the busiest airports in the world. There has been a fire overnight. It is near the airport, not at the airport. It has caused a power outage. Heathrow is going to be shut until basically midnight tonight. We're talking about huge numbers of flights globally being diverted, rerouted, cancelled. Thousands, hundreds of thousands of passengers will be affected by this. The chaos is likely, Lizzie, to last for days. This is unprecedented, I think. I can't remember a time of when I've seen a major European airport being shut like this. Heathrow has had IT issues in the past. We also remember what happened with CrowdStrike. These issues in the past have caused chaos. But I can't remember the whole airport being shut due to a power outage.
Yeah, you obviously have weather issues, personnel strikes, but yeah. I wonder how this compares in terms of the disruption and the economic disruption. As you say, this is Europe's busiest airport. It's not just contained to Heathrow, though. You've also got 16,000 homes in southwest London affected, and the pictures of this are incredible. You know, 10 fire engines, 70 firefighters out there, all 5 terminals shut for the day. Yep. But, you know, I'm wondering if this bodes well for that third runway argument. If you've got so much reliant on, is it one power plant, surely, servicing all 5 terminals? Is that real?
It does seem quite incredible that we find ourselves in a situation where there isn't any redundancy built into the system, where there isn't the capacity to reroute power. This is a major industrial hub. You've got to think about it in those kinds of terms. You would have thought there must be some redundancy, but I guess the power consumption of effectively what is a small city is something you would have thought would be thought about, and such critical infrastructure. It raises the questions about the vulnerabilities of such a piece of critical infrastructure to disruption. This may simply just be an electrical fire.
But it speaks to a problem of the UK economy, which is that there is such a concentration in the southeast of England, and when something goes wrong, it affects the whole country and potentially the whole of Europe.
The whole world. Flights are being diverted out of Australia, out of the Middle East, out of America. This is a huge event that will last 4 days. The problem with this, with a kind of event like this, is that it doesn't just get limited to the day on which we're seeing the troubles. Mm-hmm. You have days of aircraft being out of position. It takes a long time, particularly for long-haul flights, to adjust to this. So we can expect, certainly, even if it were to open a little later on today, the chaos to last for the next 2 or 3 days, certainly when it comes to the long-haul schedule. BA, obviously, is the airline most affected by this. I think 1,300 flights roughly go through Heathrow today. Half of that is on BA's schedule. So BA, the most affected airline by all of this. We'll see how IAG stock opens a little bit later on. Let's turn our attention to what is happening in Brussels, or not happening in Brussels.
Yeah, so this personal bust-up I would focus on between Spain's Pedro Sanchez and Kaja Kallas, the EU foreign policy chief, because he was saying, look, we need a representative to speak for European citizens here. And she's like, what am I here for then? According to people in the room, at least. Basically, they can't agree on funding for ammunition. That's hit a roadblock. Lithuania saying they don't want to just talk about the numbers first. They want to talk about the principle of sending these, financing these weapons first. But you've got all of those internal arguments while European leaders are essentially worried that they're being sidelined from the Trump, Putin and Zelensky talks going on here.
Internal strife within Europe, unsurprising. There was this narrative that Europe is pulling together. That always was going to be stress tested at some point. This looks like it could be that moment, and you wonder what the ultimate fallout from it is. Is Kaja Kallas really the person that Europe wants to send to put at the table with Vladimir Putin and Donald Trump? That, I think, is the question that Pedro Sanchez is raising at the moment. Obviously, a lot of kind of disagreement over this issue, and raises questions about kind of who basically speaks for Europe, which is the sort of the everlasting question, which again just hasn't been resolved. But it does raise questions about we're basing an awful lot on Europe's ability to do things now, to get its act together when it comes to the rearmament story, to its economy, to so much more. Are we already starting to see cracks appearing in that narrative?
Exactly. And meanwhile, Zelensky ruling out handing control of Ukraine's nuclear plants to Donald Trump, but saying, look, I'm open to the investment if you want to put it there. That might give a bit of a security guarantee.
I think there's another meeting taking place next week with a wider group, so it'll be interesting to see whether or not that is something that gains traction. US markets, so I'm looking at the S&P Monday, Tuesday, Wednesday, Thursday, up by 0.4%. So we're potentially having a positive week, which I think will be the first one in 3 or 4.
Finally.
If we've finally got a positive week. I wonder whether or not, actually, when it comes to the final closing number, whether that will be delivered upon. You highlighted earlier on that we have witching coming up a little bit later on today. This is a huge moment for the options market today, one of the biggest I can remember in a long, long time. So that's going to be a factor. Plus, there's a load of corporate news that looks pretty negative as well. FedEx and Nike.
Yeah, so as I say, these are kind of barometers of the US economy. FedEx cutting its profit outlook because of higher costs and signs of weakening demand. It's pointing to the potential fallout from the trade war down the line. Nike the same, warning that tariffs could affect the earnings ahead. But interesting as well, internally, they're having to make this kind of pivot, or choosing to make this pivot from fashion to sports, and try and reclaim a bit of the cool from Adidas and the takeoff that has been the Samba. And Andrea Felsted been writing about this.
So what's the next shoe? What should we be thinking about?
The kill shot, apparently.
The kill shot. This is a tennis shoe, right?
I mean...
You know more about this than I do. Don't tell me you don't.
What trainers do you have, Guy?
I don't have trainers. I have running shoes. I've got a very old pair of Nikes, which I need to replace, actually. So I'm in the market for a new pair at some point. So we'll see what happens there. But yeah, so I think FedEx is interesting as well. There's already a story developing around the fact that corporates are struggling. We're going to speak to Salzgitter a little bit later on, one of the big European steel companies, highly exposed to this tariff story. And again, this comes back to this outperformance. Its stock has rocketed recently on the back of expectations that European stocks are going to do better, and it could be one of the beneficiaries of that. Do we start to see cracks appearing in that narrative? We'll find out.
But yeah, they're pretty gloomy about the boost that you'll get from the fiscal, from the new government. So interesting to talk to them later.
Highly exposed to the auto tariffs, highly exposed to steel tariffs. Anyway, we'll focus on that in a few minutes' time, because, as I say, we've got some great guests coming up on the show. Paul Skinner, Wellington Management Investment Director, joining us to talk about the markets. We've got the Salzgitter CEO, Gunnar Grobler, is going to be joining us a little bit later on as well. And Julius Baer, Equities Portfolio Manager, and Rob Arnott, joining us from America, Research Affiliates Chair. Looking forward to that conversation a little bit later. Busy day.
A busy day indeed, including for the economic data. We've got at 12:30 p.m. London time the Canada retail sales numbers, 1 p.m. London time the Fed's John Williams speaking, and then 3 p.m. the EU consumer confidence numbers, and as we say, triple witching options expiry happening later in the day. Valerie Titel is going to dive in for that.
So a bit of data coming up. I find there's a headline just crossed which I'm sort of scratching my head about. The UK is to pause the publication of PPI data, factory gate inflation data, due to data quality issues.
Oh, more data quality issues. I mean, we've had so many when it comes to the labour market, the bane of policymakers' lives. But PPI, of course, really crucial to the BOE.
It's going well in the UK today. It's all functioning as it should be. I'm joking. Let's talk about the stories we're focusing elsewhere on this morning. The President of the United States, Donald Trump, has signed an executive order to boost America's ability to produce critical minerals and potentially even coal. This as he seeks to reduce reliance on foreign imports. The order will provide financing to domestically process critical minerals and rare earth elements. It will also encourage faster permitting for mining and processing projects. Turkey's central bank has raised one of its key interest rates at an unscheduled meeting late Thursday. It's one of a number of moves made by the authorities to reverse Wednesday's sharp decline in the lira. The sell-off was triggered, of course, by the detention of the Istanbul mayor, Ekrem İmamoğlu. He's seen as a powerful potential opposition politician who could challenge President Erdogan in the next general election. And Bloomberg has learned that UBS is considering relocating its headquarters if Switzerland sticks to its demands that the bank hold an extra $25 billion in capital. Sources say executives believe meeting this requirement would make the group basically just uncompetitive with its global rivals. A draft proposal is due to go before lawmakers in May, but any changes would not likely be implemented before 2028. Feels like a negotiating tactic to me.
Yeah, I mean, clearly they were going to be lobbying for this. The CEO, Sergio Ramotti, already told us they're going to be pushing for a change to this until the very last minute. But, you know, the argument is, from the government and the regulators, they're trying to prevent a repeat of Credit Suisse.
Yep.
And then UBS is like, but hey, we helped out in a big way with Credit Suisse, so you know, don't overly punish us here. And they're saying it's not just a threat; this is a commercial reality.
I remember when HSBC tried to do something similar. It talks about moving its listing outside the UK. There were various compromises that were made ultimately to keep that listing here. But you've got to look at this from the other end of the telescope. UBS is huge. Mm-hmm. It has a huge footprint. It is a material risk to any country's balance sheet. If you are the country that takes on UBS, say it was re-domiciled to London, what would be the impact of that in terms of the risk that the UK has to run? So this is not just a, you know what, who wants us? I think there would be a conversation with a number of global regulators about who would be willing to take us. And I think that's the challenge that UBS faces here. It's not just we could wave goodbye to Switzerland to find another home easily. It would be a massive challenge, and regulators in other countries would look very carefully at the risk that they would be taking on in terms of the national balance sheet to take on a bank of this kind of scale.
Yeah, it's a good point. It already knocked the shares yesterday, but, I mean, that regulatory uncertainty has already been weighing on UBS compared to its European peers all throughout this year. So we'll see if there's any more impact at the open. But coming up on the programme, stay with us for more Heathrow Airport updates as Europe's busiest airport's forced to shut for the day. Plus, Nike and FedEx are, as we say, the latest to warn on economic headwinds this year, and we're going to check in on their stocks in the pre-market trade. But up next, tariff uncertainty weighs on markets as the White House reiterates that the big one is coming on April the 2nd. So we'll discuss that. If you've got any questions of your own for our guests, please do send them in to us on IB plus BBTV Go. This is Bloomberg. On the break.
43 minutes until the equity market opened this Friday morning. There's a lot going on. Let's talk about the situation out of the United States first, and then we'll kind of fold that into what we're seeing here in Europe. The White House press secretary is repeating a warning from the Trump administration that further tariffs will come into effect on April the 2nd.
The president has been very clear about his intention for April 2nd. It's going to be a big day for our country. I would encourage all of you to be here to cover the White House that day on April 2nd because there will be big announcements when it comes to reciprocal trade. And the president will be highlighting the unfair trade practices, the ways in which America has been ripped off by every country around the world, quite frankly. And there will be big tariffs that will be going into effect.
Caroline Leavitt standing outside the door to the White House, that nice little piece of ground just outside that so much news seems to come from, indicating once again that we are in a situation where we need to worry about tariff escalation. They keep repeating it. Donald Trump keeps talking about how much he is willing to escalate here. The markets have had a bumpy ride this week. Equities in terms of the US at this point are higher. But Valerie, what are futures telling us this morning?
Guy, look, the futures are in the red. And after those comments from the White House press secretary yesterday, we did erase the early declines on the S&P 500 and actually ended yesterday's session in the red as well. However, it's not all bad news when it comes to the equity market, Guy. We are looking to snap these 4 weeks of losses for the broader S&P 500. We are now up 0.4% on the week for the index. Will we see a positive session this afternoon to snap that 4 straight weeks of losses for the index? There could be some risk on the horizon. Those single stock movers that you guys pointed out earlier, FedEx, Nike, Micron, all moving in the pre-market. Also, you need to take an eye to triple witching. This is the option expiry event that happens at the end of every quarter. It's called triple witching because there are single stocks, ETFs, and indices, all 3 options tied to those equity indices expire this afternoon into the close. We normally see a very large surge in volumes and some volatile stocks, maybe some more less liquid single names have some pretty wild swings into the close. But hopefully we end the session in the green and end this 4 weeks of losses.
Valerie, in terms of the tariff narrative, just walk me through how much we're expecting there, how much is already priced in. The Trump administration keeps pointing us to a bigger and bigger event, it seems, on the horizon.
Look, they've called it the biggest day for tariffs, that they are going to rewire the trade of the U.S. Markets have had a very hard time pricing this in, but we continue to get quite negative news, even out from single names reporting earnings, warning about tariffs, impacting their margins, impacting their profits. So we're seeing it show up even more granularly in the U.S. market. It goes to show, though, whether this trade is going to be in the FX market like it was last year, or if it's going to show up in the wider equity market. But we are braced for that April 2nd day.
It's going to be a big day, isn't it? OK, Valerie, thank you very much indeed. Valerie will be back throughout the morning to keep us updated on what's happening with the markets. Paul Skinner, Investment Director at Wellington Management, joining us around the table. Nice to see you.
Morning, Guy.
Risk on or risk off?
I think it's got to be risk off at the moment. I mean, there's no doubt that we have quite a lot of potential volatility. For us, one of the big issues that we've got is the structural inflation problem that central banks have not met. And as we go forward, that inflation problem means that central banks are literally jammed. They can't lower rates to save the day, which they've done for 18 years or so. And as a result, we are going to see volatility as the market starts to price a higher term premium in the market. And at the moment, we just don't think that long end is giving you the correct discount rate to look at risk assets, to look at equities, to look at credit. So that needs to be repriced. That needs some volatility. And so
the bond market's not going to provide me protection. Is that what you're saying? Normally you'd go, you know what, the world's going to hell in a handbasket. Yeah. I'm going to buy a US 10-year.
In all honesty,
can I do that?
Yeah, no. I mean, the short end of the yield curve is going nowhere. It's going nowhere. So if you can find high-quality, liquid assets in the short end of that yield curve, you're in very good hands. Cash, actually, there's trillions in there. Cash probably is a great place to be. So short end of the bond market, high-quality things, and let that yield curve steepen, let that term premium come in, let the market readjust, let valuations readjust, then you can start moving longer on that yield curve, you can start looking at risk assets. So there's going to be a time this year where things present themselves extremely well with good value. So what we see, and we're active managers, so we're always looking for opportunities like this, is volatility, and you're going to get it this year. And this big change.
He sounds excited.
I'm hugely excited.
We're in the volatility business around this table, are we not?
Well, no. I mean, it's been an amazing week. It's been an unbelievable week. You've seen this incredible package come out of Europe, which is a game changer, complete game changer. You spend 500 billion euros, 50 billion on defence. That is going to change the economic environment. We think probably up by 1% per annum GDP. That's going to change Europe. And this is the important thing, because Europe has benefited from a current account surplus against the US for 20 years. They've benefited for 20 years of savings. Where have those savings ended up? In the United States.
But so you think that that fiscal boost outweighs the tariff threat? Because that is the crux of the question when it comes to the ECB in April.
Absolutely. Absolutely. Well, for us, yes, that boost is really going to be looking for people who are going to be investing longer term now. And so those savings that have been parked in the US, and these are huge, they're $15 trillion of European savings, they're heading home because we've closed the economic gap. You know, the GDP is closer to the US. We've closed the yield differential, which was only widened out after the... So we're going to bring money back.
I'm raising an eyebrow because last night Europe struggled to figure out how to spend money on Ukrainian armaments, ammunition.
They can't agree on anything.
So have we?
Europe comes together in a crisis, and my word, we're ending up in a crisis now. Whether it's Ukraine,
you're certain that's going to happen because at the moment you're seeing a huge outperformance by European assets. Is there a danger that, at least in the short term, maybe that's gone too far?
No, we have to look a little bit long-term than just, the next month. Long-term, it's going to be a great trade. No question about it. Now, it's going to force Europe to start raising capital as a group. You're going to end up with a deeper bond market in Europe. You're going to end up with a bond market that presents, really good...
You're certain of this? Because Europe at the moment is struggling to agree on anything.
Guy, it's a necessity. It's a necessity. America is going home. OK?
Yep.
So that peace dividend that Europe has benefited from, 2 or 3% of GDP expending that they haven't done in defence, they're going to have to do that now. And this is what the package is all about in Germany. It's about stepping up, and Europe is going to step up.
But Europe isn't the only option here. There's China.
For...
investing. You could put your money... It doesn't have to be the US. It doesn't have to be Europe. It could be China.
In all honesty, money's going back to China as well. You've got to remember that China own about 10% of corporate bonds across US. That's going back home as well, because actually the China story is not a bad story at the moment. Now, with tariffs at 20-30%, that knocks 0.5%, maybe 0.7% off GDP. If it ramps up to 50 or 60, then, you're taking 1% off of Chinese growth. But we're seeing really good signs that the consumer, white goods, second-hand houses, they're transacting well. We're seeing tech booming there. There's a lot of good things that the central government can do. Plenty of space on monetary policy. They've got very low inflation. Plenty of space fiscally. China's actually quite a nice story. So, yes, it could flow back into China, agreed. But, the problem is going to end up with the US because they need to finance their deficit.
Isn't the danger that we're conflating German fiscal space and European fiscal space? And we're assuming that Europe has fiscal space.
Mm-hmm.
Like other countries do. Ireland probably does. There's a few other countries that have fiscal space. Germany's got the bulk of it right now. Italy doesn't. Spain doesn't.
Yep.
France doesn't. The UK doesn't. We've already seen the data dropping this morning. Isn't there a danger that actually higher Bund yields create a crisis elsewhere? That this isn't as straightforward as maybe just money flowing back into Europe quickly?
The periphery doesn't need to spend that much. The periphery is doing fine. The peripheral economy is actually, in very rude health. So they don't need to spend much.
Yeah.
Germany, that core, that anchor that has anchored things down, needs to spend. They're going to do it.
Paul, great to see you.
Great to see
Optimistic. Paul Skinner, Investment Director at Wellington Management. Coming up, we'll get back to that European story. Failure to agree an armament package for Ukraine. We'll talk about it next. This is Bloomberg.
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding. It's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That coupled with our own legacy for having been around for over 160 years, that's what sets us apart. A focus on your story, our legacy.
Thirty minutes from the start of the opening trade. Futures pointing lower here in Europe by 0.4% following that risk-off mood that we've already seen in the Asia session after those corporate earnings out of the US really have weighed on sentiment. The idea that Nike and FedEx are a barometer of the US economy. But we're going to keep an eye especially on the airline names at the open given the disruption, the closure at Heathrow Airport. FTSE futures are currently unchanged. But if we look to the bond picture, we have the 2-year Treasury yield pretty steady. And across the European space, yields lower a touch at both ends of the curve, Guy.
We'll come back to the bond market in a moment. We'll also take you to Heathrow live in a few minutes' time to get you an update on what is happening there. But before we do that, it's probably worth paying a visit to Brussels to figure out what is going on or what didn't go on last night. France and Italy apparently holding up efforts to deliver €5 billion worth of ammunition for Ukraine. Leaders meeting in Brussels last night also tussled over who should represent the bloc in any potential US-led talks with Russia, assuming that Europe has a seat at the table. Ukraine's president says his country urgently needs the weapons and the ammunition now.
It's crucial that your support for Ukraine does not decrease, but instead continues and grows. And this is especially true for air defense, military aid, and our overall resilience. We need funds for artillery shells and would really appreciate Europe's support with at least €5 billion as soon as possible.
Oliver Crook is in Brussels. Let's find out what happened last night. Ollie, walk us through the evening.
Yeah, so listen, Guy, I mean, this was much more characteristic of what we would call a sort of classic EU leaders meeting, not one that's sort of under the sort of great pressures of an emergency situation in which they had a lot of deliverables. This was very light in terms of delivery. And of course, this was not sort of in the sort of prominence of Ukraine as the #1 issue in defense. This was obviously high on the agenda. But in the press conferences afterwards, they really stressed a number of the other European issues, including competitiveness, trying to reduce bureaucracy, also sort of talking about the tariffs and the impact that could have on the economy. Of course, defense featured, but it failed to deliver on anything really concrete in terms of the proposals. There were incremental steps forwards on that sort of defense white paper in those proposals that Ursula von der Leyen made a couple of weeks ago in terms of sort of funding for defense and other ways to try to get sort of joint procurement and all of that stuff off of the ground. But really, if you remember kind of early in the year, there was an initial sort of premise that was put forward by the High Representative Kaja Kallas that was trying to get basically 40 billion additional euros for Ukraine this year. That was scaled back to about 20 billion, and then it turned into sort of 5 billion for ammunition, and they didn't even manage to get that over the line, right? And there's also disagreements about who should represent the EU in the discussions with Donald Trump, if ever they get a seat at the table. But again, this was much more characteristic of a normal sort of EU leaders meeting. You heard there from Volodymyr Zelensky that basically support needs to increase, not diminish. I wouldn't say that sort of that support has diminished, but I would say it has stayed rather stagnant. And we should say this is the second meeting where we had separate conclusions for most of EU business and Ukraine, where only sort of 26 member states joined Ukraine. That did not, of course, include Hungary.
Ollie, thank you very much indeed. I think we're going to have more meetings next week. We'll see whether or not we make progress at that point. Bloomberg's Ollie Crook joining us with the latest from Brussels. Looks like defence stocks, interestingly, are going to be a little bit higher this morning, which I think is fascinating given the turbulence that we are seeing at the heart of Europe. Steel stocks have also been quite big recent beneficiaries, like Salzgitter stock absolutely rocketing recently. The numbers this morning, I don't know, will they pour a little bit of cold water on that?
Yeah, the numbers this morning somewhat disappointing and the outlook pretty gloomy going ahead. Let's go to them now. That German steel group Salzgitter saying that this challenging economic environment has weighed on performance, and it's reported a pre-tax loss for the fourth quarter of almost €155 million, higher than estimates. We can speak now to Gunnar Gröbler, who is CEO of Salzgitter, and it's really good to talk to you, Gunnar. I'm grateful you've made the time for us. You're not the only CEO who's kind of put out a bit of a gloomy outlook in this earnings season. So I'm wondering what the main cause of your gloom is. Is it domestic or is it international?
First of all, thank you for having me on your program. Look, 2024 has been a challenging year. I think for the entire steel industry, not only in Germany but entire Europe. I think I'm pretty happy that operationally we performed very well. We had an operational result of plus 110 million euros. However, as you said, of course we're not happy with the overall outcome for 2024. For 25, though, I think we started with a bit of a gloomy outlook. But you mentioned Brussels earlier on the program. I think what we're seeing in Brussels, but also in Berlin, is a clear focus on base industry in Europe, is a clear focus on steel industry in Europe. We're having the Steel and Metals Action Plan by the EU being published earlier this week. And we see the high focus in infrastructure, in defense, in spending in Berlin with big decisions coming today. So all in all, I think there is a positive outlook for the steel industry, second half of 25 and then the years to come.
So how much will that economic stimulus from the new federal government help your business, and how fast is it going to translate into earnings for you?
Well, if you take infrastructure, of course, steel is a big part of restoring infrastructure, both on the energy side, think about hydrogen pipes, but also plate steel for bridges and trains and what have you. So that would certainly stimulate the steel industry in Europe. And I expect this to trickle down into orders late 20 or in the second half of 25, and then growing in 26, 27. Given that this is a program for the next coming 5-6 years, I think it's going to support the steel industry over the next until the end of this decade.
Gunnar, good morning. It's Guy. Is it fair to say that European steel is a strategic asset?
I would clearly say yes to that. And I think the discussion around defense that we're having right now underlines very well. The EU Commissioner for Defense has made it very clear whatever comes in terms of defense should be delivered by European companies. Hence, steel companies in Europe that can deliver into defense should be on the uplift here.
So should European steel companies be protected going forward from here? Because there's obviously another factor that we need to throw into the story here, and that is what is coming with tariffs. European steel goes into huge numbers of cars and machines that get exported to the United States. If we do see a hit there and there is the potential for layoffs, should that be prevented in order to protect what is a strategic asset in Europe? How much policy protection should be provided, do you think, when it comes to the tariff narrative?
Well, first of all, I think Europe has already sort of well understood how strategic the steel industry is. You have seen a review on safeguards that will now be implemented 1st of April. You have seen sort of other tariffs on steel imports into Europe, which is exactly the right measure at these times where you have uncertainties on tariffs in other places of this world. Especially the US, what we see is not necessarily that the direct export of steel into US is the problem, but rather steel imports coming from other regions that cannot enter US anymore, that they will be dumped in Europe. That problem is well understood in Brussels, and measures have been taken. But of course, if the overall tariff stories continues and exports from Europe into the US become more difficult, there will be some kind of effect on the industry in Europe, and hence also on the steel industry. But to me, it is too early to say how that will play out. Hence, too early also to give you a straight answer to that.
OK, so that on the tariff picture. Let me ask you, Gunnar, about your hydrogen outlook, because given your green steel project, I'm thinking about your rival ThyssenKrupp. It said that it won't be able to run its direct reduction plan with hydrogen until 2027. It's going to have to use gas instead. Are you seeing similar impacts? Is your 2026 target still realistic at this point?
Well, first of all, given that we will be connected to the hydrogen backbone in 2029, we have a bit of more time. We are producing our own hydrogen with a 100-megawatt electrolyzer that we're building as we speak. And the additional hydrogen that is needed will then be added as of 2029 with a certain ramp-up. We have launched an auction on hydrogen summer last year. The outcome of that auction was very positive in terms of volumes. So volumes are there on the global market. What we're now discussing, obviously, is also the pricing. So there we certainly have to continue the dialogue. But I would say there is a clear path to hydrogen globally, and then also with a clear impact, positive impact on Europe. And hence, we will be able to deliver green steel based on hydrogen and green electricity. Yes.
Gunnar, do you think the story around sustainability, though, is fading from the spotlight?
5860 से क्रूड ऑयल बाय किया हुआ है तो टारगेट हो गया था उसका प्रॉफिट बुक कर लिया हुआ है आई होप सो नहीं किया तो कर लो या फिर ट्रेलिंग एसएल यूज़ कर सकते हो 5870 का।
Well,
ट्रेल कर सकते हो नेस्डैक में भी। गोल्ड का भी देखो हो गया टारगेट थोड़ा बहुत, चाहो तो उसमें भी बुक कर सकते हो गोल्ड में। सपोर्ट से अच्छी बाइंग आ गई है ऑलमोस्ट $18, थोड़ा बहुत यहाँ पर रुकना चाहिए 3022। सेलिंग भी अच्छी आई थी रेजिस्टेंस से। भाई क्रूड ऑयल देखो रेंज में है, पहले ही बता चुका हूँ, इट इज़ इन अ रेंज। नीचे सपोर्ट, ऊपर रेजिस्टेंस, किसी एक साइड के एसएल जब जाएंगे तभी कुछ बड़ा मूव आएगा, नहीं तो इसी रेंज में फंसा रहेगा प्राइस। सपोर्ट था रीटेस्ट का, दो बार वहाँ से बाइंग आ गई है। ऊपर एक रेजिस्टेंस था, वहाँ से सेलिंग भी आ गई है। नीचे भी अभी भी सपोर्ट है, देखते हैं कौन सा साइड का एसएल पहले जाता है, बाइंग का या फिर सेलिंग का। दोनों ही टेस्टेड है मल्टीपल टाइम। बाकी लास्ट ट्रेडिंग सेशन में बहुत सही, कम क्वांटिटी में भी ट्रेड कर सकते हो, कोई इशू नहीं है। क्रूड नेचुरल गैस को भी देखोगे बिल्कुल स्लो मोशन में मूव किया है। मॉर्निंग पे एक अच्छा मूव जरूर आया था बाइंग साइड पे, उसके बाद बिल्कुल ही साइडवेज हो गया। पीएम हो गया, लेट्स सी थोड़ा बहुत मूव अब आता भी है या फिर नहीं नेचुरल गैस में भी। बाकी क्रूड ऑयल में भी जिन लोगों ने सेल किया होगा उनको भी थोड़ा बहुत टारगेट मिला होगा, ज़्यादा बड़ा नहीं है टारगेट। जैसा मैंने बताया दोनों साइड फंसे हुए हैं, बायर भी फंसे हुए हैं, सेलर भी फंसे हुए हैं। एक साइड का एसएल उड़ेगा जरूर, किस साइड का पहले उड़ता है देखते हैं, क्योंकि अब नीचे भी प्राइस रुक गया है ऑलमोस्ट। जैसे बाई मत करना, ठीक है, ऑलरेडी काफ़ी देर से बाई कर चुके हैं। अब किसी एक साइड एसएल जाने दो, फिर देखते हैं नीचे बाइंग का या फिर सेलिंग का। सेलिंग ही आ जाए तो बेटर है, एक साइड तो निकले। सपोर्ट नेस्डैक में देख लेते हैं। तो अभी तो इसमें सेलिंग में ही अच्छा खासा रेजिस्टेंस है, सेलिंग आ रही है ठीक ठाक। सपोर्ट ले लो। सपोर्ट है, ब्रेक हो जाता है 19,400 के नीचे तो और गिर सकता है। सोडेलो इज अ सपोर्ट। वैसे तो वो मल्टीपल टाइम टेस्ट हो गया है, आज ही टेस्ट नहीं हुआ है, आज से पहले भी 2 बार और आ चुका है सेम लेवल पे। नीचे और देख लेते हैं अगर कोई एक और सपोर्ट मिल जाए। देखो इसके नीचे एक और सपोर्ट है, इस वाले को थोड़ा सा अपडेल हो भी सपोर्ट है होने को, बट बिकॉज मल्टीपल टाइम टेस्ट हो गया तो नेक्स्ट सपोर्ट कंसिडर करना ज़्यादा बेटर रहेगा मेरे अकॉर्डिंग। रूट में अवॉइड करना, बाइंग मत करना, फिर से किसी साइड निकलने दो। पर ब्रेकआउट होता है तो 19,628 के बाद बनेगा डब्ल्यू, अगर ये सपोर्ट होल्ड कर जाता है। वैसे देखोगे तो सपोर्ट ठीक ही था, अभी इस वजह से ही थोड़ा पुल बैक आया है। नैस्डैक में लास्ट टाइम जब सपोर्ट लिया था 14 मार्च को एक हाई बनाया था, सेकेंड टाइम सपोर्ट लिया इक्वल हाई था, तो थोड़े बहुत बायर बचे होंगे। अगर ये बना देता है ऊपर 19,625 तो वापस कल के लास्ट स्विंग के ऊपर चला जाएगा। अगर नहीं कर पाता है, डब्ल्यू फॉर्म कम्प्लीटली एम बना के गिरता है तो ये सपोर्ट ब्रेक हो जाएगा इजीली 19,400 वाला, बहुत इजी हो जाएगा। बाकी कोई डेटा तो नहीं है, शेड्यूल मार्केट नॉर्मली मूव करेगा, कोई सडनली न्यूज आती है तो कह नहीं सकते। कोई ओवरनाइट रखता है पोजीशन तो ध्यान रखना भाई ओवरनाइट पोजीशन का। तो है सपोर्ट क्रूड ऑयल में, बट जैसा मैंने बताया रेंज ब्रेक नहीं होगी तो आप कह नहीं सकते किस साइड निकलेगा। 2 बार ऑलरेडी बाइंग आ चुकी है, ऑलरेडी रेजिस्टेंस से रेजिस्टेंस भी जा चुका है, इसलिए बोल रहा हूँ कि एक साइड निकल जाने दो। बीच में एंट्री करोगे तो प्रॉब्लम हो सकती है। एम और डब्ल्यू का पता नहीं चला, स्क्रीन, हाँ स्क्रीन शेयर कर देते हैं। एम ऐसे बन सकता है कुछ, ये डब्ल्यू ऐसे बन सकता है कुछ। बाकी अगर डब्ल्यू नहीं बनता है तो फिर ब्रेकडाउन इज वेरी वेरी हाई चांसेस ऑफ ब्रेकडाउन, क्योंकि वो नीचे फिर लोअर हाई बना देगा उस केस में। लाइक भी करो गाइस, 85 पीपल आर वॉच, 85 लाइक्स आर डन, 26 पीपल आर वाचिंग। जिन लोगों ने लाइक नहीं किया लाइक कर दो फटाफट से। नेचुरल गैस में लोग सेलिंग में, थोड़ा ध्यान रखना। क्रूड ऑयल वाले भी थोड़ा वॉल्यूम कम हुआ है, बट ठीक ही है, लाइक इतना भी कुछ कम नहीं है, थोड़ा बहुत मोमेंटम एज यूजुअल हो ही रही है। एटी सेवन लाइक, 13 लाइक्स आर रिमेनिंग, कम ऑन। सभी लोग लाइक कर दो अब जिन लोगों ने नहीं किया स्क्रीन को लाइक अभी तक। देखते हैं 19,400 400 के नीचे ब्रेकडाउन कर भी पाता है या नहीं। गैस भी बीच में अटक गया है, सपोर्ट से बाइंग आई थी, अच्छा सपोर्ट था, अब बीच पर रुक रहा है बिल्कुल ही। ना नीचे ना ऊपर, या तो नीचे आ जाए फिर से बाई कर लें, या फिर ऊपर ही चला जाए एग्जैक्ट रेजिस्टेंस पे। मिडल ऑफ द लेवल फंसा हुआ है बिल्कुल बुरी तरीके से। आता तो फिर 19,150, 19,100, दैट इज नेक्स्ट सपोर्ट। अगर 19,400 होल्ड नहीं हुआ 15 मिनट टाइम फ्रेम पर। क्रूड में मत बाई करना, ठीक है गाइस, वेट करना क्रूड में, एक साइड निकलने दो एसएल्स। सेलिंग में जो लोग हैं अगर वो बुक करना चाहें तो कर लेना, होल्ड करना चाहें तो कॉस्ट टू कॉस्ट पर डाल दो हाफ प्रॉफिट बुक करके, क्योंकि देखो इन केस मान के चलो अगर नीचे वाला एसएल उड़ गया तो फिर बड़ा फॉल आएगा। मैं ये नहीं कह रहा हूँ डायरेक्टली गिर जाएगा, बट फिर टारगेट बड़ा हो सकता है। बाकी अगर नहीं गिरता नीचे वाला सपोर्ट होल्ड कर जाता है, हाफ प्रॉफिट बुक करके ट्रेलिंग एसएल जाएगा, फिर ऊपर जाएगा तो नेक्स्ट रेजिस्टेंस से सेल कर देंगे। छोटी रेंज बना दी है मार्केट ने भी यहाँ। $19,500 से फर्क नहीं पड़ेगा, 19,400 400 ब्रेक होगा तभी वो सपोर्ट ब्रेक हो जाएगा। अभी भी रुका हुआ है उसी सपोर्ट पे। 400 या तो नीचे ब्रेक हो या फिर ऊपर 19,650 ब्रेक हो जाए। रुकने नीचे गाइस, 88 लाइक्स पे नहीं रुकना है, 100 लाइक्स पे रुक जाना। इन लोगों ने नहीं किया कर दो फटाफट। वी आर स्टक एट 88 लाइक्स। बाकी नेचुरल गैस मैंने बता दिया, सॉरी क्रूड बुक करना है करो, होल्ड करना है सेलर्स को तो आप प्रॉफिट बुक करके होल्ड करना। अभी भी रेंज ही है ये। बाकी बाइंग मत करना, अब छोड़ दो, किसी एक साइड के एसएल जाने दो। इवन दो अभी भी है ये सपोर्ट ही, ऐसा नहीं है कि सपोर्ट नहीं है, इट इज स्टिल सपोर्ट एरिया, बट थोड़ा वेट करते हैं किसी साइड निकल जाए। बाकी वीकली एनालिसिस के लिए डोंट फॉरगेट टू ज्वाइन टुमारो। कल सैटरडे संडे वीकेंड है, मार्केट बंद रहेगा, क्लोजिंग है, तो वीकली एनालिसिस करेंगे, वो देख सकते हैं, एंड देन मंडे को फिर सीधा और लाइव रहेंगे। थैंक यू सो मच, एक और लाइक इंक्रीज हो गया। कैंडल क्या नहीं, नॉर्मली कैंडल है, ओपन इक्वल टू हाई कैंडल नहीं है ये, नॉर्मली कैंडल है क्रूड एमसीएक्स की। नॉट सी वीकली एनालिसिस। ओके, रिकॉर्ड एनालिसिस चेक करते हैं। इंडियन टाइम के अकॉर्डिंग इट इज़ अराउंड 12 p.m. to 2 p.m. between 12 p.m. to 2 p.m. Time, changes sometime, but around 12 p.m. to 2 p.m. I don't know what is the time there in UK at that time. On guys, 90 likes हो चुके हैं, 10 लोग और लाइक कर दो फटाफट से। डोंट फॉरगेट टू लाइक द स्ट्रीम। 9:30 होने वाला है, 2 घंटे और हैं इसके बाद मार्केट क्लोजिंग में। नेचुरल गैस भी नहीं आ रहा है नीचे, आई डोंट नो क्या हो गया इसको। इतना रुकना नहीं चाहिए वैसे, नेचुरल गैस भी थोड़ा फास्ट सेलिंग आनी चाहिए थी। आज तो नहीं है, डोनाल्ड ट्रम्प की कल थी स्पीच, कल वो एफआईआई का एक समिट था वहाँ बोल रहे थे। आज नहीं है, 21 है ना, आज तो नहीं है स्पीच। 20 likes हो गए हैं, 10 likes are remaining.
News when you want it with Bloomberg News Now. I'm Nathan Hager. It is the worst disruption for Europe's busiest airport in decades.
The Circle Line is operating with severe delays. Heathrow Airport is closed.
That's what they're hearing on the London Underground today, with the home airport for British Airways and Virgin Atlantic shut down through the day thanks to a fire at a nearby power substation that blazes out now, but Heathrow says it can't say when power will be fully restored. Benedict Kamel is Bloomberg's head of global aviation.
Hopefully by tomorrow things will be back to normal, but usually a disruption on this scale leads to several days, if not into next week, of disruptions, because you'll have aircraft out of position, you'll have crew out of position. So this is not just today. This is something that will stay with the airport for the next couple of days.
Bloomberg's Benedict Kamel says this will also raise questions about why Heathrow didn't have contingencies beyond that one power station. London's counter-terror police are leading the investigation into the cause of the fire. Shares of British Airways parent IAG right now are lower by 2.5%. Breaking news for military aviation. Boeing has won the contract to design and build the next generation U.S. fighter jet, beating out rival Lockheed Martin. President Trump announced it this morning alongside Defense Secretary Pete Hegseth.
It'll be known as the F-47. The generals picked a title, and it's a beautiful number. F-47.
President Trump says the new fighter jet will be built during his administration. He didn't give a price tag. Boeing shares are higher right now by 4.5%. Lockheed is down 5%. This announcement comes after a Pentagon meeting this morning between Defense Secretary Pete Hegseth and Elon Musk. The world's richest man has reportedly left the Pentagon after that meeting on China and technology. The Wall Street Journal reports Musk was originally scheduled to receive a briefing on top secret plans for potential war with China, but defense officials later said it would be unclassified. Bloomberg's Bill Ferries reports President Trump vehemently denied that China would be discussed at all in social media posts overnight and into this morning.
Pete Hegseth, the defense secretary, saying something similar. It is clear they've said Elon Musk is going to the Pentagon. We don't know if this is part of his role with Doge or what.
Bloomberg's Bill Ferries, and after the meeting, Musk was asked what he talked about. His reply to a reporter, "Why should I tell you?" On Wall Street, stocks are headed for their fifth straight week of losses. That would be the longest losing streak in nearly 3 years. Right now, the S&P 500 is lower by 0.7%. The Dow down 0.6%. So is the NASDAQ Composite. Companies like FedEx, Nike, Micron Technology all warned that tariffs and trade uncertainty could hit their earnings. Despite the recent losses, though, retail investors are doubling down. JP Morgan Chase says individual traders pumped more than $12 billion into stocks just the last week. Bloomberg's Emily Grafeo has more.
What we typically see when a market bottoms is everybody is left. So at least according to JP Morgan, the fact that retail investors are still buying this dip means that there could be more bottom left to go in this market downturn.
Bloomberg's Emily Grafeo. The JP Morgan report says retail traders have lost 7% so far this year compared to a 3.7% decline for the S&P 500. Israel's defense minister is warning the country will permanently annex land in Gaza if Hamas continues to refuse to release hostages. Israel Katz's comment came after renewed Israeli airstrikes and a limited ground incursion. Ophir Falk is a foreign policy advisor to Israeli Prime Minister Benjamin Netanyahu.
Our hearts go out to the hostage families, for sure. But history has shown, unfortunately, that the only way of proceeding with Hamas is through force.
Ophir Falk with Prime Minister Netanyahu's office spoke with ABC News. Meantime, Israel's High Court has temporarily suspended Netanyahu's plan to fire Ronan Bar as head of the Shin Bet Domestic Intelligence Agency. That move sparked mass protests that are expected to continue into the weekend. The Trump administration is debating whether to invoke a state secrets privilege in response to a judge's questions about deportation flights of Venezuelan immigrants to El Salvador. Deputy Attorney General Todd Blanche says in a court filing there are ongoing cabinet-level discussions about Chief Judge James Boasberg's demand for more information. The judge ordered the Trump administration to provide more details about the flights or assert a state secrets claim. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
Betty, let's talk about the impact of this. Let's first of all start with the unprecedented nature of what is happening here. This is Europe's busiest airport. How is there no redundancy? How is there no power backup for an airport of this scale and importance?
That's a very good question, and I'm sure that's something that will be closely probed in the coming days. But the situation right now, as we just heard, is this really unprecedented closure. We had, disruptions in the past. We've had weather-related disruptions. We've had strikes. We've had air traffic control outages. In 2006, we had the terror attacks in London. But even then, you didn't have a full-day, complete lockdown of the airport. This is really unprecedented. But to your point, the aviation industry is really built around redundancies. It's built around having safe systems that are foolproof, that sort of kick in if one thing goes wrong. So how this substation, which is where the fire started, that's about 2 miles away from Heathrow, how that could knock out Europe's biggest airport and busiest airport, that's really going to be a question of much debate. It's not just the airport, it's also people in the vicinity that are affected, but obviously the airport is the big one that got hit here.
So if Europe's biggest airport can be closed for a day because of something like this, Benny, does it mean that there'll be a rethink about whether Heathrow can actually handle a third runway?
That's actually a very good question. This comes at a very inopportune moment for Heathrow, who are trying to prove that they are fit for purpose, they are fit for the future. And here you have essentially one glitch, shall we call it. It's obviously bigger than a glitch. It's a pretty substantial blaze, really knocking out this massive artery. So other airports might be looking at this and thinking, okay, what can we learn from this? We did have a case in Frankfurt a couple of years ago where a digger dug up a cable, and that led to the airport also closing down. And there, similar discussion, like how can it be that one single cable can knock out something as important as an entire airport? So a lot of questions around what the infrastructure is like. Is it creaky? Is it outdated? Does it have the right redundancies? Yeah. Those are the types of questions that people will be asking.
Benny, just give us a sense of the scale of the disruption, not just at Heathrow, but other airports in the UK, other airports around the world. How long does it take to correct a big closure like this at Heathrow? What are the ripple effects that are going to stem from it?
We're talking days here, really. I mean, you're talking about initially the first phases of the aircraft that were in the sky. For instance, there was an Etihad aircraft from Abu Dhabi that had to land in Frankfurt. Probably not where people wanted to end up. And that means you need to find alternative mode of transport. You might need to put the people up in hotels for the night. That is hugely expensive. You need to work through immigration. So a lot of crisis control at the airlines right now. Emirates, which is a huge operator into Heathrow, more than half a dozen A380s that sort of rain down on Heathrow each day. They've cancelled their entire morning service, and the afternoon also looks very, very patchy for them. So we're talking thousands of people here for each airline. British Airways alone is by far the biggest operator, more than 600 flights a day, followed by Virgin. Virgin have said the morning service is off, the afternoon service unclear. So these massive ripple effects with aircraft out of position, crew out of position, passengers out of position, that's going to take well into next week to get sorted out again.
Youth unemployment is an issue in all labor markets.
Pick a side. What do you think? Dovish or hawkish?
So I'm going to say there was a little bit of both. There was something for everyone, okay? So I'll be diplomatic there. The dots actually were pretty hawkish. I think what's interesting is the median dot people are holding on to said 2 cuts for this year still.
Yep.
But if 2 participants had shifted their dots, we would have been at 1.
Yeah.
That's actually hawkish under the hood of the car. But when we got into the presser, that was resoundingly dovish. So net, I think the presser pushed things into the dovish place. And really, we believe it was pretty masterful by Powell to be able to pull off preserving optionality once again.
Okay, so where do we go? I'll continue with the car metaphor. Can I park the car for now, put
Please.
the Fed to one side, and we'll wait for tariffs? That's basically what we're waiting for here.
We are, and the date that's really important is upon us actually pretty soon. It's April 2nd. April 2nd, so much has gone on, we kind of forget what we were expecting on April 2nd. But to refresh, we're waiting for this American First Trade Memorandum. That is supposed to be really the manifesto on what does trade look like for America writ large. And that's pretty big, and that's going to be meaningful. We're also going to figure out what reciprocal tariffs look like. And April 2nd is also the kick the can from March to April for Mexico and Canada tariffs. So there's a lot going on, and I think there's a real potential for the market to maybe not get what they want.
And the word reciprocal, good morning to you, Lindsay. The word reciprocal is used here, but increasingly in inverted commas because it seems to mean so many different things, certainly over in the United States and in the White House, because on the one hand it means, sure, putting the same tariff on another party that they put on you, but it also seems to take into account tax regimes that the administration doesn't like, and maybe even low-wage environments that the administration doesn't like. So we could get a lot of surprises on April 2nd, I suppose, is the point.
I think that's exactly right. And that's where there's room for disappointment or the market potentially being upset, because we're waiting for a playbook. We're waiting for definitions for exactly the point you just made. What does reciprocal actually mean? And I think if the market doesn't get a really clean set of definitions, I think we could see some more volatility like we saw 2 weeks ago.
And Powell went out of his way yesterday to say that it's really difficult to work out what impact tariffs will have on prices. Maybe months down the line it might be easier. But at this point it's difficult to calculate. He says there is some impact from tariffs on inflation, but not sure exactly to what extent. Once we see the tariffs, can we sort of do those sums? Can we work that out? Will we have a better understanding of how inflationary or not this is going to be?
Yes, if we get that playbook on what tariffs are, we can do the math. I think there are a lot of participants in the market that feel very comfortable doing the math. We just haven't had the inputs to do the math that we need to do.
So what do you do in the meantime? Do you just sit on the sidelines? I read your note this morning. You've got to be careful which bonds you buy. People seem to be piling into cash right now. You can understand why. It gives them a lot of optionality. What do you do?
Yeah, so on the cash point, I mean, we've got a lot of central bank action coming. In some cases, or in most cases, we're either in a hold or a cut, and maybe the final cut. That would give you confidence to be in some of those kind of cash instruments. But for us, what's far more interesting is looking at the relative value moves that have happened recently. Specifically, the moves in Europe make us feel like we want to be more in a steepener. Specifically, we think term premia is going to increase, but the tariffs make us think that a steepener is a better way of playing it rather than directionally short. And then from the credit side, what we've seen in the past 2 weeks is Europe really outperforming the U.S. And so when we saw this moment of volatility about 2 weeks ago, we actually added U.S. credit. That's doing well. And I think if it does too well before April 2nd, that could be a good opportunity to pare some back. So it's not, spring break yet. It's not time to just sit back and wait for April 2nd. We're active managers. I think that's what you need to be in this market, and we will be dynamic.
OK, so steepness in Europe. Thinking about Treasuries and how they responded yesterday to the sort of reaction function in Treasuries, I suppose, how they responded to Powell, could you have seen a world where he didn't sound too worried about inflation and he used the word transitory and yields were spooked and we saw much higher yields in the US? We didn't necessarily see that response. Maybe that was a little bit surprising, given how scarred we've been from the recent years.
Yeah, I think transitory brings up a lot of feelings. It's a word that we had before that didn't really play out in the short time frame that normally people define transitory to be. But I think it was that when you looked at the SEP dots and you looked at the forward years in terms of inflation, they did not represent a bump. And so the way that the forecasting read, I think, gave comfort that the Fed can play through.
Right.
For now. Now, that could change.
So the market's focusing on the sort of unofficial forecasts of the Fed, because they're not a commitment, they're not really a forecast, are they, the dots? But focusing on that rather than the views of just one person, OK, he's the chair, but sort of saying we're not going to worry too much. If he's not that bothered about inflation, others on the Fed will be more worried about sustained inflation.
Well, I think what you got was a coalescing around, kind of to use Powell's words, it's uncertain, we don't know right now. But there seemed to be enough comfort in terms of pausing. And that was the big takeaway.
Let's come back to Europe for a minute. I know we're bopping around either side of the Atlantic. Germany has a lot of fiscal space. It can do what it needs to do on defence. Italy doesn't. Spain doesn't. The UK doesn't. when you look at other bond markets around the Bund market, what do you see? How significant is the risk? If Rachel Reeves gets it wrong in terms of the upcoming spring statement, the kind of the budget that we're about to see, or non-budget, how big a risk is there that the European bond markets could be blown off course quite quickly?
Yeah, I think we've seen the big volatile moves that we're going to see already.
Okay.
We had humongous moves, obviously, in the markets.
That
so
started
far.
in bunds, though.
Right. Right.
But it's gone to other markets that don't have the tolerance for higher yields.
Right.
And I'm wondering if there's a danger that we're kind of at the point where extra spending is going to cause problems and the market is going to get a little bit freaked out by the supply it's going to see and the debt levels it's dealing with.
Yeah, I think it's a time and distance thing. So as we talk about what the spending could be, that spending doesn't start tomorrow. And so I think we've got some time for the market to get more comfort around what that would look like in the future. And therefore, this concern of some really big volatile spikes, I think is less likely.
News when you want it with Bloomberg News Now. I'm Amy Morris. Boeing shares are 4% higher after word it beat out Lockheed for the next-gen fighter jet contract. President Trump announced the deal.
After a rigorous and thorough competition between some of America's top aerospace companies, the Air Force is going to be awarding the contract for the next-generation air dominance platform to Boeing.
Now, that program aims to develop a new fighter jet that will operate with drones and replace the F-22 Raptor. The Air Force plans to spend up to $20 billion on research and development. The new fighter jet is expected to enter service in the 2030s. Europe's busiest airport is shut down, and officials do not know when it will reopen. A substation fire has forced London's Heathrow Airport to close for at least the day, but now officials are saying it could be longer. The UK Metropolitan Police said its counter-terrorism command is leading the probe, given the location of the substation and the impact it had on critical national infrastructure. Bloomberg's Benedict Campbell reports it's not scheduled to reopen until at least midnight London time.
Usually a disruption on this scale leads to, several days, if not into next week, of disruptions, because you'll have aircraft out of position, you'll have crew out of position. So this is not just today. This is something that will stay with the airport for the next couple of days.
Bloomberg's Benedict Campbell reports air traffic control issues have forced airport outages in the UK before, but they usually only last a few hours. Earlier this week, the Trump administration fired 2 members of the Federal Trade Commission, both Democrats. Now, one of those fired, former FTC Commissioner Rebecca Kelly Slaughter, tells Bloomberg you can draw an equivalence between the FTC and the Federal Reserve.
To be clear, there's no legal difference between Jerome Powell and me. In fact, he and I were both originally appointed by President Trump around the same time in early 2018. And if the president can legally remove me, he can legally remove Jerome Powell.
You can hear the full interview with former FTC Commissioner Rebecca Kelly Slaughter on Bloomberg's Balance of Power. And President Trump says the Small Business Administration, rather than the Department of Education, will handle all student loans from now on. Trump also says the Department of Health and Human Services will handle nutrition programs and special needs programs for students. Stocks continue their slide. The S&P on track for its fifth week of declines in a row. We do check markets for you all day long here at Bloomberg. The S&P now down 0.8%, NASDAQ down 0.7%, the Dow down 0.7%, the 10-year Treasury yield at 4.22%, the 2-year yield at 3.92%. Shares of Tesla are now about 2% higher. That company's shares have plummeted more than 50% in just 3 months. Elon Musk held an all-hands meeting to encourage employees to, quote, hang on to your stock, as he spoke to the backlash that Tesla is facing.
If you read the news, it feels like, Armageddon. I can't walk past the TV without seeing a Tesla on fire. Some people, it's like, listen, I understand if you don't want to buy our product, but you don't have to burn it down. That's a bit unreasonable.
Musk repeated his claim that Teslas will soon be capable of driving autonomously with a software update. Nike's shares are 5.5% lower, erasing $9 billion in value. That company predicted further declines in revenue and profitability in the current quarter because of an ongoing merchandise reset and newly implemented tariffs on imports from China and Mexico. FedEx shares are more than 9% lower after that company lowered its full-year guidance for the third consecutive quarter. FedEx's latest outlook assumes the global economic, political, and trade environment won't get any worse. And we're hearing from Fed officials. New York Fed President John Williams says the Fed's current monetary policy stance is appropriate and puts the central bank in a good position to respond to changing conditions.
The U.S. economy has entered the new year on firm footing. GDP and job growth have been solid, propelled by robust gains in the labor force and productivity.
Williams expects growth to moderate this year because of reduced migration. He sees a slowdown in labor force expansion. Fed officials revised up their estimates for inflation this year while downgrading their forecasts for growth. Chicago Fed President Austin Goolsbee says the impact of tariffs could be transitory inflation, but only if the tariffs are limited in scope and not followed by retaliation. Goolsbee expects interest rates to come down in the next 12 to 18 months if inflation continues to cool. That's news when you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
Upskilling is becoming more important, so the world has to be prepared for it. So there has to be a complete...
Yeah, we never really know where to go, but what's so interesting to me about where we are today is that there has been this huge mind shift from inauguration day to today. So, coming into inauguration, people were fantasizing wildly about where the markets were going, where the new administration was going to take the economy and the markets. And since then, investors have had to come to grips with the fact that there is, without question, a shift in behavior out of Washington where President Trump is behind the wheel. And so investors are used to being in the passenger seat with specific companies, with, next to CEOs for good and for ill. But now they're having to look at their entire portfolio and decide, are the investments I'm involved in going to be beneficiaries of the new administration or victims of them?
It's just so interesting to hear this, because I think there's this narrative that emerged following the first Trump administration that this is a guy who looks to the Dow and the S&P 500 as a scorecard, as a sort of report card. And indeed, during his first administration, he touted numbers there. Yet we've heard a different narrative emerge this time, Peter. Do you buy it that he's not paying attention to the stock market?
One of the things we know about President Trump is he loves to cite metrics that work in his favor. So I'm not surprised with the markets dropping that he's looking for alternative measures of consumer and satisfaction in the economy. But I think at the end of the day, what he is trying to demonstrate more than anything else is that he and he alone is going to dictate economic policy, American diplomatic policy, and that everyone else needs to come to grips with that.
But is there a point, it's interesting, Peter, because how many conversations I've had with folks and they're like, oh, you know how this is going to play out. It's just like, you reported on it the first go round, and it feels so different. And I think so many people are realizing this is different this time around. Having said that, is there a breaking point where the team around the president somehow has a bigger say, like they did in the first administration? Because right now it does feel like, absolutely, like you lay it out, the president's in the driver's seat and everyone is there in the back seat to back him up.
Yeah, one of the things that I say to my students is falling confidence, individuals grow spines. Mm-hmm. And so what we're likely to see is that should the markets continue to drop, should consumer confidence continue to fall, those around him will feel compelled to react. Whether that's sufficient or not, we don't know. And to be fair, Carol, there are a number of organizations and individuals who feel wildly empowered now. Mm-hmm. And so we're in this interesting moment where individuals and organizations are having to decide in which camp do they expect to fall. Because one of the things we've seen with dominant leaders such as Trump is there are clear benefits and there are also clear punishment.
Well, how do you advise people to weather this storm, if you indeed think it is a storm? Because there are a lot of people we talk to, Peter, who say, okay, wait a second. Once he gets tax cuts figured out, once we get to April and there's more clarity when it comes to trade, things will become less volatile. What do you say to that?
So I think that investors have to be thinking, I say a lot, plan for what you can imagine, but be prepared for what you can't. In this environment, investors and corporate executives need to have two playbooks at once. One is in anticipation of things going in their favor, but also a very clear playbook for if this goes against me, what do I do? What are my preparations planned ahead in anticipation of that? Because the outcome here is going to be very binary. And that's what we see over and over, is that when you create beneficiaries and victims, the vulnerability that comes from the victims sets things in motion. We're seeing that in Europe right now, where the geopolitical vulnerability has leaders on edge and they're mobilizing in response.
I'm going to ask you something crazy, Peter. Is one of the outcomes here, on an investor perspective, that the U.S. becomes uninvestable in your view?
I think that is a clear possibility. I think that investors have to be made comfortable that the United States is interested in foreign capital, in retaining domestic capital, and appreciate, Tim, that if you look at labor, goods, and capital, we've already seen restrictions and walls go up on the immigration front. We're seeing tariffs creating friction in terms of the mobility of goods. It is, to me, only a question of time when capital falls into that same playing field where public policy begins to intervene, and not just in the United States, but globally, in terms of wanting it, not wanting it, hoarding it, pushing it away. Those are completely in sync with what we're seeing with labor and goods.
Control and monitoring technology with Vodafone Business IoT. Control and monitoring technology with Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
So the Bank of Canada has cut interest rates yet again. Canada is striking back with its own tariff measures in Trump's trade war that he has launched against the world. Let's get more from David Rosenberg, one of our regulars. He reckons that the current environment looks similar to 1984. Now, 1984, I have to cast my mind back. Brian Mulroney became prime minister that year, and he pushed through the free trade agreement, for example.
Well, he pushed through the free trade agreement years later, and of course, working with Ronald Reagan and then George H.W. Bush. But the comparison I was drawing was how John Turner was the white knight coming from Bay Street at that point and enjoyed a honeymoon period. And the next thing you know, after the election, the Tories swept. Mm-hmm. So I was drawing the comparison really just to what's happening right now with Mark Carney's honeymoon period.
John Turner emerged as a liberal.
Liberal leader, that's right. Replacing Pierre Trudeau.
Oh my gosh, you're bringing there are some interesting
I'm old
echoes.
enough to remember that, true enough. You should be too.
Oh, I do remember, yeah. I think I just missed Trudeau as Prime Minister. Of course, I got to Canada in '86. But I'd heard of Trudeau, even in my 20s. Pierre Trudeau, he had a global impact, or an image anyway. But anyway, let's move on to the current.
Right.
The current. You reckon that so far Canada has had an inadequate response to to Trump's tariffs?
I'm very disappointed because, well, firstly, I wouldn't be wasting time as an elected official in Canada talking about Donald Trump anymore. I wouldn't talk about Donald Trump. I wouldn't call him names. I wouldn't make a meeting with him contingent on him refraining from insulting us anymore or talking about annexation. I would really just stop talking about Trump. And I would stop engaging in a tit-for-tat tariff war with the United States because it's not a war we're going to win, okay? We're putting tariffs on their products is only going to make matters worse for consumers here in Canada at a time when there's the potential where we're going to lose 400,000 jobs if Trump comes through with all of his tariff actions against our country. The last thing that the consumer needs is an added squeeze on their incomes from tariff action.
How many jobs did you say, David? Sorry.
400,000. And that would take the unemployment rate up towards 8%. I would actually engage in trade action, but where it hurts. I said before on BNN last week at a different interview, I said, when the bully in the schoolyard punches you in the eye, you don't punch back, you go burn down his house, okay? So we're trying to get into a fight with the bully in the schoolyard. No. And tariffs, tit-for-tat tariffs, not the answer. And you look at me like, what's he talking about? Well, you do it strategically through either export bans or export taxes. Let them pay. Why should consumers here pay back because we're going to retaliate on tariffs? Now, we need the U.S. We know that. We ship 20% of our GDP south of the border. But the U.S. also needs us strategically, especially for critical minerals. Where are they going to get their potash? Where are they going to get their uranium, their nickel, their aluminum, their electricity? Like, I thought that Doug Ford was on the right track with the export tax on electricity. Then he pulled back. Why? Because he's going to get a phone call from Howard Lutnick. Look, you can't believe a word that the White House is saying. Okay, you brought up at the beginning of the show about the USMCA. Donald Trump signed that in 2018. And at the time he boasted that it was the best trade deal anybody has ever signed, and now he's abrogating it. And of course, the goalposts are shifting all the time. You cannot believe a word coming out of the White House. So I don't even believe we should be negotiating anything with the White House. Let him raise his tariffs. He's going to dig his own hole because there's going to be an inflation backlash in the United States, and consumers are not really prepared for it. At least in Canada, I'd say. Canadians are braced for very tough times ahead. Americans did not vote last November for, quotes, pain or disturbance or whatever it is Donald Trump calls it. They're not prepared for any pain at all. I think that we're prepared for it. And so the point I'm making is that we should be strategic. And I'm talking about not tariffs. Let them pay export taxes on stuff that is critical to their industry, or outright export bans.
What about oil, David? 4 million barrels a day, roughly, we sell to them. Would you put an export tax on crude?
No, well, that's more problematic. But why are we offering a discount on our heavy oil into the U.S.? Maybe we should consider removing the discount on oil into the U.S. I might carve out oil, and of course...
Why is that? Because it's so vital?
Well, what are you going to do with the oil that we're not going to export into the United States? What are we going to do with that? Where's it going to go? But there's other things that the U.S. needs. Now,
potash is a biggie. Yeah.
Well, yeah, where are they going to get that from? Ukraine, all of a sudden? So they need that to grow their crops. There's things we could do that will hurt the U.S. There's really nothing we could do that's going to make it as bad as it is here.
Yeah.
But Americans did not vote in November for any pain whatsoever, and we could make them actually feel at least a little bit of pain. The other part is, look what's the Europe doing right now, the EU? They're trying to find endogenous ways to grow their economy. Germany is finally getting rid of the fiscal constraints. They're going to embark on fiscal stimulus that's going to boost military spending out of necessity. Not just that, but also infrastructure. India right now is embarking on plans to dramatically reduce their dependence on foreign energy, pipeline expansion, oil and gas expansion in India. You look around the world, and countries are trying to find a way to wean themselves off their dependence, especially on the United States. Okay, that's necessity. The question is, what are we doing endogenously? We're just hitting back Donald Trump insult for insult. It's not going to do anything for us. Tariff for tariff. That's not going to help our country. I said, okay, selective export taxes, export bans on stuff they need. Okay, that's going to wake up quite a few people.
What about aluminum? Would you?
Yes, that's what I'm talking about.
Whoa, that would be.
We have to look. I said you got to
aggressive. An export ban on aluminum.
We are in. Look, we are in an economic war. We're in an economic war right now, not a military war, an economic war. Okay, so you don't bring a butter knife to a gunfight. So that's basically what we have to do. We have to hit back hard. One thing, we have two advantages in Canada, okay? One of them is the Bank of Canada. The Bank of Canada should be cutting rates a lot more aggressively, weakening the Canadian dollar a lot more aggressively. I know that Tiff Macklem comes on and says, well, monetary policy is not actually an effective antidote against a trade war, but we are going to need the interest rate relief, and we're going to need a weaker Canadian dollar. So the Bank of Canada can do what the Fed can't do, because the Fed right now is hamstrung. They have more an inflation problem than we do. They have a 4% unemployment rate. We're closer to 7%. We have more spare capacity. The Bank of Canada has got more latitude to use monetary policy. Point number one. What about fiscal policy? And all I heard at the Liberal convention was all about Donald Trump. Donald Trump this, Donald Trump that. Where is our domestic fiscal strategy? We haven't had a government. We still don't have a government. So we're just talking about tit-for-tat tariffs. Where is our endogenous fiscal policy to help cushion the blow?
You want to see a stimulus package along the lines of COVID?
Not spending, okay? Big tax cuts, okay? Big tax cuts. One of the largest mistakes that the Trudeau government made was after 2017, when Trump cut the top corporate tax rate to 21%, we did nothing. and it's stuck. The effective tax rate with provincial abatements sits at 28%. Why do you think we're seeing relentless capital outflows out of this country? We are tax uncompetitive. And all I'm hearing again coming out of the convention is we are the party for the people. We're the party of the people. But what is the business sector? The business sector is made up of people. People own these businesses, they manage these businesses, and we are uncompetitive. We have to actually right now get aggressive. We have to bring our corporate tax rates not just to U.S. levels, but below U.S. levels. I would even recommend that we eliminate capital gains taxes. We have to stimulate what's been lacking in this country for the past decade, Andy, which is business formation and stemming. Do you know, we talk about net capital outflows, net direct investment outflows out of Canada. The problem has not been capital coming into Canada, okay? The problem has been in the past 10 years, $1 trillion of Canadian physical capital, direct investment, $1 trillion in 10 years has left the country. So what are we going to, we have the room. You know, everybody belly aches about the fiscal side. We actually have one of the strongest fiscal positions in the OECD. The deficit is, God forbid, 1.5% of GDP. Where is all this belly aching and angst and anxiety over the Canadian federal balance sheet? 1.5% deficit GDP. Where is it in the U.S.? It's north of 6%.
Are you serious?
They can't even.
Wow.
Look, they have a debt to GDP ratio of 100%. In Canada, even with the provinces, it's 80, but the federal government debt ratio is barely more than 40%. People don't realize that our federal fiscal finances are in better shape than Germany. And look what Germany is doing. Now, they're doing it on the spending side. We have to dramatically cut taxes. Okay, we go back to 1984. Brian Mulroney, you brought that up at the beginning. What did he get elected on? Deregulation, which we have to do as well, and tax reform.
And he brought in a sales tax. That was a big
That
move.
was like way at the end of his tenure. We're talking about 1984, not 1989 and 1990. And that replaced the manufactured sales tax. That was actually, the Liberals campaigned in 1993 to get rid of the GST.
I never did.
Yeah, really. So in any event, we should be talking right now, okay, not about name calling with Trump, okay, that's not going to get us anywhere. Tit for tat tariffs is so uncreative and unimaginative, and it's not going to help out the Canadian household. I think that we have to actually right away convene Parliament, emergency session, and embark on a major tax cut. Now, I'm talking about a major tax cut for the business sector. Oh, people say, oh, well, the business sector. What a right-wing nutbar Rosenberg is. The business sector. The business sector in this country employs 2/3 of the people in the workforce.
Let me ask you something here, because you put something in my head. Ireland did very well with essentially zero tax for foreign companies. Do you think Canada should think about something like that?
Absolutely. Absolutely. What I'm talking about is what they should have done back in 2017, 2018. We never should have let our tax gap in the business sector. Oh, there's that word again, businesses. I mean, I get this all the time, you know, but I guess it doesn't play in Peoria. You got to talk about the people. I keep on telling, you know, that 2/3 of the people are employed by the business sector. And we have to prevent what's going to happen if we don't embark on a massive tax cut campaign. And it's going to be advertised so that people understand how important it's going to be to prevent capital flight out of the country with these tariff increases. And this attempt by Trump is to relocate production in the United States. We could fight back with fiscal policy. They can't, in the United States, you see what's happening in Congress, they can't even get their stopgap funding measure through, okay? But if we either get a minority government, and Liberals and Conservatives can agree on this, or we get a majority government. So we have to think right away, because we can't do it on spending. The lags are too long. But tax cuts will be felt right away.
News when you want it with Bloomberg News Now. I'm Amy Morris. Boeing shares are 4% higher after word it beat out Lockheed for the next-gen fighter jet contract. President Trump announced the deal.
After a rigorous and thorough competition between some of America's top aerospace companies, the Air Force is going to be awarding the contract for the next generation air dominance platform to Boeing.
Now, that program aims to develop a new fighter jet that will operate with drones and replace the F-22 Raptor. The Air Force plans to spend up to $20 billion on research and development. The new fighter jet is expected to enter service in the 2030s. Europe's busiest airport is shut down, and officials do not know when it will reopen. A substation fire has forced London's Heathrow Airport to close for at least the day, but now officials are saying it could be longer. The UK Metropolitan Police said its counter-terrorism command is leading the probe, given the location of the substation and the impact it had on critical national infrastructure. Bloomberg's Benedict Camel reports it's not scheduled to reopen until at least midnight London time.
Usually a disruption on this scale leads to, several days, if not into next week, of disruptions, because you'll have aircraft out of position, you'll have crew out of position. So this is not just today. This is something that will stay with the airport for the next couple of days.
Bloomberg's Benedict Camel reports air traffic control issues have forced airport outages in the UK before, but they usually only last a few hours. Earlier this week, the Trump administration fired 2 members of the Federal Trade Commission, both Democrats. Now, one of those fired, former FTC Commissioner Rebecca Kelly Slaughter, tells Bloomberg you can draw an equivalence between the FTC and the Federal Reserve.
To be clear, there's no legal difference between Jerome Powell and me. In fact, he and I were both originally appointed by President Trump around the same time in early 2018. And if the president can legally remove me, he can legally remove Jerome Powell.
You can hear the full interview with former FTC Commissioner Rebecca Kelly Slaughter on Bloomberg's Balance of Power. And President Trump says the Small Business Administration, rather than the Department of Education, will handle all student loans from now on. Trump also says the Department of Health and Human Services will handle nutrition programs and special needs programs for students. Stocks continue their slide. The S&P on track for its 5th week of declines in a row. We do check markets for you all day long here at Bloomberg. The S&P now down 0.8%, NASDAQ down 0.7%, the Dow down 0.7%, the 10-year Treasury yield at 4.22%, the 2-year yield at 3.92%. Shares of Tesla are now about 2% higher. That company's shares have plummeted more than 50% in just 3 months. Elon Musk held an all-hands meeting to encourage employees to, quote, hang on to your stock, as he spoke to the backlash that Tesla is facing.
If you read the news, it feels like, Armageddon. I can't walk past the TV without seeing a Tesla on fire. Some people, it's like, listen, I understand if you don't want to buy our product, but you don't have to burn it down. That's a bit unreasonable.
Musk repeated his claim that Teslas will soon be capable of driving autonomously with a software update. Nike's shares are 5.5% lower, erasing $9 billion in value. That company predicted further declines in revenue and profitability in the current quarter because of an ongoing merchandise reset and newly implemented tariffs on imports from China and Mexico. FedEx shares are more than 9% lower after that company lowered its full-year guidance for the 3rd consecutive quarter. FedEx's latest outlook assumes the global economic, political, and trade environment won't get any worse. And we're hearing from Fed officials. New York Fed President John Williams says the Fed's current monetary policy stance is appropriate and puts the central bank in a good position to respond to changing conditions.
The U.S. economy has entered the new year on firm footing. GDP and job growth have been solid, propelled by robust gains in the labor force and productivity.
Williams expects growth to moderate this year because of reduced migration. He sees a slowdown in labor force expansion. Fed officials revised up their estimates for inflation this year while downgrading their forecasts for growth. Chicago Fed President Austin Goolsbee says the impact of tariffs could be transitory inflation, but only if the tariffs are limited in scope and not followed by retaliation. Goolsbee expects interest rates to come down in the next 12 to 18 months if inflation continues to cool. That's news when you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
Control and monitoring technology with Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
I think what's really interesting right now is that you see much of the rest of the world continuing with something that looks, fairly familiar to those of us who would have been looking at some of these dynamics a decade or two ago. So you see, Europeans, for example, continuing to look at new kinds of trade relationships, both with each other and beyond. I think you'll see interesting dynamics between Europe and China, for example. Europe had made, a pretty hard turn against China and sees real economic threat, but at a moment when it doesn't have a lot of options, I think you'll see more activity between Europe and the Chinese, or Europe and parts of the global South. And certainly in Asia, they're still very, very committed to something that looks a lot like, old school globalism. So I think what could happen is it'll become, in some ways more fractured. You won't have this sense of a true kind of global trading system, but you'll have lots of regional systems. And then you'll have parts of the world without the US that will continue to move forward. I think the administration thinks that we have the economic leverage, the economic might to avoid paying real costs for that. I think we'll see in time whether, the US feels left out of something that is bringing benefits and bringing power to other countries, especially China.
And Dan, another hallmark of the Trump administration has been a greater sense of nationalism, maybe at the expense of globalism, and pulling back from some of the traditional relationships, whether it be NATO or just our support and how we view Europe, much less our trading partners, Canada and Mexico. Do you believe that would outlast the Trump administration in the sense that let's just focus on ourselves here?
Well, you do see it's not so much a turn inward, but a real interest in making deals with other strongmen. So you see Trump much more interested in this kind of great power diplomacy with Putin or with Xi Jinping or with, Narendra Modi or other kind of strong leaders that he sees as able to really do business with him, really make deals, while he's beating up on allies and really using leverage on allies. So that's, I think, a pretty different vision of the global system than we've seen in a long time. There are a couple great pieces in the issue that Tom mentioned that try to make sense of this.
Daniel, I could go all day about Foreign Affairs Magazine, but because of your expertise in China, I've got to ask. Folks, the book is The China Mission. It won every award of 2018. Daniel Kurtz-Phelan on George Marshall, dragged out of retirement. General Marshall, just shut up and go to China and fix it for us, which, of course, George Marshall attempted to do. How do we repair a China-U.S. relationship, or is it forever on a bipartisan basis fractured?
It's a great question, and it's been one of the really fascinating things to watch in the first couple of months of the Trump administration. It was really during Trump 1 that you saw that bipartisan consensus, that hard line on China start to form, and Trump was, of course, one of the big drivers of that. What we've seen in the past couple of months is signals that he may take a very, very different approach this time. And I think the Chinese government is really kind of waiting to see what that looks like and starting to develop options for what a kind of a real deal might look like. I think I'm skeptical that you could really get a kind of grand bargain between the U.S. and China that would wipe away all the really complicated issues, not just about trade and technology and fentanyl, but also about Taiwan and the South China Sea and all the potential crises in the relationship. So I think you saw in the last part of the Biden administration an attempt to at least create some stability in the relationship. Right. It's not a return to anything that we would have seen a while ago, but to at least prevent it from really going off the rails in ways that it seemed like it might for portions of the last few years.
Markets never sleep, and neither does Interactive Brokers.
Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
Let me first ask about your supply chain. You know, how much of it was in China, and outside the U.S. previously, and how much are you producing here in America now?
Yeah, great to be with you. So about 60% of our business is sold in the U.S., 40% is sold outside the U.S. The majority of our U.S. business is manufactured in the U.S. We have 15 manufacturing plants in the U.S. That are new manufacturing plants producing products here. Outside the U.S., the biggest country that we were sourcing from previously was China. It represented at its peak several years ago about 30% of our global cost of goods sold. Today, that number is down close to 15%, and by the end of this year, it should be down to about 10%. So we are exposed in some of our product categories to China imports, but the majority of our U.S. business is made in the USA, and we believe that's a big advantage for us.
You know, in addition to the questions around China, more importantly, perhaps because of the uncertainty and the near-term uncertainty, is also Mexico. You recently told investors that roughly 5% of your cost of goods sold were from Mexico. And so what kind of uncertainty do you see among the North American agreements that are in place, and how investors should be thinking about how you move forward in the middle of that uncertainty, or how you navigate it?
Yeah, it's a very dynamic environment. We obviously are paying very close attention to the trade and tariff policy coming out of the administration. We have two manufacturing plants in Mexico. One is a blender plant that largely supplies Latin America, would not be subject to U.S. tariffs, but they have a small amount of business that comes from that blender plant into the U.S. that would be subject to tariffs. We also have a small volume writing plant in Mexicali. Our biggest writing plant with the high velocity items is in Maryville, Tennessee. And so we have flexibility to move manufacturing a little bit over time. And we are evaluating the situation, and I think we are well positioned to respond dynamically.
Chris, as somebody who's made the changes earlier on to bring more manufacturing onshore, to make sure that reliance is not entirely on China, what can you tell other CEOs? What do you tell investors about that process? Has it been enormously expensive? Does it mean that you've had to stomach higher costs of production? What should people know?
Yeah, I think a couple of things. So first of all, since the 2017 Tax Cut and Jobs Act, we've invested close to $2 billion in U.S. manufacturing as a company. So we have invested in our U.S. manufacturing plants. And importantly, we've invested in automating our manufacturing plants so that today our 15 manufacturing plants are highly automated, and we believe they are cost competitive on a fair trade basis with any plants that are producing these products anywhere in the world. So we think the U.S. can be a great place to build manufacturing plants, to be cost competitive, and to supply the U.S. market.
I'm looking at your stock, Chris, and I always take a look at company stock over 5 years. It's just a sort of default setting with the comp function on the Bloomberg, and I think it's a pretty fair representation of what's going on. It's down 42%. What are investors not understanding about this story, or why have they sold off this stock?
Yeah, so I became the CEO in May of 2023. And when I became the CEO, I looked at that same chart and I declared the company a turnaround. And we went through a very diligent process to look at the capabilities that were required to win in this industry. That led us to coming out with a new strategy, which we publicly announced in June of 2023. We've been implementing and operating against that new strategy now for close to 2 years, and the strategy is working. So if you look at our results in 2024, for example, we improved our rate of core sales growth on every single business. We grew our gross margin in 2024 by 460 basis points. We significantly generated cash flow and delevered the balance sheet, but there's still more work to do. I think more recently, the stock has taken a little bit of a downturn because people are worried about our ability to navigate the trade and tariff dynamic. I believe there's going to be opportunities for us to be beneficiaries in our U.S. manufactured goods. And there's and of course, we're going to respond appropriately to the goods that we are sourcing from outside the U.S.
Chris,
so
there's one of your products actually that has been playing a very key role. The president has been using a Sharpie to sign those executive orders. It has really taken on a personality of its own, this black Sharpie. So have people been buying more Sharpies? I'm wondering if that's had any impact on the notice of the brand.
Yes, Sharpie is one of our largest brands. It's a great brand. We returned the brand to growth, and so Sharpie has been growing the last couple of years. It, of course, is known for being a permanent marker, and it has a dominant market share. It's all made in Tennessee, and we've extended the brand into gel pens and most recently into creative markers. And so we think Sharpie is a beloved brand that has significant growth opportunity as we better understand consumer needs and innovate with new products that delight consumers.